all of you for joining us virtually today. Well, my name is Bhavna Bhatia and I'll be your host for today. I'm honored to kickstart the day two of the prestigious BW Festival of Fintech 2021 in association with BW Disrupt, the inaugural event which exclusively tracks all the aspects and conversations of fintech in India and worldwide. Well, launched 4 decades ago, BW Businessworld today is a fortnightly magazine that has come to be renowned amongst India's largest and most respected business magazines. BW Businessworld, led by Dr. Anurag Batra, Chairman and Editor-in-Chief, is the fastest growing business media house in India. With a thought leadership bent in the domain and network spanning across 15 niche business communities and 8 magazines, BW Businessworld is proud to be entrenched in various verticals in the domestic as well as the global business ecosystem. Well, we also curate and conduct close to 100 of our own IP events throughout the year in a focused attempt to keep our communities meaningfully engaged with each other and our rapidly growing customer base, consumer base across the industries. While BW Festival of Fintech brings together all the facets of leadership in innovation driven by the fintech that contributes to the sustainable economic development at scale. The innovation landscape is a living showcase of bringing clarity and progress with a seemingly chaotic and confusing environment. The fintech industry is instrumental in catalyzing the overall innovation ecosystem to solve real problems and make meaningful impact in unique ways, embracing the diversity of needs and challenges across the subcontinent. Fintech is not only about finance and information technology, but it is a complete paradigm shift of methodology. Well, the day's events will be enlived by a series of panel discussions that will inform us on various topics that will cover creating reliable lending infrastructure for personal and business finance, future innovations in payment gateways and enabler for business, cryptocurrency, and blockchain fintech infrastructure and initiatives, and many more. Well, ladies and gentlemen, I'd also like to thank our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. While we're also going live on BW Business World's social media handles on YouTube, LinkedIn, Twitter, and Facebook, so join us in all our conversation. Well, to begin the day's proceedings, may I now request the event AV to be played. Could we have the AV, please? So, ladies and gentlemen, well, that was all about the event, and it is going to be a great day of conversations and learning. Well, now with this, if I may please invite on the stage and screen Dr. Anurag Batra, Chairman and Editor-in-Chief, BW Business World and Exchange for Media Group, to say a few words. Over to you, Dr. Batra.
Thank you, Bhavna. Good morning. Welcome to all of you. We are in love with fintech. That's why we are celebrating it on the one day before the Valentine's Day. So I would say Happy Fintech Day before you say Happy Valentine's Day. But fintech is a domain that is growing exponentially. It is making an impact on the lives of people. As e-commerce grows, as the number of people that financial services need to touch in both urban India and in rural India, the fintech revolution is going to grow on the back of Bharat. And most importantly, we are still a very underserved country. So clearly, fintech is a tool that is helping us to serve more and more people, and in one click. As I said, the e-commerce revolution in the last 20 years in America grew on two words, which was called free shipping. Fintech will grow on one click. These are the two words that will kind of help fintech grow. Yesterday we had leaders. This is the inaugural edition. Second day we had the leaders of fintech talking about various aspects of fintech. Today we have a power pack day, and in the evening at 6:30 we have the inaugural edition of the Fintech Awards. So I would only say that we would, as an editorial product, like to track this sector very aggressively, and these 2 days are a testament to that. Today we have a exciting lineup. I'm going to be in a conversation with Mr. Sharat soon, and throughout the day we have right from the complete ecosystem of fintech talking to you. So all the best. Look forward to more interactions with you. Enjoy the festival of fintech. Back to you, Bhavna.
Thank you so much, Dr. Anurag Batra. Well, absolutely giving the entire context and the vision ahead. Well, ladies and gentlemen, after this, it is now time to delve into the first fireside chat of the day between Mr. Srinath Sridharan, independent market commentator and a member of the Governing Council, Fintech Association for Consumer Empowerment, and Dr. Anurag Batra, Chairman and Editor-in-Chief, BW Businessworld. Well, may I now request Mr. Sridharan and Dr. Batra to join us on the stage and screen. Over to you, gentlemen. Thank you for joining.
Thank you, Srinath. He's here, I'm sure.
Morning, Anurag.
How are you? Good to see you. Srinath, first of all, it's been almost 11 months since COVID. How has it changed how has COVID changed the professional financial services domain? How is it overall markets? We know the markets are an all-time high. 2 crore new investors have been added to the market. We know that the top lines of a lot of corporations may have shrunk, but for a lot of corporations, the bottom lines have become better. We also know that the Indian consumer has saved a lot because he or she has only done essential expenditure. So give us a sense of what has changed and what has stayed the same.
So I think very, very importantly, the COVID lockdown has kind of removed the digital barrier. I mean, with a vengeance, the market, whether it's India or Bharat, has embraced digital. And if you look at on the supply side, which is all the banks, the financial institutions, which were catering to those customers who were probably, some of them were struggling to get onto the digital projects, today don't have a choice. I mean, there is no more parda to hide behind saying that I've not got board approval, I've not got capex, I'm not able to do it. Today, the consumers demand digital access, and which is what we are celebrating in this festival, right? The FinTech Festival is all about celebrating access to digital. And I think the genesis much before COVID was the India stack. India moved on to the Jam Trinity with Jandan, Aadhaar, and mobile. These have been a very, very powerful backbone that India has got in the last few years. And if we can say that we have almost become geoification of India. Almost everybody has an handset. Almost everybody has access to digital, and with also government initiative of putting public Wi-Fi all across. So what has COVID done? COVID has been a great catalyst to one, shed cost, to shed the traditional, I think the overhang that we had as conventional financial institutions. And if I were to simplify it further, FinTech, what is FinTech? FinTech has been marrying technology to break barriers and mental blocks. And we are also making it very, very simpler to be regulated. More important in the financial services business, you have to be regulated, and going digital allows you to have an audit trail, which the conventional financial services institutions could not have, and it was not easy to supervise. And as you rightly said, I heard your opening remarks. So we have been speaking about the underpenetrated market bank. I mean, how many decades of boring presentations we would have given as an industry saying that India is underpenetrated market, India is underserved market, underbanked market. Thank God, I think we have digital and we can move that needle quicker. Probably the next 2 decades, I believe this is the decade of India globally. The next 2 decades can have a far meaningful financial impact on our markets.
Thank you, Srinath. Now, let me ask you, again, FinTech is a very broad term, right? It includes myriad players. It includes various needs being served by fintech players. If you had to kind of put a context to the kind of niches available, the kind of sweet spot available, give us a sense of what's happening in it. So there are fintech players that are solving, um, you know, very simple problem of, consuming, connecting the merchants to consumers and to a bank, but there may be no money or very little money there. So they've used that to acquire customers and then serve some other needs. There are fintech players only in the education segment. There are fintech players that are focused on, very specific niches. Give us a sense of what these niches are and which are these sectors and subsectors you see growing in the next few years.
Sure. I think I'll oversimplify it here, Anurag. As a consumer, what do we need? We have typically three financial needs whenever we look out in the market. When I say consumers, I'm talking about average individual. I'm not talking about institutions. We want to borrow for a reason. We have some surplus money. We want to invest it, and we want to protect ourselves, our health, our family, our property, buy a car, whatever. And financial services actually established around the similar lines of what I call LIP. L for lending. All the lending institutions come under RBI. I for investments, they come under SEBI. P for protection, which is what insurance is supposed to be. I have a very, very strong view that insurance industry should be all about protection and not about investments. And we've had some spat in the market a couple of years ago on that. So I think very, very clearly, even the regulatory landscape is clear. How do we safeguard consumer interest for anything that they borrow, anything that they invest, and anything that they invest into or protect themselves? So if you look at the fintech space, all of them, fintech again, I think we must be very, very clear, is also regulated. Most of the large fintech players are backed by solid, high credibility investors, be it HNIs, individuals, institutions, or funds. What does it mean? It means a great amount of comfort because you're trusting a lot of your data with those platforms. And we will have to demystify that fintech players are not just sheer fly-by-night operators or platforms. They are here to stay. They're regulated. In the lending space, most of them own their own NBFCs, which are licensed. In the insurance space, they're solving a problem. So what does it mean if I were to say lending, investment, and protection? It means any platform in the fintech space is one, communicating with the customer and aggregating them. They're creating their own community if they're a platform. Two, they're giving you product choices and services. Now, to me, that is very, very important because we have been speaking the mantra called financial inclusion. Any inclusion is nothing but giving consumers choice. And India is a market where we also have to give them liberty to reject those choices if need be. Let's say most of us on this conference today will be chased by enough people to get the fourth or the fifth credit card or the sixth bank account or a wealth management account. Let's for a moment go 100 kilometers outside of our cities that we live in, and do those consumers have choices? And I'm a firm believer that fintech will make those choices happen for only one reason: amount of data that you can collate about those consumers and their behavior and understand the risks that you undertake. Finance is nothing but pricing the risk. And we have kind of overcomplicated it by using jargons. We'll have to simply say that we price the risk better. And my belief is fintech will be able to do that.
Okay, Srinath. Now, I want to take one context. I moderated two panels. I was speaking to two leading players, two sets of leading players. And one of the things that, I asked them, what could be the multiplier? What could be the game changer? What could be the innovation? And both of them were talking about the application of blockchain. And application of blockchain is cryptocurrency, right? And I said the only problem is that the central banks and the government may want to control. And you saw that there is now a fear of a legislation being brought where the central bank will have its own cryptocurrency. Now, tell us, how do you see this development?
See, I think one of the challenge or the objective of regulators in a market like India, if I were to generalize and compare it with other regulators, is to protect the interest of the common man. And here I use the word common man with almost alluding to the lowest common denominator possible in terms of economics. And that is one of the regulatory handle that they have. So which means it may not be necessarily at the cost of development most of the time, but at some point in time like this, you would also have challenges where they would say, what if a common man were to be impacted? And that dilemma we will have to face. And in crypto, for example, we are actually confusing.
And if I may just say that the government also wants to err on the side of caution, that the consumer, the investor shouldn't be, taken for a ride. So it wants to be safe. So there is also a good intent, right?
There's absolutely a good intent, absolutely an inclusive intent, but there are other ways of making this happen precautionarily. My belief is sometimes by simply increasing the threshold of investments or the money is being played, you might actually segregate the low income group, the middle income group, and the HNIs very, very easily. These are very, very easily doable today with available technology, not just with fintech, but also with the conventional financing institutions. If you look at what is the concept of Aadhaar done, and if we use, let's say we're all talking about only blockchain and cryptos, one of the most powerful data format that not many people have given credit to RBI, it has been using it for years, is the format of XBRL. And if, let's say, all the financial services institutions and regulators follow the same format, which means supervision becomes easier, proactive supervision, and flagging off of any alerts can be almost real time, if not even before, using trend analysis. So I think we are challenged because we have multiple regulators, and a lot of times we just play that inclusive card, and we forget that there is one sect of community which has surplus money. If you don't allow them to invest here, they're going to find other geographies to go. We truly are in a global village, to use the old phrase. So if you stop an Indian from investing in India, today you can probably get a visa or a work permit or residency permit to move somewhere. And we will also see flight of capital, not just about brain power, unfortunately. And which is why I always...
And Srinath, the big question is what happens to the existing investors in those cryptocurrencies, which runs into lakhs, more than 75 lakh investors?
See, there are only a couple of things possible logically. One is you ban and whoever has invested gets hurt. The other conversation that we've been hearing the last couple of days is there could be some kind of grandfathering allowed, which means you might be given a reprieve in terms of time limit by which you will have to book your trades and get out of those. But again, more importantly, going back to the fundamental question, this policy yo-yo at some point in time has to be addressed. 2 years ago, it was banned. I mean, about 2.5, 3 years ago, it was banned. Then the Supreme Court opened it up last year. And again, we are moving to ban it. And there's a fundamental difference. You have something called blockchain, which is the foundation for this. And crypto is one of the products. And you're saying, I want one and I don't want the other. And you're also forgetting that there are also private cryptos, which is closed user cryptos. And there are also publicly traded cryptos, which is almost like your digital fiat. And we will have to get down to this. Is there expertise available in the country? Yes. Is there those expertise available within the regulators? Yes and no. And I think it's time that we relook at this. The new age is, the reality is the digital fiats. There are countries which will issue its own crypto, and that's a reality. But again, the point is, what is the underlying asset? And I can understand the regulatory framework. On what basis is it mined and what basis is it pegged at? Is there a fallback mechanism? And I understand. But the bigger challenge is, is our regulator, do we have an economy which is digitally fully integrated that we can actually track this? I have my question.
Okay, Srinath. Now let's move into the future of fintech. Now, again, India is possibly in a space where in the fintech sector, we can say we have leapfrogged. We're ahead of others in the way we are doing things. Normally we follow America in technology, in service-oriented concepts. But we can genuinely say in the fintech sector, we are leading the world, both in terms of numbers because of the kind of population we are impacting and in terms of, ideas, offerings, and business models around them. Now, if you had to, in your experience, give us examples of course, I'm not leading you, but NPCI is a big game changer, and that's where it shows that, Aadhaar is a big game changer, right? Bureaucrats and policymakers can make a positive impact and create a base for everyone to kind of grow on that. But in your view, give us examples of as many disruptions or innovations that you think will create a huge impact of companies, of ideas, of kind of offerings?
See, I think when we talk about disruption, NPC, I mean, first of all, Aadhaar, it took us many years of political opposition, yo-yos finally to come through. And today we are leveraging it brilliantly well. The very fact that if I bring that integrated to the mainstream financial services, it has disrupted the way we think, the way we bank. Uh, I mean, I don't know if anybody has done a survey of millennials and Generation Z. How many of them have actually gone to a building or a branch called bank? I don't think so. The fact is, everything is available on the phone. And one of the other data point that we should remember is while we all speak about literacy and financial literacy, India is more keypad literate than literate. I think that's the biggest disruption. The mobile, the smartphone available at cheaper cost, to me, is the biggest disruption that India has had. And I think that's an advantage that we're using. I know of enough cases where somebody does not understand how to type, but they do a voice record and send it across, which means the communication happens. Will fintechs use these? Of course, yes. I think today we have enough AI, ML platforms which are able to convert voice to text to voice, and use it for decisioning. And I think these are the points that they will end up using. Going back, are there been disruptions? To me, again, UPI was a big disruption. Of course, the jury is still out saying that if actually the banks themselves came to set up NPCI, why is that regime being dismantled to bring private competition into that space? I mean, I think the jury is clearly out, and I have my own personal view on that, which is very different. So if you are building something which is for the common good, and if you're almost like an open source opening out for others to use, can you build more?
And there's a level playing platform for every player. It's equal access. It's the same thing available. Now it's your ideas and your business model on top of it.
Correct.
And in most cases, Srinath, when we were talking to players yesterday, they're dealing with the same set of customers. They have the same data points. What can they do with those customers, and what can they serve them innovatively and do innovation in the business model that will help them build a business around it is the key. So, they're playing with the same set of consumers. Go on.
So I think very interesting, right? I mean, India is one place where everything we have always fought with 1:75 for every rupee to a dollar. And is that going to change in the short term? No. Which means frugal innovation, which means your cost structure. But the advantage that India has is plethora of volume of population. We are not only 1/6 of the world's population, but we don't have 1/6 of the world's wealth. So if I were to be very pragmatic for fintech platforms, what do we have? We have two things. One, we are an investable market, which means investors globally want to invest money into the country. Other is we are a consumer market with so many people. They want to be here, they want to partner, they want to do something to actually address the market. Cost is going to be very critical. Of course, I see in the last 2-3 years, even without the COVID, there have been cost structures which have been increasing even in fintech players, and I think that has to stop. That has to stop because...
And cost, if you're talking about the cost of acquisition of the customer.
Cost of acquisition of the customer, cost of the payroll of the fintech platforms, cost structures within the fintech platforms, they will have to think very differently from the established players. Just because you're been well funded or you're getting into the unicorn status, you will have to still think frugal. I mean, you can't just jump saying that, valuation is a number, it's an emotional number. As long as...
It's vanity. It can be vanity. It can be real, and it can be vanity.
It is vanity because without cash flows, without profits, at some point in time, let's say if there is some other global crisis or the money flows into the country, moves to some other market, what happens to you? Do you stop serving a consumer or do you rejig your model? So it's better to be very frugal. I know of lots of founders who have, despite 5-6 years of building a successful company, are far more frugal than they were ever before. And I think that's what is making Indian fintech so much robust and strong.
Fantastic. Now, yesterday I asked some of the players, but if you are growing, then you're clearly eating someone's lunch. So is it the bank's lunch you're eating? Whose lunch you're eating? And they said, no, we're growing the market, which is also true. But at some stage, do you think banks will catch up? They also mentioned, in which we can see, he said the banks as they exist today may not exist 5-10 years from now. And also your neighborhood grocer, your car may become your bank, just to exaggerate a point. So tell me, whose lunch are the fintech companies eating?
See, it's like this, right? I mean, if you have a simple a la carte menu, fixed lunch, your quantity is limited. But if you're on a buffet, you are actually expanding what you conventionally usually eat, and you're eating slightly more. Fintechs are doing a combination of both. Whose lunch would they take at the cost of sounding, let's say, like an irritant to the established conventional brick and mortar financial institution? I would say fintechs are going to eat their lunch. Even if those institutions have the ability to fund digital thinking, I have this proposition. The demographic dividend in India will grow and solve consumer issues with new thinking that fintech entrepreneurs or any entrepreneur, the tech entrepreneurs or the startup community in India is doing in the last few years. What if, I'm surprised that the conventional BFSI players are not thinking this. What if they themselves, the way they are structured, the way their processes and their thinking is the actual issue for the consumer? You want to address something, it goes through layers and layers because they have 300 branches. Whereas in fintech, you crash all those boundaries and say, can I figure out the quickest way to solve it? So I think it is going to be at the cost of the conventional player. But having said that, let's say the top five in each of these players, each of these markets, be it insurance, asset management, wealth management, banking, lending, will figure out a way to partner. And from a very, very long-term perspective, I sometimes shudder to think about the concepts of, let's say, the co-lending model. If both brands are predators wanting the same customer, at some point, somebody is going to chew the other one alive. I mean, I think that co-lending model concepts like that sounds nice today, but somebody is going to learn more about the other partner than the other one. And I think those practices will stop. So it is going to be at the cost of something, and which is why my request from fintechs would be very, very frugal at your cost. At the same time, keep disrupting yourself faster than a competition can disrupt you, which means learn from the consumer every single day. Consumers, let's face it, as a market, we've been starved for choices. If we get choices like we would get now, I don't need to be loyal. I'm going to experiment. I'm going to be what I use the word as not disloyal, but unloyal, which means I'm not being disloyal to you, but I want to try something else. And in that game, it costs money, it costs time. Fintechs should be able to learn much faster than the consumer.
Okay. Now, Sheena, let me move into the policy framework, the risk associated in fintech. We talked about crypto and blockchain, and of course, the government wants to safeguard interest of the investors and be cautious, because if there is a gold rush, it does attract sometimes not the right kind of players who may not have a long-term intent. And we saw what happened with some subprime lenders. They came to India and so on and so forth. So government rightly takes cognizance and act. But what are the policy risk associated with the fintech sector? And to the credit of the government, I would say the government has done an outstanding.
See, I think there, just to give you before you get on with your sub-part 2 of the question, I see it as one. The last few years, each of the regulators in the financial services have come out with a very proactive sandbox approach in terms of experimenting with newer ideas, which is like almost containing the risks that it could contaminate the ecosystem. But again, if I hear the market players, the fintech entrepreneurs, I think we should probably expand the sandbox regulation itself and probably bring in a different set of expertise who will select the sandbox approach. It cannot be only from the regulatory lens. It also should be from the consumer and the technology space, which means that in any sandbox regulatory panel that the regulators put through or the government puts through, can you have technocrats? Can you have business folks? Can you have policymakers? Bring them all together. And almost like mentors, can you champion the cause of digital India? Don't just gate it saying, oh, if it doesn't meet this, I'm not going to allow this. I think that would be a proactive step that they could bring in. Can they do faster and better? I would think so. But again, the conventional step is they understand their own challenges and they have their own set of priorities which they have to do. Definitely in the last 5 to 7 years, digital India has grown phenomenally. If you'd asked me then, I would have said that fintech ecosystem, entrepreneur ecosystem would grow despite the regulations. But I think today they've proven very, very clearly that they're able to grow, take along the regulators. And sometimes I just feel if there had been a little younger voices on the other side of the table, and again here when I said the table, it is more a context of a circular table, not the rectangular table where it's one side, us versus them. It's about that. I think all policymakers, regulators, and the industry should say that we are seated in a circular table. There are no sides. All of us have a view, and we are all solving the same problem, which is how do we expand the consumer base. And I think that mindset change, I hope we get soon instead of us versus them. The consumers will benefit.
Fantastic. My last question to you is when you see the fintech industry in India, and I would say it's still at early stages, though we may have leapfrogged other markets. But if there were things that we could do better as individual private players, as a private sector, what would those be? You already mentioned efficient use of capital, that we should not be using all the capital to only acquire customers. So what do you think we can do from here on? And clearly there will be a shakeout. There will be a consolidation in the sector. So is capital the differentiator? There are players who are raising from $100 million to $500 million. What will be the differentiator going forward?
So I would use the word, we have spoken about this, and BW has also done this by celebrating entrepreneurships, right? This entire festival is about celebrating entrepreneurs from the fintech space. I would encourage what I would paraphrase as collaborative competition. You might be bitter competitors in the same sub-vertical of fintech, probably trying for the same set of consumers, overlapping consumer. But can you collaborate in learnings about your failures, not necessarily your specific to your culture? If you can collaborate and yet compete, I think the fintech ecosystem will be far, far, far richer than just cannibalizing it. And I think the investors at some point in time, there are quite a few large global investors who do that, where they invest in both the number one and the number two in the industry, and at some point in time try to merge them or find synergies. So I would think collaborative competition. And more importantly, can you figure out how to celebrate failures, almost like a buddy system? So that if you fail from something that is an industry knowledge, can you share with others so that the rest of the industry doesn't collapse?
Great. So you're saying collaborative. I keep saying, Srinath, we're in a collaborative economy, we're in a contactless economy, and we are in a compassionate economy. I keep calling it the 3C economy. So, because of what you said in terms of celebrating failure, of course, when you do product innovation, when you experiment with a business model, you are kind of, trying to search for that perfect, business model or the perfect product which solves the problems of the consumers. Now, my question to you is, as we go forward, give us your top 2-3 predictions that you see happening in the fintech sector. You've been part of large financial services company. You invested in startups. You've seen this ecosystem. You're part of the Fintech Association. So give us, going forward, what are the 2-3 changes you see happening?
So I think the way people look at finance, will it move overnight to digital finance, cryptos in the world, across the country? No. We'll have to understand, if you're going to live in India, and if you have to work with Indian consumers, there will always be different stratas of society, community. And I don't mean only from the socio-economic factor, but also the way they perceive money. It will be very, very different. So if you're a fintech player, be ready for change, be ready for daily change. It's almost like, can you update your business model very, very frequently, not just once in a year or once in a year. 2, I think very, very clearly, I see digital has multiple voices. When I say multiple voices, it comes from the consumer. You have a set of consumer. India is one of the largest base for what I call the GEMS economy, right? GEMS, the gig economy, M for millennials, and Z for the Generation Z. Each one of them are having an impact in the way we do business or the way we live as a society. So what does it mean for the fintech players? Can you address them? Each of them relate to products very differently. Each of them have their own need. Each of them have their own time convenience. So how are you going to customize to each strata of society? And yet at the same time, you will have non-digital natives like you and me, Anurag, who never, until we grew up, we never saw what the computer was. There was nothing called mobile phone when we grew up. And yet we have adopted to the digital world. There is a context to it. So fintech has to be very, very respectful towards this. And of course, today I see the differences between India and Bharat almost kind of merging with technology, and it will improve. And which is why I'm very, very bullish about the India stack. It has really brought India far, far, far closer. Today, it's very, very heartening to see during the COVID lockdown, families bond over video conference, families talk. I mean, they may not be literate at all. The fact is, it is brought.
Just to build on, yesterday there was a player, they said, we've done all our KYC through video very fast. So, you're talking about video KYC. Your KYC is very important.
So I think some of these trends will far, far, far merge. At the same time, we must understand that we are a global economy. So we cannot be very, very inward looking, saying India is this, India is that. Yes, India will be a very, very key player globally. But our economy, as we grow, I think fintech will contribute far larger to the GDP growth. I mean, why only look at $5 trillion by 2025? Why not look at $10 trillion by 2028? And I think fintech can get that access much faster, because I think the true financial inclusion is when you make it available for all. And I think that's what will be a game changer.
Fantastic. Srinath, you have been both a player and somebody who observes this sector. Now, if you had to make a prediction about let me use a larger context. GDP grows when banks lend, when there more money is put out, which creates more money, right? In very simple way, right? Now, in the last 11 months, one of the complaints have been that the banks have been very conservative, while whether it's government banks, as in the public sector banks, and there is a disincentive for lending. They want to be cautious, let's put it this way. Now, also, NBFCs weren't getting the money, right? It was not the most conducive environment for them to get money, right? So tell us, do you think are we turning the corner on that? Do you see us changing that? Because unless until that happens, 5 trillion economy, 10 trillion economy will only be concepts. They won't get into play.
See, I think it's known that almost a lot of economists have spoken about it in the past, right? I mean, the current size of the Indian formal banking sector, which is about 100 lakh crores, has to at least double when we have to get to the US $5 trillion economy, GDP. And I think, which means that we need more and more banks. And it's not about banks, right? Which is what I initially alluded to. Despite having banks, we've always been using the same, the sympathy pitch, as I call it. We are underbanked, we are underserved, we are underpenetrated. Can we say, why not bring in more players who have patient capital and who have a track record to start lending, to start, it could be insurance, it could be asset management, it could be all kinds of products. So to me, in a broad nutshell, we need to have very, very quickly more number of players in the financial services space, which is regulated. And which is why I think I'm very, very encouraged if we can get digital players onto the mainstream. Today, let's face it, Anurag, while we celebrate fintech, it is almost on the periphery. You're not treated as part of the old boys network. There definitely is an old boys network in the financial services space. And the fintech is, while even if you're a unicorn, you're only on the periphery trying to get in. You've not gotten in. And that, I think, has to change. Then it will be very interesting. Coming to your specific question about, let's say, the credit sentiment, the ability to lend more, I think there are multiple issues, right? I mean, one, when COVID happened, something like COVID happened, if I were a listed company, my biggest fear is, do I conserve capital even if I don't grow? Even if can I shrink my balance sheet? Because end of the day, as a listed player, every quarter I'm answerable to the shareholders. There is an outcome expected. So even if I don't grow, it doesn't matter, people will understand. And that's exactly, you also see representative in the market. And of course, added to that, we also had the moratorium issue, which is still pending, and at some point in time we will have an outcome. So if you bring in so many of those unknown, unseen, and suddenly thrust on you, and also from the demand side, if I were an SME and MSME, and I've been shut for 3 months, 4 months, and I have a backlog of money due to come in, and if you come and tell me, Anurag, as a banker, saying, why didn't you borrow money? My question is, what do I do with my old dues? Will I be able to recover? Is my current business viable? I think there are too many questions which are still open. And I think only with time, when I say time, now that we have started slowly opening up the economy, I think we're going to have this. The budget that we saw is going to create a lot of impetus on the infrastructure businesses, which is very good because capital will go downstream all the way to the rural economy. I'm hoping that the government will front load some of those expenses so that we can see the economy churn. And that itself sets a pace for the sentiment. So I think I would probably wait for the next 3 to 6 months for, I think, pre-COVID numbers. While some of the industries have already come back to their pre-COVID numbers, the lending business will come back then. And of course, you and I have chatted a number of times. There is almost the flavor of the season, right? I mean, sometimes retail lending is very favorable and everybody goes gaga over it. Sometimes SMEs are the darlings. Sometimes corporate lending is the big favor. And I think that is why we would need specialized, focused institutions. Can we have institutions focused only on SME and SME? Can we have institutions focused only in housing? Can we have, unless we bring in those specialized skill sets and focused players, we are going to have the same. If you're a universal bank, you will keep changing your flavor of the season every 3 months, every 4 months. And rightfully so, because you have a fiduciary duty to your stakeholders, equity holders who are giving you that capital. So that will be my view on this.
My absolute last question as a player, I'm enjoying the conversation. I know you and me have spoken about it, both on screen and off screen. Is your overall commentary on the budget? Because at the end of the day, the one thing that the budget does is to change the sentiment, to create demand. Demand creation happens through jobs. So when there is more jobs, people spend more. So, budget grows everything, right? Hence, also the fintech ecosystem. So give us a commentary on the budget. What do you think the budget has got it right? What it could have got it better?
See, I think the budget got the fact that if you actually support infra development, infra growth, or infra build out, the rest of the economy develops on its own. And I think there are enough examples like the US where you pumped in money into highways, railways, all along the corridor, new cities and towns develop, economic viability increases, and then you have sectors like F&B, hospitality, everything develops. I think we have also provided the similar philosophy. Yes, it's a great one, and which is why I am hoping that the government front loads the capex because it does take 6 months post those infusion for it to percolate to downstream. And if you do it sooner in the first quarter itself, first 2 quarters, by the next financial year is out, we would have sufficient money and sentiment improving. Of course, there have been a lot of conversations about debt market, developing the debt markets. I would be a little cautious. I would still wait before I go hip hooray on that. We have for decades, we have spoken about developing the debt market, improving the bond market. I think the jury is still out on that. So we cannot change that. On the personal taxation side, there have been a lot of expectations. People expected reliefs. Nothing is done. But I won't be surprised. This government has always shown that budget is not only one event day in the year. It has brought in policy changes where it has felt it is necessary to push the economy forward. So nothing stops this government from bringing in something at a later stage. Is this budget a good budget? It's a very, very proactive, good budget that I see it. Can something more be done? I think addressing the banking system to say that, can you go forward? I think that needs to be done as well.
Fantastic, Mr. Srinath Sridharan, for talking to us. Thank you for being a positive catalyst in the financial services ecosystem. We wish you luck in your endeavors. And I'm sure when soon enough we are discussing fintech again, a lot of what you said would have been implemented, and hopefully the fintech sector will continue to innovate and disrupt itself so that nobody eats its lunch. So thank you so much. God bless you. And back to you, Bhavna Bhatia.
Thank you so much, Anurag. Bye.
Thank you. Thank you so much, Dr. Batra, and thank you so much, Srinath, for joining us. Well, ladies and gentlemen, what an exciting round of conversation that was, the first fireside chat. And with this, let's have a look at the AV while we resume with our first panel discussion at 11:15 Indian Standard Time. Could we have the AV, please? So, ladies and gentlemen, keep continuing the conversations on Facebook, LinkedIn, Twitter, and let's get the round of applause for all our upcoming speakers and panelists as well who have taken out their valuable time. And with this, we're just going to be starting in the next few minutes with our panel discussion, which is at 11:15 Indian Standard Time, IST. So 5 minutes more to go for that. Stay tuned, do not go anywhere while we queue in for our AV so that we can get to know a little bit more about our event and about the partners and about our group. So could we have the AV, please? And while we get ready for our first panel discussion. So, ladies and gentlemen, well, I just got the confirmation that all our panelists have joined us. So, firstly, thank you so much to all our incredible panelists for joining us on before time. So, they say that before time is being on time. So, I really respect and thank all our panelists for joining us. And while we still have another 4 minutes to go, and if we do not have any of our AVs yet, what we're going to do is I'll just request all our esteemed viewers, our audience, we at BW Business World really value the inputs from our consumers. We really value our interactions with our partners and our speakers. So we'd really love you to have these online conversations live with all our social media handles. Do keep retweeting because it is all about the trend on social media wherein we get this conversation out. As you rightly know that fintech as an industry is evolving, and today is a very special day wherein we're looking at talking so many aspects in the fintech industry. So, well, ladies and gentlemen, now it is time to move on to our first panel discussion. Well, the first panel discussion for the day is FinTech creating innovative infrastructure for the banking industry. Well, this panel discussion is going to be moderated by Mr. Sachin Seth, partner ENY, and our panelists are going to be Mr. Nitin Vyakaranam, founder and CEO, Arthayatra, Mr. Sachin Seth, who's going to be moderating it from ENY. We've got Ms. Meghna Suryakumar, founder and CEO, Credit Watch. And we've also got Mr. Panagiothi Kriaris, the head BD Unzer Group. So thank you to all our esteemed set of panelists for joining us and giving us your valuable time. And it is now time to dwell into this first very topic. So could I now request all our panelists to join us on the stage and screen by switching on your cameras and putting your audio on, and let's have an exciting conversation. Well, I can see Nitin, okay, well, I can see all our esteemed panelists already joining us. A very good morning on behalf of BW Business World. We welcome you all to this wonderful summit and awards today. Thank you for giving in your valuable time. Over to you.
Yeah. Hi, Bhavna. Thank you so much. Thanks for giving us this opportunity, and thank you, Business World team. It's a wonderful session going on since yesterday. And now we are on the stage, so we will try to make the best use of this time and have a quick and engaging discussion with all the esteemed panelists we have here, right? So welcome, Meghna, welcome, Nitin, and welcome, Panagiotis. How are you doing? I hope it's all good.
Doing well, thanks.
Thank you.
Yeah, we're doing good. Thank you.
Perfect. So, given that I think we have about 40 odd minutes, and there could be some Q&A towards the end with participants, I think let's dwell directly into the topic what we have, and just for the introduction, I know all of you represent basically different domains, but maybe probably let me take opportunity to have 10 to 15 seconds from each one of you to basically talk about the sector or the segment of the fintech you represent and the company you are representing, so that audience also understands a bit more context about when you are talking about a particular space in the fintech as far as infrastructure is concerned. So let me request Meghna. Meghna, would you like to take 10-15 seconds to just quickly talk about your background and the area which you focus on?
Sure. Hi, everyone. Good morning. I'm Meghna Surukumar, the founder and CEO of CreditWatch. CreditWatch is an AI-based platform that curates disparate digital footprints across the digital world of businesses, irrespective of their shape and size. When we curate these digital footprints, we convert that into actionable risk and credit intelligence, and we work with leading financial institutions to help them solve for the credit lending gap that is there for 60 million SMEs in India. In terms of the sector that I represent, obviously I represent the fintech sector and specifically the credit sector. If you look at the Indian landscape, there, we have about 1.5 million companies and 60 million small businesses. The last 5 years has seen a lot of disruption in terms of different business models that have been evolving, whether they're neobanks or platforms or marketplaces or NBFCs, balance sheet-based lending, flow-based lending, banks trying to acquire technology to get neobanking capabilities. So we've seen a lot of disruption in the industry. And I'm here today to talk about the different trends and the different disruptions that are happening in the finance sector to tackle this opportunity of being able to lend to underbanked and unbanked people and businesses. Thank you.
Sachin, I think you're on mute.
Sorry. Yes, Panagot. So welcome to you as well. And a few seconds from you as you are joining from different time zone and looking at the global market as well. So would you like to talk about few seconds about your company, your focus and area of basically segment which you are looking for?
That goes to me, right?
Yes, Panagot. Yes.
Okay, thank you. Thank you for having me. I think it's a very interesting discussion. So my name is Panayotis Kriaris, as you mentioned. I have a background in banking and payments for many years in fintech. I'm now in charge of business development for Unzer. So as I said, I think it's as you said, it's I'm going to be providing the European perspective. I have a focus on the payments space. I would say I think there are many things happening on the payment space. So it would be interesting to understand how this is also influencing the fintech trends that you have been mentioning. So looking forward to a very fruitful discussion.
Sure. Thank you, Panagotius. And Nitin, you have been very well-known name in the wealth management space and doing a lot of work with SEBI and otherwise with global clients as well. So Nitin, bit of details about your company and your focus area.
Yeah, so I'm Nitin Vakarnam. I'm the founder and CEO of Arthayantra. We provide financial wellness for retail customers. Our customer base largely today is India. However, we work with large corporates who are our customers. We give employee financial wellness as a benefit. We also work with a lot of financial institutions in India and globally, where we largely try to integrate global financial infrastructure with our own proprietary quant to help them deliver financial wellness for their customers in their local countries. That's about us.
Sure. Thank you so much. Thank you. So I think with this, we'll go into we'll probably start in the same sequence. So Meghna, I'll come to you first. And as the topic is pretty interesting, and just to add here, I see, Meghna, you are representing the underserved or unserved segment of access to finance, credit, basically, and looking at the Atmanirbhar Bharat or the self-reliant Bharat or the India, or even globally also, you see the MSMEs have been phenomenally impacted by pandemic. And I think access to finance has become a big agenda for all the governments, including Indian government. And we have seen a lot of schemes coming out there, right? So I think very relevant that you are there on the panel and you'll be able to add quite a bit of value in that. Again, and Nitin talking about wealth management, financial wellness, I think very interesting area because as savings are moving towards various other asset classes and the goal-based investing happening a lot, and corporate employees are also looking at financial wellness as a holistic approach, I think it would be good. And Panagotius, you are talking about payment infrastructure and the global transactions infrastructure. I think that would be good. So I think we couldn't have had a better panel than this, that we are representing all the almost like big three pillars of the financial services industry or the banking industry. So Meghna, coming to you, just for audience perspective, first question probably all of all the panelists I will request to answer is that when we talk about fintechs playing a innovative role in the financial infrastructure and how they can benefit the banking and the financial services, what do you see as various pillars of financial infrastructure, and what does it mean? What do all we basically count on the financial infrastructure components, and then we'll go delve further into the basically how they are playing a role and what kind of role they can play. But Meghna, your thoughts on that what all something which can constitute the financial infrastructure piece where the fintechs can play a significant role, and they are working innovatively already, or they have a potential to develop it as we go forward. Yeah.
Sure. I think the first pillar was obviously digitizing payments and going cashless. And with the UPI, which was the first step in building, financial infrastructure, the fact that the India Stack and then the UPI and the work done by the National Payments Council, payments and cashless payments, going digital on payments becomes the first step towards inclusiveness, because it's not just large companies doing wiring money and doing cashless transactions, but now it's gone into the hands of the common man, where anyone can do a cashless transaction, and that's the first step for financial inclusion. That also goes into the fact that because of the Aadhaar, Aadhaar was another big step in terms of financial inclusion towards individuals, because after the Aadhaar, I think close to 80% of people in India have a bank account today. And there's especially during the pandemic and on many of the government subsidies, you had a very easy and seamless way to make this benefit directly reach the bank account of the end user. And in fact, it's a lot of studies say that the main beneficiaries of the Aadhaar initiative, where people have opened bank accounts, have actually been women, and close to 40-50% of women in the country. That is an increase that we saw in terms of having a bank account. And the fact that these subsidies reached on time, I think that we've at 5% of the people have gone up above the poverty line. So getting bank accounts and getting payment digital infrastructure was the first step, and the next step was to be able to create a digital lending journey to make finance accessible, right? So after the India Stack, we have initiatives like the DigiLocker, and then we have the fintechs who built key infrastructure in terms of giving APIs as a service to be able to get data to lend, be able to give KYC infrastructure, to be able to get data for credit files. So the whole banking API as an infrastructure that we've seen in the past 5 years has been another important key development that we see. And KYC itself has evolved to be able to do video KYC today, which is kind of one of the innovations that we have in India, to be able to do video KYC even now for complex situations, right? So to be able to do video KYC, to be able to do KYC digitally, that has been a very important development. And the other infrastructure that's developing is in terms of the kind of, the GST, right? When the GST has come in and all of this, let's say that the trade has become almost seamless, like flow-based, right? With the GST coming in, 12 million businesses have been brought into the digital economy. And we have now alternative data to be able to, look at them and create a score that is more meaningful to give them access. So the fact that we brought in a lot of initiatives and policies like GST and built an infrastructure around it, where just with a simple consent, you would be able to electronically get somebody's GST data just with an SMS. So building that kind of an infrastructure, of course, is going to lead to a lot of inclusiveness in terms of lending. And then then now we have the new infrastructure coming in with open credit, enablement initiative, right? The AA framework, where you create the data fiduciary who's able to ensure that the data that leaves the borrower's phone or system or laptop and enters into the bank's infrastructure is protected and is dealt with in the appropriate manner. So building the framework for what we have as a GDPR globally, even before the privacy bills have come into place. So building in that kind of an infrastructure with the AA framework to protect data and data, to have data governance, and also then looking at all the different open APIs and banking APIs that we are really geared to do flow-based lending, to be able to lend in real time. So these are some of the very, very important initiatives that have happened. And of course, using AI, ML and building the core infrastructure for that, where there's digitization, right? Right, with the Kirana stores, with companies like Khata Book and OK Credit. So there are various fintechs that have helped digitize and bring in small businesses into the digital economy by giving them infrastructure to be able to get themselves online and for the data to become valuable. So the different initiatives of bringing in SMEs into the digital economy actually is going to be the key driver, because you have a lot of alternative data sets which can actually enable us to provide the right kind of interest, the right kind of product and financial services to these businesses.
Great, Meghna. I think you wonderfully covered actually all the journey which we have had in last 5 years, and I think that has made India probably among the top few players in the world to have the end-to-end adoption of digital in customer onboarding, underwriting, access to finance, collections, etc. So that's very wonderfully covered. And actually, I think I mean I did not know that all of that can be counted as if infrastructure created by the fintechs. But I think it makes a lot of sense what you said, and very good insight for our all the audience and people who are listening to this, that practically each of these building blocks actually has created an infrastructure for, or a highway for basically providing the access to finance to people or credit flow, etc. So that's pretty interesting thoughts. So Nitin, coming to you, I think from wealth management perspective, do you also see that some of these building blocks have been coming up in there? And obviously all of us know that what Meghna talked about from regulatory point of view, it's more of a central bank or Reserve Bank of India's prerogative, whereas what Nitin, you focus on is more on the investment side of it or wealth management side of it. So that's basically another regulator. We have SEBI. And so just want to hear from you that what kind of infrastructure you see in fintech space is being created in India as well as other countries where you operate in, and how that's been evolving.
Yeah, I think globally that's something that's moving. The same things or similar things are happening globally, largely around three areas. From an infrastructure perspective, one is data, second is analytics, and third is transaction disintermediation. If you look at data, largely data infrastructure has been around, whether it's in India, NBFC AA account aggregation, or in Europe, it's PSD2. Similarly, Singapore, South Korea, all these countries have really come up with their own consent-based data aggregation models. This is obviously in addition to what all we have done in India, whether it's our KYC infrastructure, Aadhaar-based KYC infrastructure, or video KYC infrastructure. But if you really look at all these, and you can club all of them into just one bucket and say it's all data on customer, whether it's verifying customer, whether it's AML-driven, or just account opening, all those things really form the core fundamental foundational infrastructure for really various services that can be provided in the whole banking and financial services industry globally, not just India. So that's data. Second is analytics, where that data can be used to really whether what Meghna was talking about in terms of create analytics. We in fact use all the data to create holistic advisory. We go through almost 1 trillion options real time, look at over 1,000 data points per customer to be able to give hyper personalized recommendations, right? So the analytics on top of that base data is where a lot of new work is happening. And then the third one is the whole transaction disintermediation segment, where you have the services being really exposed to the customer. And here you have the whole blockchain world, smart contracts world. In fact, UPI's services also would come under the whole transfer disintermediation models in payment. So we really look at it as a stack where each there's a lot happening in each level of the stack. There are different companies which have been building up softwares and algos for each stack. But the beauty is that all of them will work together and then be able to generate services, because the core of all these things is one. The key enabler here is the customer. It's time that the industry puts the customer at the center of the universe. The product will move out and the customer has to come to the center of the universe. And all these three together will really enable that.
Excellent, Nitin, excellent. So that's a pretty interesting point of view. So Panagiotis, what do you see, especially in Europe, what Nitin talked about, taking it further, and do you see applicability in India as well, or especially in the payment infrastructure space or any other space where you are operating? How do you see fintechs creating a lot more, playing the role, not just for onboarding of users, providing them customer experience, but playing a significant role in the infrastructure which can be basically becoming the backbone of the whole financial services ecosystem.
Yes. So thank you, Shaheen. I think all the points that were mentioned before are very relevant. I would like to start from a different perspective, because for me, if you see what was happening, the setup that we used to have in financial services a few years ago, you would see, or many years ago, you would see that everything, let's say the traditional financial institutions were based on a very specific monolithic setup that was kind of bounded by national boundaries. So there was no international perspective. Now, I think what is happening in terms of infrastructure, and which is quite revolutionizing the space and revolutionizing financial services, is that you have digital platforms, for example, which are built from day one to serve international customers across borders, across segments, and with a technology that is modular. So for me, this is changing everything in terms of infrastructure, because you're going from a vertical monolithic application to something which is very agile, which is very flexible, and which is, as I said before, is very modular. So now you have the APIization of the economy, meaning that you have bundles of applications, you have a tech stack which is very easy, and this is due to a large part due to fintechs. So basically now what you can do is that in a very short period of time, you can build modular applications. You can choose whatever stacks you think are relevant. So for example, you can choose a payment stack, you can choose a lending stack, you can choose, for example, onboarding, or you can also take KYC out of the box. And what we see today is that we have fintechs and other organizations building kinds of services that in the past they used to take at least a couple of years just to go up to the level of existing players. So now you can actually build this kind of services in a relatively sooner period of time. So for me, this is making a tremendous difference in terms of infrastructure. The second thing that I think is key and is crucial, and I think there is no differentiation between India or the rest of the world, I think this is a global trend that I see, is that in the past we have seen that organizations, financial organizations, were built and they had a focus to onboard customers. I mean, this was the basic thing that they would have as a goal. Now, I think in terms of fintech and in terms of what's happening today, on top of what I mentioned before, I think we see a double kind of, let's say, focus. On the one hand side, you see the customers, of course, it's a very big priority. But on the other hand side, I think you have a new breed of customers, and they are called developers. And actually, this is making a big difference, because now the developers are the ones that are taking your APIs. You are publishing your APIs, and based on this, for example, you can have the platform model where you're basically providing, for example, you are acting as a platform, and you need these new types of customers, the developers, as the ones building services on top of your, for example, existing applications and products. So they are basically adding value. And for me, this is a key change in terms of infrastructure and in terms of what is happening today. So things have been changing a lot. And I think that the whole flow of things and the whole added value chain is moving from, as I said before, a monolithic kind of structure to one that is more flexible, to one that is more agile. It's a bit more complex. And actually, technology has played a very critical role in this being transformed into something which is quite different from what it used to be.
Thank you, Panagiotis. I think that was wonderfully articulated. In fact, it was music to my ears, because when you talk about, converting all this into the ecosystem of APIs, developers, you basically democratize the whole technology build. You are able to plug and play, typically like a Lego block kind of model, and that is where the infrastructure can not only be created, it can be also utilized and effectively and efficiently sort of become the backbone of the whole ecosystem. So whether we are talking about wealth, or we are talking about insurance, or we talk about lending, or we talk about payments, I think many of these building blocks remain common, right? So obviously KYC remains common, underwriting remains common, fraud remains common, right? So these are the common building blocks of any financial service ecosystem. And it doesn't matter whether it's one regulator or the other. I think the eye is always on these things, right? And on top of it, obviously, putting together industry-specific components like Meghna talked about flow-based lending, different models being explored there, or Nitin talked about the wealth management, wellness space, or you talked about payments. I think those could be the industry-specific point of view. So just that's a summation of my first question, which I picked up from your inputs. So probably let's go a little bit deeper as we have time to give audience something more what we have been experiencing and how we are able to bring it to the table. So if I just summarize it, that we did talk about data becomes an underlying layer, and data repositories, whether it's an account aggregator, whether it is a PCR, whether it is, I'm talking about Indian context, and I'm sure global context, every country has the similar models, whether it's a bureaus, whether it is surrogate data, whether it is the data generated by the users or generated by the ecosystem, etc. So data becomes one of the big infrastructure play, and using AI ML on top of data becomes all the more important because there are a lot of learnings can happen and predictions can happen, right? So that's one. Second is API. We talked about it. I think you talked about a lot on that. And APIs are becoming like a wiring for the whole industry. So while wiring or plumbing or whatever you call it, and I think everybody is fairly conversant with this word, even in the business community. People know that if I have to align with the e-commerce player, a banking platform, I need an API call. I need API call for this. So I think that's becoming a platform. But now we are moving towards from proprietary APIs or the integrations done between the two entities to open APIs frameworks, and that's becoming very relevant. I think we talked about a little bit on that. Third is, we didn't talk about it, but I think I'll just put it on the table for the discussion, that adoption of cloud also has been a phenomenal journey. I think most of the technology we talk about in fintech is, I think most of the fintechs are born in cloud, or they are hybrid cloud kind of scenarios. So while I would not say it's an industry infrastructure, but I would definitely say it's an infrastructure which drives the fintechs, right? Because if the cloud adoption was not so much as it is today, naturally the fintechs, and you talk about monolithic versus microservices, etc., it would have been very difficult to really build the applications. Everybody building data centers or using or keeping the walls in their own organizations and trying to collaborate, right? So cloud, I'm just using it as a word. I mean, it's not that it's more of a back-end infrastructure. It doesn't come in the front most of the time. And then fourth is, we didn't talk about it, but I thought I'll put that also in the ring to basically discuss, is blockchain. Now, again, there's too much of hype, less has happened, but because we have this opportunity to talk to all three of you who are experts in your field, are there possibilities of blockchain infrastructure also being used somewhere in some use cases? Because I think we have seen the lack of common industry players which can create that infrastructure is a bigger problem than actually the use case itself, right? Because within the four walls of organization, you can always do whatever you want in blockchain, but you may not be able to do it with four other players, because then there is a lot of governance required, a lot of collaboration required. So let me pick up these four. I mean, along the way, if we pick up something more, we will definitely talk about it. So Meghna, any of these four areas, would you like to talk about a little bit more deeper into it, that how industry is going to emerge and what fintechs are going to play the role? Do you see fintechs coming in enterprise tech and deep tech, which are basically going to play a significant role in making this work together with players like NPCIs and the Reserve Bank's sandbox environment and things like that? And how do you see it all going? I mean, just maybe a few points from you on this, and then we move to Panagotis and Nitin also on that. Yeah.
Sure. I mean, I think that, when we started a few years ago, using technologies like AI, ML was very nascent, right? But today, as we are in 2021, especially post the lockdown, going digital and especially using, artificial intelligence and machine learning as a strategy has become the top priority of almost all financial institutions and fintechs and financial services organizations in India today. So we've seen, especially in the past 12 months, the kind of RFPs that have come out and the kind of buy decisions that are happening. We can clearly see that there's a push towards going, lending completely digitally and banking completely digitally, right? So I think today there's no need for you to actually go down to a bank, because everything can actually be done already digitally. And we're not talking about all the new age banks, but even if you take the private, local private banks, they've adopted enough technology where you actually don't need to go to your branch anymore. You actually go there for human interaction to talk to your manager, maybe, but all of the banking services are actually, you could all do it online, right? So we're already there. So what I see in terms of trends going forward, right? I think that banks are going to have deeper collaborations with fintechs to develop what we call neobank capabilities, and that's where the deep tech is going to come in. What we're essentially seeing now, a lot of trends, especially with kind of signups that CreditWatch has had in the last 12 months, is banks are increasingly focusing on building, models, newer models for the newer customer segments that they're going after, using, a lot of big data, using, a lot of artificial intelligence and machine learning. And we've seen that as an increasing trend across all the customers we work with, where banks come to us and not only do they adopt our own AI-based, ML-based scorecards and predictive analytics, we also partner with them, collaborate with them to, work on some of their own data sets, and help them also come up with some models. So we see that, and that kind of, penetrations happening across not just, the new age fintech lenders, but even PSUs and large private banks are doing that as well, right? That's one trend that I see going forward. And second is, I see that all of the banks and NBFCs are gearing up to build digital infrastructure to do flow-based lending. So earlier, it would take 3 to 4 weeks for you to get a loan, sometimes even 2 months. Right now, we're looking at, giving a business loan in a matter of 30 minutes, right? Especially, and if you look at products which are specific just around GST data and all of that, you can do that in a matter of 5 minutes. So that means that the time it takes to actually give a business loan it's dramatically reduced because of the different, in technology initiatives that lenders have taken across the country. You have the, government's own initiative of loan in 59 minutes, and I think version 2.0 is coming out right now. But many other banks have come up with their similar products and platforms of their own. Another big trend that I see is in the supply chain. And I see that you talked about blockchain, right? I think the best use case for blockchain to actually, to kind of grow and scale in India, I think would be a supply chain use case, especially when because in creating digital invoices and creating the whole process where you're reducing a lot of friction and fraud, right? It will be very difficult to kind of counter a supply chain transaction that happens end to end on a blockchain because, it's kind of validated at every point. So we see that there's a lot of work that's happening. There are a lot of new fintechs that are coming about that are focusing on building supply chain, technologies and workflows using blockchain. And I see a big push there because almost every big bank today is actually getting at not only providing services to its own large customers, but also to the end suppliers of those customers and to the entire value chain. So from that perspective, I see that as a big emerging trend other than flow-based lending, is you're going to see a lot of significant developments in supply chain.
That's interesting. I think you very well covered, and the growth of any country's GDP is also dependent on the access to credit, and and I think GSTN is a great platform setup. It had its own hiccups, but I guess a lot of things have stabilized. And with data privacy laws being put in, an account aggregator coming in, and access to the GST and data coming in, I think, as you rightly said, roadmap looks pretty interesting. And supply chain finance also is a very interesting topic. I mean, just to add here, a 2 cents from my side, you see the agri reforms have also been around, and agri-tech has been also growing significantly. And I see a lot of collaboration of agri-tech with fintechs because at the end of the day, the whole agri supply chain depends on the financial backing. So whether it's a loan to farmers or it's a warehousing receipts against which the loans are given, etc., etc. So whether the corporates who are playing in this or farmers who are there, I think quite a bit of that, what you said is also will be able to sort of add here, right? So interesting point of view. So Panagiotis, from your point of view, you talked about open APIs or the API infrastructure in a significant way. And I know some of the players globally. I mean, if I just throw some random names here, I see Plaid playing a role in US significantly, moving to UK and Canada. I see TrueLayer in UK sometimes doing pretty well. Rapid API doing quite a bit of stuff. Do you see this is a real wave of open API infrastructure platforms coming in? So it's not about just Meghna building the APIs for the credit underwriting or Nitin building the APIs for the wellness or you building the APIs for payments. Is it also the time to look at common API infrastructure players and they become more like an aggregator of APIs and they look at how do we disintermediate the whole process of building the digital apps or digital platforms? Because as a technocrat and as a consultant in the industry, I do see that launching a new product actually takes away almost like 50% of the time in the integrations, right? And while the business may be ready with the idea, but it takes good amount of time in spite of being all the technology available to be able to launch it in the market. And many of the products are shelved actually because the time to market is only, you have 2 weeks or 4 weeks, you have a festive season, you have a particular season for buying insurance, particular season for buying e-commerce stuff, or particular season for something else. So because of technological limitations and open APIs infrastructure not enough available, probably a lot of digital is not coming into the forefront. So because you play the global role, and you might be seeing this more often than us who are mostly sitting in India or Middle East, Africa, ASEAN market. What's your point of view on this, and do you see that's becoming a real story going forward?
By the way, I think it's worth mentioning that the APIs are not a new technology. I mean, they used to exist 20, 30 years ago. The fact that we are now that they are now taking up and that we are now using them in finance and services doesn't mean that they didn't used to exist before. So that's I think that's good to remember. Now, on the other hand, I mean, you mentioned a few names, very valid points. You mentioned Plaid, you mentioned some other things. I think here we see different models based on different geographies. For example, I mean, you have the European experience, you have, for example, the PSD2, you have the open kind of, let's say, banking regulation. I mean, open banking, I mean, PSD2 is not, it's just a regulation, and it's kind of enabling based on the infrastructure, based on the APIs, it's kind of facilitating the flow of data. So what used to be closed before, now it's open, and everybody has to share data with other institutions, and this is changing. So the fact that you cannot deny others, third parties or applications using your data and building value on top of this is what is making the big difference. Now you have, for example, a different approach, a more liberal approach in the US, where things are not regulated, and you mentioned Plaid. And actually, Plaid, the reason of the success of this kind of models is because you don't have regulators coming in and saying that this is how the game is going to be played. So actually, you wanted somebody who has been building in the background for many years all these connections through APIs, so that all of these applications, the modern applications that we see, can work. And actually, they can. What they do is that they are actually providing access to the data, so that the end consumer can kind of, let's say, have his data working, or her data working. So I think this is, for me, one key piece to differentiate. The second thing is, as you said, I see that the open APIs and the APIization is going to be a trend that is going to be continuing in the future. And one big thing that I see evolving, and I think there is a lot of potential on this one, is the fact that I mean, we talked about this, we mentioned this before in the discussion. So the embedded finance discussion, so the fact that you can have any organization being able to embed financial services into their model in a relatively easy way, for me, is revolutionizing the industry. And I think we have seen some of the models in the past that have been having a lot of success because of embedded finance. And I think we don't realize that some of the simplest models of successful business stories that we have seen in the past, or that we are now seeing taking up, are actually embedded finance. I mean, if you, for example, take a taxi and you are, I don't know, take a cab, you're using Uber, and at the end of the day, what do you do? You do two things. The first one is that you are booking this online, so you have an app, and the second thing is that you are paying for this in the background. This is embedded finance. So imagine if you're using an Uber, and at the end of the ride, the cab driver is telling you, okay, now you have to give me cash. What this would do to the customer experience. So the fact that this is embedded in one seamless flow, let's say, this is embedded finance. Or the fact, for example, we are now discussing, and there is a lot of hype around the buy now, pay later industry. Why is this successful? Because of the fact that this is integrated, this is embedded in the checkout process. So the customer does not really understand how things are working, that there are different services that are allowing him to facilitate the checkout. So for me, this is the name of the game. And I think we can make a parallel here that in the same way that Amazon and Amazon Cloud, for example, let's say the cloud, was facilitating or democratizing, as you said before, access and use of the data, I think the same thing is now or might be happening in terms of democratizing access to financial services and having every company who would like, let's say, to embed or to offer these financial services, being in a position to get financial services as building blocks, as Lego blocks, as we said before, through APIs, and embed them into a model that makes sense for them. And actually, this is going to be, or this is, I mean, this is now the case. It's very easy to do. Now, there are different, correct. And I think I mean, just to finish this off, I think there are different opportunities on both sides of the equation here. You have opportunities on the fintech space for companies who want to provide, let's say, their added value applications. And I think you also have opportunities on the traditional banking or financial services space, because now you have players who have the ability to look at different new business models. The fact that I can, for example, read my license as a traditional banking institution, or that I can access new customers on the B2B side, opens new opportunities which were, let's say, unthinked of some years ago, I would say.
Sure. This we are facing some problem. Yeah, okay. Thank you so much. No, I think that was wonderfully articulated. And I think embedded finance, I think practically finance is in everything nowadays. I mean, I think there is no transaction we do where finance is not involved. And I think a lot of innovation happening on that. And I think that's the right way, because it's a consumption-based story. So even lending is happening for the purpose. It's not happening for the just give it out cash and people can spend as they want. I think it's all happening that whatever you need, you take it from me, but I know that what you are taking from me and what is your consumption around that. And then I see that whether you can pay it to me on time in sachets, and the whole, the cycle of the financial, is revolving around that, right? Interesting. So Nitin, slightly different question. You have been working with SEBI quite a bit, the regulator in India for wealth management. Now, do you see what is the thought process of the regulators on having fintechs creating the infrastructure, and especially if you see we are seeing the sandboxes, we are seeing a lot of innovation happening, etc. But is it converting into a real scenarios? Are the regulators taking it very seriously, and they are also providing the platform to be able to get right kind of fintechs who have the wherewithal to sustain in the long run and who can become part of the stability of the whole financial ecosystem? So where do you see it going, and any thoughts on maybe correlating it with the open APIs or any other platforms we talked about? Happy to hear your answer. And probably because paucity of time, after I'll just have a rapid fire round. I'll have 2 questions from you each in a minute or two to just be on time. But yes, Nitin, your answer first, and then I'll go in the rapid fire round. Yeah, please. Thank you. Sorry, you are on a mute. Can you unmute yourself?
So I'm not representing SEBI here. I'm representing Arthayantra. So these are my personal views from that perspective. Now, to me, regulators are an important cog of the whole ecosystem. The ecosystem has 3 different players: the regulator, the consumer, and the financial institutions, right? So to really be able to address the second part of your question, where are we building sustainable business models? Are we building sustainable fintechs? Is there a maturity cycle that actually can be built out over a period of time? I think that has, obviously, a regulator has played a role in that, but that actually has to come from the whole customer institutional engagement perspective. What the regulator typically looks for, and this is globally, not just India, is to ensure that the consumer is protected. At the end of the day, what they would like various financial services companies is to build services and solutions for consumer that deliver value to the consumer, right? And then, and that's where all these discussions are happening. Why are we talking about APIs being able to rapidly create apps, new business models? We are doing that because if you look at the penetration levels, right, across the industry, across the world, across categories, right? And it's not, it's not an India problem, right? You'll find insurance being less than 5%. Even in developed markets like US, the insurance penetration levels are 11% or 12%, right? So you have vast majority of the world, right? Whether it's individuals or SMEs or small businesses, which are kind of disenfranchised from this whole ecosystem, right? And the existing traditional ecosystem has really not worked for them, right? So we are all really, everyone here is trying to, along with the traditional banks, is trying to really see how we can create this new generation ecosystems where we can push that envelope, increase the number of people who have access, and access is such a broad word. What the regulator actually has tried to do, and always, and I've seen it in close quarters, is to really enable it, whether, as you said, creating those sandboxes, right? I think both IRDA and SEBI have created sandboxes now. And and this is very similar, even other countries. If you look at FCA in the UK, they have a sandbox. There is a whole application process for sandboxes for new businesses to really go in and develop. But the thing is, just the regulator with the sandbox doesn't necessarily create an ecosystem. The ecosystem has to come through with the players coming in and delivering that value. And to me, that's a slow process. We are still in the early stages of financial services innovation. While we've come a long way, last 5 years, the amount of stuff that has happened is great. Embedded finance, how we make payments is great, but that's largely payments, right? If you really look beyond that and compare, let's compare ourselves with airlines 10 years ago, right? Airline industry has transformed in 10 years. The whole customer experience and booking, it's no longer the same. The financial industry has changed, maybe by 5%, maybe by 10%. So I think we have a long way to go, and that's why it's so exciting. Fintech is exciting because, as you said, it's finance is in every piece of thing that we do, right? But it's not gone to the level at which we can say that it's a truly transformed industry, the way airline is an example, right? As has happened. I don't think we are there yet, but we will get there.
Sure.
And regulator has a very important role there.
Sure. Thank you. So just left with 4 minutes. So I'll go for a rapid fire round. And the rapid fire round is basically because all of you are, fairly seasoned, entrepreneurs come leaders in the fintech space. I think the message to the next generation of fintech, because we are talking about innovation being created by fintech in the infrastructure space, financial infrastructure space. So what would you advise? I mean, 2 suggestions from each one of you, that when you see in the future, if a startup has to come up, or some people, whether experienced or young, they have to set up a fintech in the financial infrastructure space, what are the 2 ideas, or what are the 2 areas you think that is still enough work has not happened and people can come and forward and do it? So 2 ideas each from you would really help us close the session with something for the audience as well, and the people who have been thinking, or maybe they are the ones who will incubate them. We have investors, we have incubators, we have budding fintechs, all on the as a part of the audience. So 2 each of you. So Meghna, let me start with you. What are your 2 ideas to create fintech in the financial infrastructure space?
I think one would be trade credit, insurance. So, there's only, I think, one sandbox between RXIL and Tata, where they're creating trade credit insurance. And that's actually, trade credit is going to be very instrumental, especially for small businesses to be able to help, mitigate losses, and not enough work is done there, right? And there it again requires the same kind of credit decisioning, that kind of similar technology to be able to even issue trade credit insurance, right? So that, I think, I see a lot of, things that need to happen. Second, I think, is, building solutions for embedded finance and flow-based lending. I think a lot needs to happen there. And while we're in the very initial stages of creating some products, I think in the next session, you have Grow Capital. They've just come up with the first app that integrates with, I think, the GEM marketplace of the government, and they're able to give finance at the point of acceptance of an order. So, typically you would raise an invoice and you get invoice credit, but here you're getting credit the minute you get an order or win an RFP. And that's a fundamental shift. So, trying to, accelerate to the journey of getting finance as close as trade to possible. Like instantly when trade happens, we're able to get instant finance. I think, that's where I can see a lot of solutions coming up.
Interesting. Thanks, Meghna. Panagutius, your two suggested areas for fintech to come up or scale up?
Yeah, I mean, one I would say is I see a lot of opportunity. In the past, we have seen many applications, many innovations happening on the retail space. I think that the SME space, or let's say the B2B space, has still many opportunities, only because of the fact that you have SMEs that are kind of neglected, or let's say the customer experience is not at the same level as on the retail space. So it's still far away. And we see many fintechs having, let's say, using services that are disintegrated, I would say. So take, for example, the data, take the lending. So for me, this is an opportunity. And the second one would be, it was mentioned before, I think the whole embedded finance, the whole banking as a service, the whole payments as a service, whatever you call it, because you have many variations. This space, I think, is going to be evolving. And as I said before, it's going to be creating opportunities on both sides of the equation, not only on the end consumer side, but also on the B2B side. So I see a lot of models, and I think we can still see today different models, but I think these models are going to be evolving as we go along.
Excellent, excellent. And Nitin, your two suggestions.
Yeah, I think one is it's an open thought, which is, I think the space where we identify retail customers or customer needs. Right? I think need analysis, suitability, these are some of the very important areas where there's a lot of work that has to be done. We are still in the phase where we are digitizing distribution. We are still not at the phase where we do need suitability analysis for the customer. So that's one area where a lot of work will happen. Second, to me, one of the biggest revolutions that will really shift everything in this world is open banking, where you will see customer data, customer information, the customer becoming the owner of data, which is going to be very interesting because banks are not used to sharing data.
Yeah.
Right. So and so the regulators are pushing for it. The customers want it. So there's going to be a lot of innovation in that space, and it fundamentally changes the industry. Right. While we can talk for individual products, but these are core infrastructural thought processes that will shift the industry the way.
Excellent, excellent. So I think we are just on time, maybe 1 minute up. And thank you so much, Meghna, Panagiotis, and Nitin. Wonderfully talking to you, and excellent point of views. I might say we could not pack anything more in 40 minutes than that. And thank you, Anurag and team, and Devika, Talis, everybody for inviting us. And handing over back to you, Bhavna. We are done with our panel. I think you please let us know, if you are good to go, or if any questions from any audience or anybody else. Otherwise, we have done most of it, what we could do in the given time. Yeah. Thank you.
Absolutely, absolutely. Thank you so much, Mr. Seth. What an incredible discussion it was, and a perfect start to the summit in terms of the panel discussion. So I'd really like to thank you, and in interest of the time, because at 12 o'clock Indian Standard Time is when our second panel is going to be starting. So I'd really like to thank all of you for giving in your valuable time today. Thank you so much.
Thank you, and best of luck to the next panelist. Thank you so much from us.
Pleasure.
Thank you.
Thank you.
So ladies and gentlemen, it's going great, and we're right now on our second panel discussion, which is going to be on creating reliable lending infrastructure for personal and business finance. Well, for this incredible panel discussion, we're going to be having our panelists who are going to be joining us. First up, Mr. Shwetang Singh, partner McKinsey, Mr. Gaurav Jalan, founder and CEO M-Pocket. Also, we've got Mr. Shachindra Nath, Executive Chairman and Managing Director, Ugrow Capital, Ms. Hardika Shah, Founder and CEO, Kinara Capital. And this entire panel discussion, ladies and gentlemen, is going to be moderated by Ms. Rashmi Mohanty, Interim CEO and Group CFO, Clicks Capital. Well, ladies and gentlemen, what an incredible round of discussion. It is coming your way. And for the next 35 to 40 minutes, let's delve into this next set of exciting topic. So let's pass on the live baton to Ms. Rashmi for taking it forward with her panel and taking it ahead. And let's have a great discussion. Meanwhile, a very good afternoon, because it's beyond noon, to all our incredible panelists. Thank you for joining us.
Thank you, Bhavna. My video has not yet been turned on. So if you can just please
Yes,
request.
I'll request the team.
Thank you so much.
Requesting our team, our moderator needs to be on the stage shining and bright. Yeah,
Thank
right.
you so much. And good afternoon to all of you. Good afternoon to my panel members. And thank you, Bhavna, for the introduction. So the topic that we're going to be covering today on the panel discussion is how can fintechs create a reliable lending infrastructure for both consumer and business finance? And we've got a good representation here on the panel. We've got Shwetang here who can bring in his industry views on the discussion. We've got Sachin and Hardika here who can give us a perspective as to what needs to be done from an SME finance. And of course, Gaurang to help us out in understanding what needs to get done for, Gaurav to help us out in understanding what needs to be done for the consumer finance business as well. So maybe I'll just start off the panel discussion asking the lenders here, the people who are interacting with the customer, as we went through the last year, it was a very difficult year for all of us, but as we went through the last year and going into March 2020, we were all thinking we are ready with our infrastructure, with policies, everything looking good, and then COVID happened. So in all honesty, maybe I'll start with you, Gaurav. In all honesty, what did you realize were the gaps in the infrastructure that you'd created for yourself, the lending processes? What did you realize was something that you were just not prepared for, besides the fact that there was a lockdown that was announced and there was no business and things got a bit difficult? But really looking at that situation, how was your the whole process impacted? What did you realize as were the gaps that you needed to kind of cover?
Thanks, Rashmi. So to answer your question, I think there were two areas specifically where we really kind of, after COVID happened, looked deep and hard. The first was underwriting and the second was collections, right? So on underwriting, obviously, look, we've been in business for more than 4 years now. So we do have, underwriting systems and algorithms that we've built up and kind of optimized over time. But I think just the magnitude of effect that COVID had and the kind of across the board impact that we saw. Obviously, one thing to recognize when you're building an underwriting system is you cannot build it for these kind of events, right? I mean, a COVID-like event will not happen every time. So you cannot optimize your system for that kind of an event, because then you would just do a very small volume of business compared to what you would otherwise, right? You would just lend to very few people. So that was not the point. But I think what COVID allowed us to do was kind of step back and just think about where the gaps were. Because as you mentioned, I think all of us in this industry, given that we're still, relatively small, building out the market, a lot of time and focus is constantly on growth, right? And so sometimes, we don't get the time to kind of step back and look at what we're doing. So I think, as I said, for underwriting, we actually took this opportunity to step back and look at, what kind of, what additional data points we could use for underwriting, how we could tweak our criteria so that some of the people who ended up demonstrating, a certain kind of bad behavior, we could have possibly detected, upfront through our underwriting. And so that, I think we spent a lot of time doing that. And then secondly, it was the collections aspect, right? So obviously that was a challenge for everyone in the lending business, right? Because across the board, borrowers had cash flow issues. And how to manage that from just a communication perspective, right? Because the volume went up manifold, right? I mean, the number of people who you need to touch base with and the number of people who are reaching out to you for some kind of help. I mean, both of those, figures went up dramatically. So I think where what we did during this period was figure out how to both increase automation, but at the same time, what we realized is that, automation wasn't working that well, because again, people wanted customized responses. So if everyone's getting a templated bot-like response, it's not helping resolve their problem. It's creating a negative perception for the company saying, look, you're not really listening to us. So I think that and what we did towards that end was a lot more kind of training. We actually ended up hiring a lot more people during COVID to handle this increased volume, right? So we decided not to kind of just automate everything and give templated responses to everybody. So it was a difficult, period, but I think we came out of it stronger in the sense that the lessons that we've learned during COVID, some of the processes that we implemented, all of those continue today, right?
Yeah.
So, yeah.
And I would touch upon a very important point about customer engagement, because even for us, we realized that there was a lot of inbound, interaction that was happening. And there was a lot of outbound interaction that we had to initiate in a very different kind of a manner. And maybe I'll come back to that point, because to me, that has changed a lot, or the way we are doing that has changed a lot for us lenders. But I'll come back to that point later. We'll just park it for the time being. But Hardika, your views on what did you realize about your systems, infrastructure, processes, and what did you?
Thank you very much, Rashmi. Look, obviously the pandemic came at a velocity that we did not expect, right? And it affected the micro enterprises, which is the community we work with, the sub 10 lakh monthly turnover customer segment. And for that customer segment, they went into an automatic shutdown. So the point that is being made around cash flow constriction is very valid. Now, in our case, all of our collections per se, first of all, we gave moratorium option to everyone. And so those who took it or wanted to take it, we offered it to everyone, even though the banks didn't necessarily offer it to us. Yes. But in terms of the collections piece, which is one area that we did do a bunch of work in, we recognize that our system of having a last mile distribution with branches and people where the first ACH or PDC fails, could not work while we were in lockdown. And while we had an online system of payment, customers who were in essential services had cash in hand, but unable to pay because the banks were not working. So there we tied up with Airtel payment banks and got access to the 5-6 lakh, last mile retail points, your recharge points, but the customer could just go 4 shops down or 6 shops down and just deposit the cash against his account so that he could maintain his credit as he did not take the moratorium. Now, this is something perhaps we would have done anyways, but what the pandemic did was accelerate how we put in all the infrastructure and the tech in place to do it very, very quickly. So I'll let Sachendra speak so that I don't have all the time here.
Yeah. What was you're on mute, Sachin.
Okay. I would say we were relatively very new to have too much of serious disruption. As some of you might know, that we got capitalized in July of 2018. We started our business April of 2019, and we shut our business on 16th of March 2020. So 11 and a half months of real operation. To some extent, obviously, our whole focus, our view is that one of the challenges which we have seen with respect to digital lending and conventional lender, I think these are two different worlds. And, within my company itself, I have to always struggle with these two different worlds, because at one side, we have these sets of people who come from data analytics, big data, machine learning, deep analytical, and the other side, you have conventional underwriting people who come from banks and financial institutions. And the bridge between them and bringing them together is the biggest challenge. And pandemic actually to that extent helped us, because once you are an operative business, you don't get downtime. And we got a 4 or 5 months of downtime. So that was very helpful for us to what we say is that mission 100% digital. To some extent, we got 60-70% of that. In terms of, how biggest challenge was because as this was nothing, because we had a sizable liquidity and on our balance sheet. So we didn't have the conventional problem of what most of the other lenders were facing at that time. So we offered 100% moratorium to customers. Because of our digital platform, because of our sector focus, we could create what we call early stress scenario for all of our portfolio. We could contact 100% of our customer. And we had a very clear view, we created this mortality index, wherein we knew who would survive, who would not survive. But the challenge was that we were very eager to restart and go back to the customer and provide the support. But the whole methodology in which underwriting is done wherein you look at the historical data, and we don't look at balance sheet, but we look at largely bureau data and others, completely became defunct. And the ability to forecast future cash flow when you don't know what is the end point of the pandemic was a massive challenge, continues to be a massive challenge. I think so. That's the large contrast. And third, which is very unknown, that unlike consumer business, if you look at a consumer fintech and an ed tech or a health tech, you have only two parameters to deal: consumer and the platform. In our lending, actually, we have three things to deal with. Which is us as a lender or as a platform, the consumer, and our lenders. Our lenders actually live in a completely different world, right? And irrespective of how good you are or bad you are, they operate and think and perceive you, in a very different way. They are driven by what the market ecosystem is, right? So they doesn't bother if Kinara has done an excellent job or Ugro has done an excellent job. Something has happened into the system. They just go into retrieval mode. So and then you are stuck. I think so. That's broadly was it.
Absolutely. I think. Thank you. You bring out two very excellent points, Hardika, from your perspective, saying that you were going to implement that, but the whole pandemic situation accelerated the whole thing. Was that you have small entrepreneurs who have cash, but did not have or had to be trained or had to be hooked on to the online platforms to be able to collect the cash. So it wasn't that the customer was bad, it just had to be trained and educated to get onto that online payment platform. And by the way, we at Clicks as well were very early adopters of digital collection modes as early as in March itself. And that was a big focus for us as well in March and April to make sure that the customers, both SME and consumer, have access to that whole online collection mode. And Sachin, to your point that the ability to forecast future cash flows is still a challenge. Absolutely agree with you on that. I mean, even today, if we were to say, do we understand the consumer behavior well enough? Still, the answer to that is no. And maybe I'll just bring Shwetang in here. Shwetang, as you were just discussing, and the way, the point that Gaurav also made, that the whole need for customer engagement, understanding the customer behavior has really increased manifold. And I've myself read a lot of research that McKinsey has done, but what does your studies or your research indicate on what is the consumer looking at? And I'll come to a follow-up question, but let me first, get your answer on that. So this was the lender. We just talked about the lender side of things, right? And then there's a consumer on the other side who's gone through a lot of pain herself. And guy. So yeah.
Absolutely. Thanks, Rashmi. So I think the first thing to acknowledge is that a lot of consumers have come online for the first time during the pandemic. And while there were obviously people who were using online both for everyday aspects of their lives, there's a massive forced adoption that has been pushed across demographics, across business segments, because it was the need of the hour. So we see a lot of interesting insights coming out about when people are going online for the very first time. What are things businesses in general, and then especially finance companies can do to make life easier for them? And one of them is around the fact that a lot of them would like finance to be embedded as much as possible in some of their end use journeys. So if they're actually if it's a consumer, they're actually shopping online, it becomes very inconvenient for them to actually go offline and or go to a separate app and get that credit. To the extent possible, credit can be embedded and converged to their point of use is very important. Similarly, for businesses, like the ability to access and avail that loan is important. But the more importantly is the ability for them to share some of the data that they have, which is in the offline world, it's stuck in paper, or they're not able to communicate that effectively to lenders. Making that possible is something that is going to be very, very important. And anybody who can actually do that, overcome that barrier, will have that edge. And we see a number of interesting plays. The other thing that will happen is that this is also an area where there's a frequent amount of mis-selling, or not necessarily mis-selling, but some confusion about terms, conditions, etc. So anything that can actually make life more transparent for customers and give them the right tools to evaluate their changing financial situation and what that does mean for their obligations to lenders is also going to be well appreciated. And anybody who can take that trusted route to them be that point of access where they can objectively evaluate what are the options in front of them will also be something that consumers will like. And this is something that the need for this will only grow in the future as you see this first wave of consumers who are online for the very first time exploring a digital lending product. So let me pause there on those two key themes. And
Yeah, no, I think you make a very important point about customers understanding the terms and conditions because, and I'm sure Sachin, Hartika, Gaurav, you'll agree with me here that there have been provisions by the RBI in terms of trying to help the consumer. But for example, in case of moratorium, many of them didn't even understand because for a consumer, like while a company or corporate knows what a moratorium is, Gaurav, you will agree the consumer had no idea what a moratorium means in that sense, right? So they had to be educated to tell them, come take it, it's for your good. And now on the restructuring, it's the same thing, Shwetang, that we are facing with our consumer, with our SME clients. You've got, for example, we do school financing. We've got schools are saying schools are opening up. I don't need restructuring. And then there are the other conservative lot who got enough cash and saying, I don't know what's going to happen. Give me the restructuring, even though they don't need it. So I totally agree that we as lenders and all four of us will chime in here that we've also been advisors in the last 8-9 months to our customers to make sure they access the best product that's available in the market. So Shadang, you're absolutely right about and laying out a bit of a framework around what is the consumer looking for, because finally at the end of the day, we will be driven by the consumer demand. Now, one point that you made was that finance should be embedded in the consumer journey itself, and that requires lenders to be very quick in their decision making about whether this is a customer they'd like to work with or no. So, what kind of consumer behavior parameters or features that you are seeing firms use these days to make these decisions? Where can we pick up these data points from? And more importantly, as you pick up these data points from various sources, where does this whole thing about privacy regulations go?
yeah, no, absolutely. I think the fundamental debate at this point is that how do you make the trade-off between privacy versus convenience? Because if you and that's going to be, I think, a trade-off that will be present not just here in India, globally, and everybody people have to make that choice. But and I think the regulators would be best placed to actually balance out all the trade-offs that actually come with that. But maybe I answer the first part of it, that what are some data signals that are aiding lenders. At least we see that some of the lenders are actually using it, and I'm sure the folks on this call will actually share a lot more detail about where they see it. But what we see is that as more and more consumers are actually coming online and some online behaviors are getting formed, the reliability of the online indicators is going up. So, for example, if you're basically trying to embed consumer finance in a commerce platform, and if the commerce platform is willing to share details about the address of that customer, to some extent, you can use that address where 5 deliveries historically may have been made in the past as proof that, yes, this residence is confirmed. And then you may take a probabilistic call to say whether you actually need a certain amount of KYC to be done or not. So that is an example of how some of this data on this platform can actually help underwrite and help even figure out risk and fraud. Uh, some of these commerce platforms also have payment instruments that people have historically used. If you can look at what these payment instruments have been, they can give you a bit of an indication of what that affluence is. So the answer to this will differ based on what journey and what platform you're talking about, but there will be user behavior data that is actually going to be additional incremental signals which the lenders can use. Similarly, for small businesses, I think the age-old holy grail is to try and convince a lot of their small businesses to try and route everything digitally. I think we've seen the P2M UPI transaction share actually increase a lot. Now, as you start getting more and more of the turnover routed through a digital means, the confidence of a lender to rely on the signals that will actually come in will increase over a period of time. And then to that extent, how granular is the information about those payments shared will be the other piece that somebody who's lending on the business side will find far more useful. I think the one thing which I would like to say and add over here is that some of this alternate data may not be the core basis of underwriting. At least what we have seen is these are great add-ons to increase the Gini or the reliability of maybe what would be at the heart of it, a more conventional cash flow based estimation. So unlike people relying and thinking that alternate data comes in and we base the full decision on that, maybe for a small segment of customers, but for many, it will be the enhancement drive the unlock on access and better risk monitoring on an ongoing basis.
No, that's right. And Sachin, back to your point that you also struggle in your organization between the conventional underwriting ways and using big data analytics. How are you trying to marry the two? How are you trying to work with, using both sources or only one source to set up a more, well, for want of any other word, stronger underwriting processes?
Yeah, so I think so. Rashmi, I'm not a lender. I've never done lending. As you know, I'm a jack of all, master of none. But I think so. Being generalist actually help because that you can actually take a balanced view. As you know, you would experience this. Generally, the credit and underwriting team come from this background that every borrower is an intentional defaulter. That's the starting point from where you start.
Yeah, we struggle ladders on that.
Absolutely. Yeah. But that's the wrong thing to approach, right? Because, we still have, only 5% of the, default rate across the industry if you take out the frauds, right? So which means that out of 100 cases you underwrite, only 5% default. So and of that, half of that would be default because of the stress of the business and not really intentional default. We as Indians don't borrow to not pay back, right? I think that's the intention. So that's the first thing. Second, if you look at it, I'm talking generally the micro SME segment, one of the reasons is that we all have looked at historical information and want to underwrite on the basis of that, and which is not available, we resort to what we say, give me the property and I will underwrite on that basis. Now, that is no longer sustainable, right? So that's why you have to constantly think. And third, actually, it is about letting people know that there are sets of data, and the way industry is transforming. Day before yesterday, we presented to all over the world on this GEM Sahay financing platform, which we have built along with the GEM and the Government of India. Fact is that once we call it virtual profiling. If you have access to somebody's banking, if you have access to somebody's GST, and I'm obviously talking about formal set of customer, not the customer which Kinara would serve. With these two things, you can create actually a virtual profile, right? Because everything which that customer does, you can pull out, and basis that you can profile. And if you couple that with bureau, which is currently different, then actually you don't need anything. So that is possible. It is about people adopting. And second, I think so where I struggle. If you go too much towards that direction, which I call the futuristic direction, the first spectrum or first stakeholder of your business, which is your lenders and rating agency, have no acceptance of that.
True.
So in order to even satisfy them, you have to remain stuck into this, virtuous cycle of showing that you are as conventional as anybody else, showing them that you have a portfolio which is more secured, showing them that there is a collateral available to that portfolio. And unfortunately, there are certain number of lenders which are positioned as only fintech. They did such a bad job that when it comes to fintech, so we avoid, the last 3 months, this has been somebody, I think some Hython Security wrote about us saying we are top 3 fintechs, listed fintech in Asia. I got scared. I said, now all public sector banks would stop my lines saying, oh, Inaugural has become a fintech, which means it is scrupulous, ridiculous, and, not careful lender. So we went into overdrive to tell, no, we are not fintech, right? We are like any other lender, right? We also take property. We also go and meet customers and lend. So that's the challenge. But I think so we are, and that's why I say pandemic actually, all changes happens because of some form of an external force. So when pandemic happened and we wanted to create this, what we call stress portfolio analysis, everyone said, oh, we can't go and meet customers. How can we tell you that whether the customer is in stress or not? And finally we came, no, that's not true. Given that we only do business in 8 sectors, we have a macro data around sector and subsector. We said, let's create a digital profiling questionnaire. Let it go to the customer, support by a customer calling, let customer fill that pro forma form. And basis that we create what it is looking like. So I'll give you one example. Generally, if you say lending and if you talk about hospitality, it is no for everyone, right? If you talk about education, it is no for everyone. our data and our analysis. So that's not true actually. So we created this mortality index, right? Which business would die down in next 6 months and which business would survive. Within hospitality, banquet hall has a 90% mortality rate. Fast food chains have only 10% mortality rate. Actually, their cash flows are going up versus banquet halls cash flows are going down, right? All form of education which have any form of digital adaptation are actually generating more cash flow, right? So I think so some of this is you have to constantly prove we all do these things. It's not an easy journey, but I think so there are, a few things. Our challenge is to keep external portfolio look like, which is like a conventional lender, but still do that good job. That's where we are.
Hartika, while in case of Sachin, he still can access some historical data with the kind of customers that you deal with. In many cases, that's also not available. So how are you? How are you using consumer? I mean, Shwetang's talked about a lot of things in terms of what's available out there. What are you doing about it?
Yeah. Look, I want to come back to a point you were making earlier, because there's a real connect here about not as a lender lending to segments that are not in the traditional fare. For us, we do collateral free, property free loans. 100% of our book is property free. And in that scenario, we have to take the extra step of building out the customer engagement piece, helping them understand, which is one of the things you were trying to talk about, like what is moratorium? Moratorium is not it's not a waiver, it's a moratorium, right? Something even as simple as that. We have been doing customer meets for a long time, and we have a Grow with Kinara series. And during the pandemic, this series ended up being a digital series. But what we recognized in having done this work for several years is that while it is true that our customer segment tends to be more informal, what we are also seeing is that they are moving towards formalization. So GST, for example, when GST first came out, and we do constant surveys of our customer segment, maybe 5, maybe 7%, because they did not need GST certification to do their business. They fell under that 75 lakh, 1 crore marker. It's about 5-7%, had GST. Today, that number is more like 45%. And that's in a span of a few years. So we are seeing this move towards formalization, even in the micro enterprise segment. And and that's a combination of education, what is the value of doing that, and how they can then access certain programs. And also it helps us, and in terms of the evaluation, at the end of the day, if the formal data sources are limited, then those limited data sources need to also include the micro enterprises in some of the other fashion. So on one side, we try to do that with GST or banking, like any other lender might. And on the other side, we bolt on this last mile distribution. So we have 110 branches in 6 states, and our customers are only in those geos. And so we then bolt on physical access to those customers, meeting, understanding, going through their actual cash books, etc., as a bolt-on to the data, to the digitization of their data. And the decisioning still remains, entirely algorithmic. The decisioning remains automatic, but you're trying to do a blended model between available data, source to data, and then, add-on data as well. And that's how we've been looking at the space where, while Bharat is becoming India, it's going to take a little bit of time, and we are ahead of that, but we are making sure that we have, sorry, someone trying to say something? Oh, okay. We're trying to get ahead of that, and also making sure that we have, a way and a path to service customers who are on that formalization journey also.
Right. So yours is still a lot more of a touch and feel. Right, at this point in time, moving towards digitization, moving towards a phase where a lot of this data is out there available for you and then can be used. So you're on that transition path, as you say, at this point in time with your customers.
Yeah, I would say we are actually already there in a blended model, right? So we start with what is available and automate the decision, and if that works for what the customer needs, then it can. Our lead to disbursement time frame is 3 to 4 days, so it can be really, really fast, even though it's a micro enterprise loan in a 3 to 4 lakh segment, right? The flip of that is how do we get further down, further that turnaround time further down, and that is about this formalization that is happening and will continue to happen even with this segment.
Right. Yeah. Gaurav, your views on the consumer side, individuals, and there's a lot of data available on individual consumer behavior out there. Sometimes it makes life easy, sometimes it just makes life very confusing in terms of what to do with that whole host of data available. So your views on that?
So
And
Rashmi, I think
how can you use it for creating that kind of an infrastructure and change your underwriting policies, etc., for yourself?
So Rashmi, our approach as a company and how we've come at the business has been a fully digital approach right from the first day. So we've chosen the segment where, we'll have the data points available that we need to offer a fully digital offering, right? And that is why our product is also designed to be kind of a small ticket loan, right? So we do not take large exposures because we're not doing some of the traditional underwriting that you still need today if you want to, underwrite larger size loans, right? So interestingly though, I mean, what we found is that, the traditional kind of cash flow underwriting versus the alternate data underwriting, I mean, to take, Shachindra's classification, I think that's apt at a high level. So what we've actually found is that for us, the alternate data is fairly reliable. And actually that accounts for the bulk of our decisioning in our models, right? So, and over time, that's kind of kept improving as we've experimented with more and more data points and kind of got more data, refined our models. So I think at an individual level, when you're lending to individuals, this data, works fairly well, right? So, yeah, I mean, that is our conclusion. And I expect that that ratio will only keep improving with time, as we get more information and again, here, I mean, this, what Shwetang was talking about, the trade-off between privacy and kind of convenience becomes all the more apt, right? Because if I'm saying that the majority of my decisioning is coming from alternate data, then if I don't have access to that data, I cannot do that underwriting, right? So I think here, I mean, obviously, ultimately, it's going to be a policy decision, and the regulators will kind of decide, what that balance is going to be. But I think generally a principle of informed consent along with transparency. So as long as you're conveying to the customer, what information you need, and as long as you're getting their informed consent, I think that becomes critical, right? Because ultimately, then without that, you're back to the traditional tools, right? I mean, give me your bank statement, tell me what your salary is, and I'll give you a loan based on that, right? So
I'll give you a loan 10 days from now or 15 days from now then.
Exactly. Yeah.
Okay. All right. We're kind of nearing the end of the session. So maybe I'll just do a round robin here, ask you all two things that you're working on in your organizations to make sure that you do have a robust, and it could be any of the areas. It could be in the areas of collection. It could be in the areas of underwriting, customer sourcing. So any two things that you're doing differently today than in February of 2020. Sachin, can I start with you? You're on mute, Sachin.
First is working very, very hard. All right. So I think
goes without saying. I think we're all putting in extra hours these days. Absolutely, portfolio.
Second, I think so that I am very convinced that our aspiration and mission of, our view is that if you have to, serve MSMEs in India, you can only do when you do it in size, right? Because otherwise, it is such a large gap that you cannot be a meaningful, and player and cannot create impact. So our mission is to take 1% market share by 2025. And that's very small, but in absolute terms, it is roughly around 25,000 crores. And to do that, I think so we are, this 4-5 months of downtime actually gave us time to think through hard in terms of creating partnership, expanding our physical reach, accelerating our liability side and convincing lender that why we are good. And now we are executing that. So I think so any gap in terms of our strategy has got completely filled. we know what we have to do, and we know that we cannot get to that size if we just focus on just one small segment. That's why we focus on right from 1 lakh rupees loan to 2.5 crore of loan. Not that everything we have to service on our own, and that's why we're creating this what we call a multi-channel distribution platform for that.
Okay, thanks, Hardika.
Yeah, so the two things, one that I was mentioning before that surprised us was that our customers are getting more online, more digital. And so what we are doing and recognizing that while they're getting digital, what they really want is vernacular tech. And so what we've been working on is vernacular tech to engage with them, both on on digital platforms and also on our platform. So we bring them to us digitally, but using vernacular tech. And that's something we are doing that's different from what we were doing a year ago. The second thing is what we're doing, what we were already doing a year ago, but doing more of it, right? I feel like this year has really put a spotlight on MSMEs far more than ever before. And within that MSME, or at least the micro enterprise segment, the collateral free segment is getting further left behind. And how do we drive financial inclusion of this segment, which is something Kinara has been doing for the last 8-9 years, but we are trying, we're finding new ways to do that, including special programs for women entrepreneurs. We already had one last year called Harbikas, which was for women entrepreneurs, and now we have actually committed more capital, including a bond, just for women entrepreneurs and livelihoods for women entrepreneurs. So for us, the focus remains on financial inclusion. Focus remains on this micro enterprise segment and driving more businesses to stay, to sustain as we come back from this pandemic into hopefully the V-shaped recovery that we are all expecting.
Okay, thank you, Hardika. Gaurav, what about you?
Yeah, so I think two things that we're working on. One is building out a kind of bigger and diverse portfolio of products. And by that, what I mean is, different customer segments and offering them different types of products to serve their needs. The objective behind that is twofold. One is to increase the addressable market that we're going after, right? And the second is to actually, mitigate kind of business risk, right? Because again, in this business, you have a lot of external factors that can affect the business, both in terms of the macro environment and also policy, right? So I think both of these can have different effects. So in order to mitigate that, we're working as a company to build out a kind of larger and more diversified portfolio. And secondly, what I touched on earlier in terms of customer engagement, right? So I think that is something that got kicked off during the pandemic, but it's something that we're focusing on very keenly now, which is how do we have better communication and engagement with the customers so as to help them at all parts of their journey, right? Whether it's at the point of onboarding them, whether it's at the kind of, underwriting stage, so that customers do not go into default status. And then also during collections, right? How do we engage better so that the customer has a better experience and we as a business can have better outcomes? So I think for us as a company, those are the two things.
So I would just rephrase what we heard from three of you, and Shwetang, I'll come back to you to summarize that point. But I think one thing we are hearing, what Sachin said was scale and size is important. If we have to create a reliable lending infrastructure, you just cannot be standing on the sides with some small numbers. So scale and size is important. Hardika, your point about customer centricity in terms of reaching out to them in vernacular language, so that, and linked to what Gaurav was saying, that there has to be customer specific programs, products that need to get created. And I think Sachin also referred to that as well. And the whole thought of we've lent the money and we'll just go back and meet the customer when the money has to be taken back, or if he defaults, is over. That whole theory is over. That whole customer engagement is now has to be done through the entire loan tenor. It's through the entire journey from onboarding to, even if the guy has a moratorium, you still need to be in touch with them to know what's happening with them. And that's what's changed for all of us lenders. And I think we realize that that's what's required to make sure that we do have a strong lending infrastructure in place. Shwetang, anything else? Last words from you. Anything else that you think the lenders should be mindful of? I mean, you've spoken about customer, and customer is the king. And by the way, Sachin, I did not bring up the point about lenders because I'm sure if I had brought that point about how lenders are important to create a reliable infrastructure for us, the conversation would have never gone into other areas. But Shwetang, last words. What do you think?
I think firstly, I agree with all the four comments that have been made by all of you all in terms of what the focus areas are. I think we're on a multi-decadal increased penetration of lending story in India. I think the only other thing which I would think will probably have fundamental impact on how business is done is the speed with which we adopt some of the interoperability enablers like account aggregator and Open, which will allow data to actually flow and will reinvent some of the business models. We did not touch that, but I think it's uncertain at this stage how far out that is. But I do feel that over the course of the next couple of years, that will also reshape a lot of the business models. So that's probably the only other point, and it is actually good for the ecosystem and the customer as some of that comes in with all the other mega trends that we've talked about.
Perfect. Thank you so much. And thank you everyone for joining in and with your views. Bhavna, back to you.
Thank you, Rashmi. You have been a great host.
Thank you, Sachin. Thank you.
Thank you all, and thank you, Rashmi.
Thank you for joining us. Well, ladies and gentlemen, it's been going great, and now we move on to our next panel. I hope you all are having a great time as we move on to our next panel, which is going to be at 12:40, and we just extended a little bit on the time. It's of the Fintech User Experience Chat, and we've got our panelists, Mr. Abhinav Trivedi, Managing Editor, BWTV and Digital, Mr. Niranjan Singh, Managing Director, Nature Minds, Mr. Ved Shukla, Founder and CEO, Minomart, and this entire conversation is going to be led by Mr. Prasar Sharma, Strategic Initiatives, BW Businessworld. So ladies and gentlemen, with this, I'd request our upcoming panelists to please put on your video cameras as I can see you all, and it's time to now bring you on the stage and screen. Prasar, time for you to lead it forward. Thank you so much.
All right, thanks, Bhavna. Appreciate the introduction, and good afternoon to all the panelists, Abhinav, Ved, and Niranjan. It's good to see you. Today, what we're going to do is just go around the table, talk about how fintech has impacted our lives, especially over the last 10 years. Why we'll talk about the last 10 years, and with a focus on India, is that 2010 marked the setup of Aadhaar in India, which essentially is responsible for the big boom that we're seeing in fintech today. I remember, and this came up in a couple of panels yesterday as well. I remember reading an article about maybe 10 or 12 years back, which said that a country like Pakistan, whose economy was and is still floundering, had more mobile payments than India did, right? And at that point of time, we had every possible a gap or challenge that the regulator or the government could put forth. That was kind of coming in our way. Over the past 5 or 6 years, of course, we've seen the digital stack, which is known as the India stack, come into play with a host of APIs, connectivity, and various other initiatives, culminating in the rollout of the JAM Trinity, Jandhan, Aadhaar, and mobile. Which is kind of and with services like UPI being built on that, it has seen a huge spurt in fintech, right? As users from different perspectives, you've seen how fintech has impacted your life, and I think we're going to spend the next few minutes, trying to understand each of your experiences. What are the opportunities that you see? What are the challenges that you've seen? And so that we can give the audience a flavor of how fintech can impact our lives. So just to kick off, what we're going to do is, if for the benefit of the audience, you can just introduce yourselves and talk a little bit about what you think of how this whole digital revolution, especially in the fintech space, has affected you as users. I'll just go by the order I can see you on the screen, so no biases there. So I'll just kick off with Abhinav, who's popping up on my screen first, and then we'll go to Ved and Niranjan. So Abhinav, if we could hear a bit from you, then we'll move on to the others.
Thanks, Prasad. Thank you so much. Now, I don't have much to add here, because fintech is such a vast beat in today's day and age that, and this the story was entirely different a year ago. I remember when COVID had struck, a lot of people were reluctant in using payment apps. And with the moment COVID surged, there was a surge in the number of downloads of the payment apps, be it Paytm, Google Pay, or other players. But as the time has elapsed, and with the Narendra Modi's vision of making India digital, this is the first budget which was recently presented in the most in the digital only format. What is expected is that more and more people will join this fintech revolution, especially youngsters, because it's handy for them. Of course, there is a challenge in presenting the same case study to the elderlies, but as we go forward, I see more and more people jumping onto the fintech bandwagon because firstly, it's handy, it's safe, and thirdly, it is quite easy. And this is from the demand side. From the supply side, what I see is more and more fintech players, and especially startups, jumping onto the bandwagon, and not only in the typical banking and financial category, but also in the asset management category. It's a good data collection tool for them. So it matches both the demand and demand and supply side. So I see only positive growth for them, for the fintech, especially in India, per se.
Great, Abhinav, thanks. But before we move on to Ved, just for the benefit of the audience, if you could give a quick background of yourself so that they know who they're hearing from.
You're talking to me, Prasad?
Yeah, Abhinav, I'm talking.
Okay. So I'm the managing editor at BWTV and Digital. I lead the video initiatives here, and a lot of videos you'll see my ugly face on Businessworld. So apart from that, we try to simplify business and financial content. We try to connect the complicated jargons which the financial world has and the other sectors have, and try to make business content as much quirky and as much consumable for the youth in their language. So yeah, that's what we do.
Sure, I appreciate it. And it's good to know that you bring your other ugly face to the videos, because you seem to have brought the better one today to us. So, let's move to Ved. Ved, let's hear from you. If you can just tell the audience a little bit about your background, and obviously, given your initiatives in the B2B space, I'm sure fintech has given you a lot of advantages over the last 1 year, especially, but definitely over the last few years. So let's hear about that from you.
Yeah, of course. Thank you, Prasad. Thank you for BW team for inviting me here. Really honored and privileged. As far my intro is concerned, I am looking after a startup which we have built from scratch, which is into the local e-commerce domain. So, which is called Milomart. Essentially, we are connecting the dots between the online consumer and the offline retail. So, and I have a background in marketing and sales and media and trading and other stuff. So that's how it is. Regarding fintech, Prasar, I mean, there are two things to the whole India fintech story as I see it. One is that the internet and the digital evolution and the overall ecosystem evolution, how it has evolved over a period of time. Especially since 2014, when the government came and did some disruptive decisions. And of course, the UPI and the Aadhaar and everything. So the digital railroads, which the government has managed to build, on which we are all running, right? So the interesting part is that, it's very relevant to tell here. Share with you something which I was hearing in one of panel discussion where Mr. Nandan Nilekani was there, and other renowned people who are responsible for this revolution. And then, so they said, there are 4 internets in the world. So everything is digital and fintech is running on internet. So they said there are 4 kinds of internets, right? One is the US internet, which is responsible for building these high deep tech companies like Google and Facebook and everything. Then there is the Chinese internet, which is firewalled, right? It's very hard to get in and very difficult walled space, which managed to build companies like Taobao and Alibaba and stuff like that. And then there is the European internet, which is very, very regulated, so it's difficult to build stuff there, and then comes the Indian internet, which is like, more inclusive, more free, right? And I mean, a lot of opportunities. So the kind of internet India has, gives us a lot of opportunity to build. And then that's how we have seen this fintech revolution, which is like really steamrolled even before COVID. So when the demonetization happened, after that, Paytm became like, that was the aha moment and the defining moment for Paytm and the fintech in India, I guess. Because prior to that, we had, with our startup, we had been trying to integrate fintech in our system, but it was very difficult. There was reservations, and as Abhinav said, that people were wary of how to use and why to use because of the security issues, and there had been cases where people had been robbed of their things. So I mean, it was very difficult, and the retailers, from my perspective, the retailers were very wary of coming completely on board online, because there are a lot of these deals which were happening where this was like I mean, the wholesaler and the retailer, we all know how the purchase culture used to work. So there was no accountability, no, transparency into the whole system. So I think with these two things, I would like to conclude that we have an inclusive internet. We have a resurgent Indian youth, which is very entrepreneurial in nature. So, and then we have the digital railroads, built by the governments, where UPI come in, and so there is huge opportunity for local entrepreneurs, Indian entrepreneurs, to build on that, offer services, not only payment services, but as Abhinav said, various asset management services. And one more thing I would like to point here is that, India is now moving into the different kind of loan disbursements and credit stuff. So we are now would be a micro credit economy, right? So micro credit would be very high, where small ticket sizes, like something like a cash flow loan, or even to buy stuff on EMI. I mean, that would be things of the future. I mean, coming forward, and especially post pandemic, when, as Abhinav said, that and as Prasad, you also pointed out, that during the pandemic everything changed. The habits changed. I mean, we were never thinking of being online, were online. Not only the younger generation, but the older also. And these habits are going to stick, right? They're not going to go back. That okay, fine, now I'm going back to my cash thing. So humongous opportunities, humongous. I mean, way forward on fintech. I'm very optimistic about it. Thank you.
Excellent, great way. So I think we'll move now to Niranjan. Niranjan, you have been part of a more traditional business. Although I do know that you've been working very closely with some modern business as well. But I think in terms of being a user who's deep into traditional businesses, if we can also hear your thoughts in terms of how you've seen, especially interfacing with government, interfacing with other players in your business, how the evolving digital ecosystem and the fintech platforms have impacted your life. So if you can just give a quick overview of your background to the audience, and then tell us a little bit about your experiences over the past few years, then we'll kind of open it up to the other talking points. You're talking on mute, Niranjan.
Unmute yourself, Niranjan. Unmute.
Unmuted now. I think we should be able to hear you. No, I don't think we can hear him. You're back on mute, Niranjan. You can see.
Niranjan, you're back on mute. Yeah. Now we can hear you. Speak.
Yes, we can hear you now.
Sorry for this. Not a very technical person. As a work in field, so I know
Issue with the audio, sir.
Sorry, Niranjan, I think there's still some
audio
issue with your audio. Voice is very faint and far away. So maybe if you can use your headphones, possibly. No, it's gone again. Niranjan, so maybe we will just quickly circle back to you in a bit if you can just check on the audio. We'll quickly circle back to you because we can't really hear you. Okay, can you try and say something right now so that we can just quickly check? No, I don't think it's working. So anyways, let's come back to you. So I think Abhinav, when you were talking earlier, and I think it's been a little bit of a theme in what Ved said, and I'm sure it would have come the same way out of Niranjan as well. COVID has made a huge difference, right? Earlier, I was talking to somebody, and we said that technology is disruptive, but sometimes to get technology to be adopted, something further disruptive needs to happen. It happened once before when we had demonetization in India, and irrespective of whether people have a positive or negative view of it, it did lead to a lot of adoption of cashless and digital payments. And likewise, COVID, right? We've seen it's gone far beyond just payments, right? Even lenders, for example, are doing cashless digital processes. So as an end user, A, and B, as somebody who's also on the side of the media, educating and informing the consumer about the developments in the financial and fintech world, how do you see specific instances that have made your life positive from this perspective, and what are the challenges that you're still seeing which we need to overcome?
Well, since I am in you'll see me on the lobby which is supporting fintech. I'll talk of challenges first, and then the good picture later on. The biggest challenge is Pasar, of course, because it's not technology which is a concern, it's finance in the end. You're talking about people's savings, people's deposits, and people spending money and doing transactions. So the biggest concern which people still have and are still reluctant to adopt financial technology, and I'm talking about the demand side, it's security, it's financial security, because we're also seeing more and more cyber crimes being reported as fintech adoption increases in the country. We are seeing a lot of cyber crimes being reported. So security, of course, is one of the concerns. And security is not only confined to the elderlies, but also to the youngsters, who are using a lot of payment apps. Secondly, fintech has a very deep penetration in the NBFC and the banking category. But when it comes to asset management, the use is very confined. The asset management industry is still yet to explore the advantages of fintech. And we are also hosting one more panel discussion in the evening on a similar topic of financial technology and asset management. So when it comes to mutual funds, the adoption is still slow, but otherwise, so far and so forth, we are on the right path. And also government has been supporting digital transactions, digital innovations on a big scale. Startups are being welcomed. There are concessions given to startups. So overall, the environment is positive. Like I said, the challenge is, of course, security. But going forward, what I see is, Prasar, wherever there is a boon, there is also a bane. Okay, and like I said, when it comes to cybersecurity challenges, there are also a lot of micro players who have come up who give a lot of unsecured loans with minimum KYC documents and minimum security check. And there have been a lot of frauds which have been reported in the past few months and years. So the biggest concern or challenge which I see going forward is, of course, security and the legitimacy of the companies. We have a lot of fly-by-night companies operating in this space as well. But like there is a bane as well. So fintech is handy, it's advantageous if the industry can address the concerns of security and, of course, having an entry barrier so that no Tom, Dick, and Harry can just enter and start a fintech company. I think fintech will be adopted very fast in India. What India has shown in the past is that we are slow adopters of technology, but when we do, we get there very fast. So yeah, that's an overall mota moti what I think about the user experience.
Certainly, but Abhinav, if you could, for example, give us some, some anecdotes or some incidents that you may have seen of how, whether it's in your life or whether it is in the lives of people that you interact with, where fintech has made a substantive difference, right? Obviously, we see a lot of anecdotes in terms of, financial inclusion, payments becoming easier, for example, lending becoming easier. But how, have you seen any specific profound impact, maybe one or two examples where, just the whole experience of utilizing a particular service has changed, and that's changed people's lives for the better, whether it's your own or people that you've seen experience that?
I won't say from the demand side, Prasad, but supply side, definitely. I mean, the people who have adopted digital payments as a mode of acceptance, like a lot of retail shops, ration ki dukane, chote businesses who used to earlier operate on cash, them migrating towards digital mode of transactions has not only helped them survive the COVID pandemic, but also helped them adopt a lot more new customers. So if I see, and there are millions of case studies across the country, even मेरे घर के नीचे जो रिटेल की दुकान है अभी, I mean, they never used to accept card payments, and now they have all kinds of payments being accepted at the front. So if I see a rampant change, it is on the demand side. So the supply side. People who have been accepting digital payments as the mode of transactions, their life has quadrupled. I mean, they find access to consumers which were not even there in the ambit earlier. So if you ask me some specific, I cannot remember one or two specific instances, but overall, if I have a collective look, then definitely small businesses have benefited a lot. And by a lot, I mean the volume has been more than the pre-COVID times after adopting the digital mode of transactions. So yeah, that is one area where I would say that life has changed for these small retailers and small businesses post adopting financial technology.
Yeah, that's a great perspective. Yeah. So I think, picking up from that cue, where I think, given that you interact a lot with, the shopkeepers, small level suppliers, right? Or let's say street level suppliers. Have you seen COVID change? Because, I do know we had some conversations and, you were seeing adoption happening, but there was also certain resistance, right? Have you seen both the adoption going up and resistance falling? And, on what account do you see those benefits accruing to the stakeholders that you're interacting with? And how much of that has been a COVID driven one, and how much of it has been just because we have now so much better digital and fintech stack in the country?
As in any industry, right? What had happened is that I was just reading a report yesterday, which said that the kind of e-commerce growth US had seen in last 10 years. I mean, this is really crazy. The entire level of growth which had happened in 10 years happened in just 3 months, right? So I mean, COVID has completely it had accelerated and cut the time frame of digital adaptation by at least 10 years. So something which would have happened 10 years later had happened today, right? Or yesterday, as of yesterday, because of the COVID. So that is the kind of massive impact COVID has had, right? And obviously, the supply side, the retailers, the small businesses, the kirana stores and the corner stores which we deal with, by design and default had to adopt to it. So that is one. But essentially, as Abhinav was saying, that demand side, this had suddenly happened and started happening post demonetization itself. Right, the adaptation on the fintech bandwagon. For example, traditionally, even a local grocer used to give credit to its, nearby families. Now, I mean, what had happened is that there is companies like OK Credit, right, which just give the backend to the supplier, and the supplier can actually upload everything every family's detail and every transaction detail is doing there, and then there are automated SMSs going and collections reminders going and stuff like that. So there has been a lot of these kind of innovative startups which have come. Khata Book, if you have heard of, right? Khata Book is like something which is like humongous adaptation with the this retail segment, these small guys. So of course, I mean, this is like one is it is because of these two major events in terms of the disruptions which happened in our lives, the demonetization and the COVID, and in overall, because as I earlier said that because the government has been very, very proactive, and with Aadhaar and UPI, the railroads are there where everything can be built, right? So, our agile entrepreneurs have built stuff where as the suppliers and as consumers, we are happy to use it, right? So, I mean, as Abhinav said, we are very, very positive on how things are going to go. There are certain flip sides, yes, of course, and I think that government will slowly and gradually control, because regulations come as soon the industry evolves. So it is bound to happen, right? And if the government is thinking right, then all those kind of disparities will not come in, as in where the 2008 meltdown because of Ninja financing. I mean, I don't think India is going to see that. So let's see.
No, so yeah, I think that does make a lot of sense. But I think the audience also might be interested in hearing a little bit about in your conversations with the stakeholders, especially the retailers and the other B2B players that you deal with. How have they benefited from see, look, I think the one issue that we've seen in India, and all of us will acknowledge, is that there has been reluctance. And Abhinav spoke about the fact that it's driven by a sense of risk about your own money. But there's been a event which has driven adoption, and now that they've adopted, are they seeing certain specific benefits that they didn't realize that they were getting earlier? Maybe the fact that they don't have to give credit to the nearby families that you were saying, right? Somebody is now using a credit card, doesn't need to ask the grocer for credit, right? Or in terms of being able to get better credit from their suppliers because they have digital payments. The government is already incentivizing digital payments, right? People who are taking up digital payments are also in our just previous session that just ended. Somebody was telling that in their interactions with a certain type of stakeholders, the adoption rate of GST has gone up from 8% to maybe 45% in a matter of a couple of years or 3 years, right? So obviously people coming into the formal economy have access to better credit. So in your conversations with these stakeholders, what is it that you're hearing that's kind of emanating positivity?
Okay, so first thing is that there are very barriers, initial barriers from the supply side. I'm talking about from the small MSME merchants and these retailers, which we are now discussing about. Earlier and retailers when they are running at, I mean, small businesses when they are running at very, very low margins, for them even a single penny counts, right? So initially, they are very reluctant of using the credit card or the wallet or something like that, because the MDR rates were very high, right? I mean, as compared to today, they were not that high. Okay, I mean 1.5%, 1% or whatever, right? So I mean, credit card they used to take, but only because okay, fine, they had the consumer wanted to give it, right? But with now zero transaction fee kind of a thing, where as you rightly said, Prasad, that government is also promoting it, and it has become seamless. It's not that the bank is remitting back to them. It's like now we are moving into a direction where it is direct bank transfers, right? So if I'm taking a payment, I'm a retailer and it's coming to my bank directly, and I'm not being charged for it, I'm happy to take it, right? So that way the adaptation has really grown, and these are the barriers which have been broken to do that. So I think it is a very good thing for everyone from my perspective, yeah, as I see it.
Great. So I think we seem to have Niranjan back on the call. Niranjan, welcome back. So, we'll come back to where we left you off, although we've had some, additional discussion between Abhinav and Ved since then. But yeah, if quickly you could give the audience an overview of, what you do and, your general views in terms of how the experience of dealing with both the government and other stakeholders has changed with the evolution of fintech and the entire digital revolution.
Hope I'm audible now, Prasad. Thank you. Sorry for that technical glitch we just had. So I had to, instead of MacBook, I had to put my mobile. So I think
those are the times that we are living in. We are all digital, but we are also digitally handicapped. So, I think everybody appreciates that.
We'll talk about it. We'll talk about it as well, because right now we are talking about fintech technologies, which have been helping people worldwide to have easy payment, cashless payments, or still to be secure payments. They've been trying their best. I would like to brief about my introduction. I've been after doing my master's from abroad, somewhere people try to get their best education from. I worked in an environment which was 20 years ahead than us in terms of developed nations. I got a chance because of my parents. So after working there for 5 years, I thought I should go back to India to look after my family business also, and to see what I can do for my country. हर किसी के अंदर जब वो बाहर होता है तो थोड़ी देश भावना आती है. And once he's there, and then he realizes, oh, there are certain situations, those are not favorable, and this is positive, this is negative. You start evaluating on certain things. So my first business project was a business school. It gave me have a company of a lot of lecturers, dean, who happened to be in that institution. We recruited late at that time in inception of the institute. So there used to be a lot of discussion about business and how to bring up businesses, because this was a business school. So I developed that I should try more ventures. So we started college, then we started chain of school, then we started a company called Nature Mines, which was importing minerals for industrial use in India, as there was slight scarcity of quality minerals in India, and few of the industries they were struggling. So we were working on those also. So where entrepreneur just I think tries to work on things which can bring him money, which can make him expand. So was, I think, the fintech technology which has been doing now. We generally in our team also we use companies which provide these solutions. So they have been pretty helpful. But on the same time, we've been hearing things about the security issues. Say, for example, I don't want to name any fintech company, but there was one of the workers in our mining zone. We got a call from some that will be sending you a link. We'll put money into your, this thing, and he was somehow fished out of 35,000 rupees for a worker like that. 35,000 is a lot money. So security has been an issue. Security definitely has been an issue, although every company has been trying to update that. But it also needs support from local administration, or I should say, agencies which have to, make people abide by laws there. So security definitely is a concern these days for most of the people. Where there was a company in Noida, I will again not name that company. This company provides almost 2,000 jobs to the people with Noida, and there are people recruited from outside also. So this company 3 months back was shut down because of their server was hacked. So although it is issue of cyber security, but there are people who make security, and there are people on the same time. Danav or Devta dono hi hai. So again, security has to be upgraded by time. Thanks to Paytm, like from company like Paytm, eCash, or Bharat Pay, all these companies, they have been upgrading themselves from time to time. But they still need to be, the research has to be, really high. Yes, please.
Great. So, I think on that point, I'd like to come back to Abhinav. Abhinav, you interact a lot with the end consumer in terms of, in a way, educating them about, what's developing and, what's the way forward, right? And I think the continuous theme in all conversations, whenever we talk about experiences from the user side, whether it's B2B or B2C, is security, 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 right? And again, that's my personal perspective. It's something that I've also heard from a lot of people, is that, replenishing any losses in India is far more tougher, right? Even though the rules are there and ultimately you do get replenished, it's much more tougher, right? If you were in the US, for example, it's instantaneous, right? Maybe because also it's a developed market. How do we, or what are the steps do you think that we can take to kind of be able to educate both the providers and the consumers of technology on, how security works? How do they mitigate a situation where they have been, because, see, one of the issues is not just the fact that you might lose money on a transaction, right? If the consumer is aware of the fact that, look, this is how you can get your money back, right? And how you can resolve the situation, it kind of takes care of part of the solution, of part of the problem. So how do you see us approaching that? Because, I think in terms of user experience, that is one of the greatest enablers that can probably be out there.
Well, Prasad, we've always been taught from childhood that prevention is better than cure. Okay, एक बात की दो बात होती है. So अब most, like, we have a body like AMFI in mutual funds. Because of AMFI's efforts, even an आम आदमी knows, every आम आदमी किसी भी नुक्कड़ पे आदमी को पता है कि म्यूचुअल फंड सही है, ठीक है. वो करे ना करे वो बात की बात है, बट उनको बेसिक आइडिया है कि म्यूचुअल फंड सही है. बहुत लोगों को ये भी नहीं पता होगा म्यूचुअल फंड है क्या. The premise is that we know we need to educate consumers, and it's not only from the fintech companies but also from the government. Although they have been trying that, for example, every bank tells the customer that we don't ask for your ATM pin, we do not want your KYC details, we won't call you for giving your credit card details. But I think the kind of diverse this country is, we fall for the free coffee every time. कि आप अगली बार आइए अपना डेटा दे दीजिए, आपको फ्री में कॉफी मिलेगी. We belong to a country like that. You go to a Chayos or a CCD, you openly give out your phone number. We do not have data protection rules. Okay, we are a country which is lacking data protection as compared to Europe, which has GDPR, and US, which has its own laws. In a country which is going through a digital transition, digital transformation, of course, from the government end, what we need is strict data regulation laws, that our data cannot be, misused and falling into the hands of any Tom, Dick, and Harry. Second, from the consumer perspective, I think what is most important is peer-to-peer advice. Like when I downloaded a payment app, I trusted my friend's advice. I did not go and Google which fintech app is better, which payment app is better. When it comes to finance, I trust my friend. So I think, like in the earlier days, we used to have Chaupal for Kisan. We need to have some initiatives which is decoding and demystifying how fintech apps work, what you should do, what you should not do, how you should use your credit card wisely online. And like Niranjan mentioned, that there was a labor who was fished for 35,000. Now, that is not the fault of a fintech app. That is a fault of his own financial illiteracy and how online disruptions work. I'm sorry, there was some issue with my stand mobile just fell down. Am I audible?
Yes.
Was I audible? Okay. So yeah, before I adjust my handle, I just have to say this in submission that we need more communication, not only from the fintech players, but also from the government in highlighting how fintech works and what should be done and what should not be done. Basic hygiene which should be maintained in the online world as far as your finance is concerned.
Yes,
I'm not falling for a free coffee every time you go. And
yeah, so interestingly, the Chayos example that you took, Chayos was actually using facial recognition without permission of users, and
Exactly.
that kind of came up. And interestingly, we had a conversation with one of the quasi regulators, or one of the feeders to the regulators, saying that the data protection, of course it's in the news that the data protection law is on the way, but apparently it's going to be far more draconian than we've ever thought of. So it might be a double-edged sword as well.
Sir, you won't believe I
Right?
had a fight at Chaos. They refused to serve me because I did not give my phone number. I mean, I'm
Yeah,
entitled not to share my phone number. Right?
Absolutely. And I think that, the data protection laws will rein in that kind of stuff. But, sometimes yeah, in India, we tend to make them needlessly draconian. So I think we'll have to be on the watch out for that as well. I think we're coming to the end of this. I'd like to just, kind of, wrap this up by saying I think we've realized that the theme today for users is security, security, security. Obviously, there will be certain initiatives, certain events that will drive adoption. People will obviously enjoy the ease with which they are able to transact when such technologies get adopted. But I think it's the security aspect, both from a fraud as well as the kind of stuff that we were just talking about, that needs to be addressed. And I think the session that we're having is very limited in time for going through all of those in detail, but it does give us ideas, and I'm sure we can pick up these threads as we go along. Our fintech community is evolving, and I'm sure we'll get the opportunity to talk to all of you one-on-one again, and go in depth about each of these issues. But today, I thank you for your time. It was really great of you to be here, and I look forward to seeing you on one of our platforms again. Thank you very much, everyone.
Thank you. Thank you.
Thank you.
Thank you.
Thank you
Once again. So, well, ladies and gentlemen, it's turning out to be a great day of incredible conversations. And moving on, as per our time schedule of 1:25 p.m. Indian Standard Time, we move on to our next panel discussion, which is going to be on future innovations in payment gateways and enabler for businesses. Well, for this, joined will be our panelists, Ms. Saloni Malhotra, Vice President, Paytm, Mr. Anand Kumar Bajaj, Founder, MD and CEO, Pay Nearby, Mr. Sailesh Paul, VP and Head of Merchant Sales and Solutions India and South Asia Visa. And this is going to be moderated and led by Mr. Prasar Sharma yet again, Strategic Initiatives BW Businessworld. Well, ladies and gentlemen, great conversations happening right here. Let's have a great day together. Well, Prasar, it's time for you to lead the conversation into another very great topic, and we'll see you back in sometime soon. Till then, thank you to all our panelists on behalf of BW Businessworld for joining us. Thank you so much. Over to you, Prasad.
Sure. Thanks, Bhavna. I appreciate you introducing the session and queuing up our great panelists. I think, Shailesh, if I could request you to turn on your video as well so that the audience can see you. Thank you for joining today, panelists. It's great to have you on the show. We're going to talk about how innovation, and it's a no-brainer. We see it every day out there. Obviously you guys are knee deep into it, but as people, as a consumer myself, as the audience, as both consumers and stakeholders see the kind of innovations that companies like yours are bringing out into the market every day. This disruption that's happening in the digital ecosystem has truly happened over the last 5 to 7 years. I think it got kicked off in 2010 once Aadhaar came into being. Obviously, we do have some of our limitations in terms of the judicial pronouncements that have come. I'm sure you heard just now when we were wrapping up the previous session that there are security issues, data security issues that concern people, right? So I think what we want to talk today is about how each of you and your domain is poised to bring in innovation that makes life both easier for the consumers and safer for their transactions. I'd like to kick off by requesting each of the panelists, and I'm just going to go in the order that I can see you on the screen so that I'm not accused of any biases. Please introduce yourself to the audience, a little bit about what your organization does, and a brief overview on how you see overall innovation going in your domain. So we'll kick off with Anand. Anand, if you could take the stage for a few minutes and talk.
thank you, Prasad, because what you see could be different than what we see, and hence we're hesitant. Yes, the era where in an environment where 750,000 villages in India, with hardly 1 lakh villages having more than 5,000 population, and yet 1,05,000 bank branches. This is quite a uneven distribution of banking. So one can happily say that bank hai par banking nahi. 115 million debit cards distributed but taken out of system in November 2019 because of chip and pin violation. Not violation, actually the deadline ticked in, and hence the people had cards but not being able to use it at ATM. Bank hai par banking nahi. It's not wrong to say. In an environment where ATMs are unviable and concentrated in clusters in urban areas in Delhi or Mumbai or industrial corridors, maybe 4,000 or 5,000 each. So the distribution has been quite uneven. That said, the endeavor Pay Nearby does is to bring the high end of technology to the bottom of the pyramid in a granularized, sachetized manner to universalize it through 500,000 retail touch points. We call them digital pradhan partners, kirana stores in deep rural areas. We are able to support, assist 150 million citizens. We don't call them customers yet because we are on national duty, we believe, and lockdown helped us bring out the best in us. Having said that, all we do is distribute sachet of trust with the government, with the banks. We are in a way extension counters for, if you may, and I relate to what Abhinav Trivedi said in the previous session about the corroborative buying behavior. People buy financial services from people they trust, not necessarily from the experts. So that's what we do for a living. Innovation we will talk through in the session. Over to my other colleagues on the panel.
Yeah, thanks, Anand. Saloni, if we could hear a bit from you.
Hi, thank you so much for having us over today and for inviting me to this. I've been at Paytm for about 5 years now, part of multiple teams, but especially the payment gateway team in 2 different stints. And currently I lead the B2B marketing function at Paytm. And I think I really would like to say that, +1 to what my panelists said previously, bank hai par banking nahi, and that is exactly what I think all of us are trying to solve. We are heartened to see merchants in small towns, in remote areas, use our service in a way which we had never imagined that they would use. And I think while there are millions of merchants who are using the service offline, there are very few using the service online today. And COVID really pushed everybody to start considering and seeing how they can use a service online. Last year, we've seen a host of categories that actually were never, they didn't have an affinity to using online payment services, but they have now started coming on board. A large category is just doctors and labs. Education institutions that were very hesitant are now actually coming forward quite a bit. Prasad, at Paytm, we have been at the forefront of bringing this, to the consumers and the merchants. We brought in innovations like the QR code back in the day, pre-demonetization actually, and demonetization just helped us accelerate the pace quite a bit. But more recently, I don't know if the viewers today have seen our social media channels, but we've launched a new campaign talking about our IoT devices, the Soundbox, which is really creating a wave in the market and enabling that little nuanced gap that was there that merchants and consumers were facing. So we're thrilled to be here, talk to you and share with all of you about how our journey is and talk about the innovations that we're working on. Thank you.
Sure, thanks, Saloni. Shailesh, we'd love to hear from you now.
Hi, good afternoon, everyone. Hi, Prasad. Thanks for the opportunity. Firstly, and I just want to say that it's also really nice to be with partners. So nice to see you, Saloni. We work a lot with Paytm, and Anand, we work a lot with you as well. So I'm Shailesh Paul. I work at Visa. Visa's a global payments network. We're in the business of providing payment solutions across the world, linking up merchants, cardholders, and the rest of the ecosystem on the network. We're very much focused in India. Our focus is very much to grow the digital payments ecosystem. That's what we're focused on. My role within that is to support the seller enabler ecosystem. So that's all of the players that support merchants, be it acquirers, payment as facilitators, payment aggregators, and of course the merchants themselves. We call that merchant sales and acquiring, which I head for India and South Asia. I've been with the company for a pretty long period of time, in 2 locations in Singapore for the larger stint, and based here in Mumbai. So great to be here, and thanks for this.
Sure, Shailesh, thanks. So, interesting perspective that Visa would have on, on the payment gateways as they are evolving. I was actually going to say that, I'm sure you work with Paytm and Pay Nearby and a host of all these guys. So it's been a little bit of a perspective shift in terms of how payments work, right? So, while I like to hear from Anand and Saloni as well, and how they are seeing consumer spends and how they're seeing merchant behavior evolving. But what Visa and your competitors like Mastercard or Amex would have is a clear perspective on how the digital revolution has changed the way consumers spend and how merchants behave. So if you could give us some perspectives to kick off that, that would give us a great background to start the conversation.
Certainly, Prasad. So I guess the way to think about it is that India's been on the payments journey for a considerable period of time. We were not late into it. But for a long period of time, Indian customers and Indian merchants didn't adopt digital payments as much as many customers and many merchants across the world have. And if you think about it from the perspective of the seller, if you look at the number of digital acceptance points per 1 lakh population, for example, in India, we're still relatively behind. Although the number of payment credentials in the market is fantastic, right? So India's got over 900 million card credentials available. There's a large number of UPI credentials available. But the seller side of the ecosystem was relatively behind. With demonetization, what happened was that sort of quadrupled in a fairly fast period of time. And then now with the pandemic, as well as the higher access to technology, what we're seeing right now is a fantastic amount of revolution that's happening in terms of e-commerce. So e-commerce in India has finally come of age. Our estimate is that it'll grow. It's grown fantastically, and it'll grow another 3 to 4x in the next few years. So with all of that that's happening in terms of digital commerce, the question then comes, how are our customers going to get served? Who's going to make sure, if you had to use the analogy of digital commerce being highways, that you're on that highway, sometimes you're driving on that highway in the middle of the night. The question then is, how do those highways keep running efficiently? Who keeps them safe? Who makes sure that you actually get to your destination? And that's where a lot of the players in the digital ecosystem we've been collaborating. So there's a number of players in the ecosystem. There's the banks, the legacy players. There are the new technology players like Paytm, like others. Increasingly, fintech players like Pay Nearby are coming together. And of course, everyone else who's been playing that ecosystem, particularly the merchants. The change that's been happening in the recent past is twofold. One is that consumers now understand that digital commerce is the best way to go. It offers them the convenience, the choice, the economics sometimes. And service providers have come together to make that, once you enable the customer experience, once you can convince customers that it's secure, and it actually is, that then forms the foundation. And that's now providing the growth that we're seeing in the recent past. So what we're now seeing is that we're set for growth. We've seen a fantastic amount of growth. We're not there yet. The next 3-4 years will be an amazing journey where we will keep on growing the business. Our focus is going to be on 2 aspects. One is to make sure that customers' experience keeps getting better. Today, there's a lot of friction in Indian commerce. Secondly, that each of the stakeholders has the opportunity to grow their business underpinned with the foundation of security. If we can keep on moving ahead on all 3, then I think we're doing our jobs.
Great, Shailesh. I think great perspective. I think it kind of helped us understand that that flow of how it's kind of been and how it looks like it's going to be going forward. Saloni, I'd like to come to you there and say that, look, Paytm, of course, has become a highly recognized brand, out on the streets, wherever we go, obviously a lot of competition building up. But even though it's let's say compared to a Visa, your the vintage would be recent, right? You would still have seen the evolution of behavior in terms behavioral changes for both merchants and consumers, right? Especially with the last 5 or 6 years, whether the India stack and the whole fintech ecosystem has exploded. So can you give us a little bit of insight in terms of what Paytm has been seeing over the last few years, and how do you see it evolving as we move forward?
Sure. So I think, Paytm today in the consumer's mind is a company that's associated with the Paytm consumer app and the wallet. And that's the primary branding that, and that's the primary recall that everybody has in their mind. But Paytm actually is much more than that. And the payment gateway that enables the Paytm consumer app, right? That same SDK is now available to every merchant in the country. You could be a small merchant launching your app, you could be launching your website, or you could just be somebody who wants a cash on delivery order using a payment link. But that same SDK is available to you literally at no cost to start with. And that evolution, that journey that we're seeing, because we're hearing from different consumers about different merchants about different things. Like Shailesh mentioned that e-commerce, saw its time right now, like we saw back at demonetization. But e-commerce needs very different solutions than what a taxi player needs. It needs very different solutions than what a food provider needs. And our payment stack enables all of those customizations very easily. Today, we're seeing after COVID that a lot of small, medium businesses, home-based businesses want to access and use this technology. They require safety and security, but they also need something where there is no tech integration. They need something which is a plug-and-play solution. So we have created our product we have broken down our product into multiple smaller features and products that are applicable to each of these nuanced use cases, where people can just plug and play as per their requirement. And I think that is where the industry is also turning to and changing. The adoption will only grow when those solutions are available. Like Shailesh mentioned, that when you're on the highway and you're at night, you need that protection and that safety and security. How do you provide that? Those are the things that keep us awake at night, right? How do we make it more secure for both merchants and for consumers? So that's where we are. And I think with the growing need and demand, we're creating a lot of these simple use cases. And I'll just illustrate a few to you. And Uber wants to check that you have the money before you start using their service, right? They block a certain amount, and then they allow you to sit in the car. But an education provider needs a very large ticket size to be transferred to them and needs a better reconciliation system, right? An e-commerce player wants something on their website, but also wants ease of use, that in case you have ordered cash on delivery and I don't want to pay that cash on delivery cost, can I send you a payment link? So I think the payment gateway and the payment systems are now getting broken down into very small, simple, nuanced products.
Great. Thanks for that insight, Saloni. Although I think what Uber needs to also do is that, clean up their statements, because, what happens is that now when I look at my Paytm statement every month, for 10 trips, I have 30 entries because of Uber. So interesting perspectives there. But yes, it's definitely made life easier, because before Paytm came on Uber, you get stuck without an OTP, and I've been stuck in the rain without an OTP, not getting a cab. So I think great stuff there. Anand, coming to you, I think it's fascinating, because in terms of what you're doing is kind of a bridge between what was happening earlier and what's going to happen tomorrow, right? And I'm sure, given the kind of audience that you're dealing with, there are some interesting perspectives that you see, both in terms of the B2B players that you work with, your direct consumers, and then their end consumers, right? So what are those perspectives that you can talk to us about, which differentiate today from what was happening yesterday, and how do you see those trends emerging for the future?
Great. So I would say great compliments to Visa, Master, and to Paytm for being the harbingers of digitization in India and world over. If I briefly allude and say that taking banking to consumer is what Visa, Master brought much ahead of when neobanking or open banking was being spoken of. You will relate to it that sitting in a restaurant, my bank was in my pocket. Is that not open banking? Are they not fintech enough? So fantastic work, railroads laid by them, I would say, to Paytm Karo, Goli Maddo, or Paytm Karo. It's a great way to build the nation. Of course, when rocket is launched, not the whole rocket leads and reaches the moon. There are burnouts and only the cockpit reaches the moon. That said, if you look at the segment that we cater to, We don't call them customers, we call them citizens, because it's a higher pedestal than dealing with a customer, I would say, because national as a national asset, we are on national duty, we would say, reaching out to the banking, non-banking financial services, digital services to the citizens. Having said that, we are a platform with open API for integration and a network for mass distribution. In 17,632 postal codes today, with 500,000 retail touch points, we dispense sachets of trust from various sectors. If I say I collect EMI from 32 NBFCs, where people want to pay, but the cash collection guys are not able to reach out to them, it's a great duty that we are at. If I tell that Baiju customers are able to come and deposit their EMI or payments at our outlet, or the Swiggy food delivery people are able to drop by their cash to my retailer, it's a win-win. We are able to optimally utilize that network, that footfall. If I say that at a fertilizer shop, I am able to sell football now, the retailing is entirely going to go through a paradigm shift because Amazon is powering us at the back end. You can go to Bihar, Khagadia, a place where I hail from, and a fertilizer shop which we own in the family. The farmer's son can get a football, or a daughter can buy a frock powered by Amijan, if I may say in a light humor. That said, nothing was broken in payments. Cash to cash transactions were happening. Then came in the cards, and then went away the cards, the formless that happened, the convenience, the risk management, that the light in the night that Shailesh spoke about, the cardless, the postless, the formless methods that came in as innovation. So there are enough and more innovations happening in this space, and especially we say that we are taking the high end of technology in simplified, sachetized manner to universalize at the bottom of the pyramid. In January 1st week, we launched SoftPOS. Now, on the format where my retailers don't need a POS terminal physically now. You tap and pay, and comes then the NCMC tokenized card along. So what have you, taking the fact that 8% of India remains digitized? They are digital savvy value seekers. I will not say greedy here. They are value seekers. Depending on who gives discount, they will shift loyalty. But then there is 92% India which wants the service and respects the service provider. They want them to survive, unlike burnout and then lose away the race. There is no point. And important to say that we, while bring high end of technology, simplify it and bring innovation to common man, it is equally responsible to do that in a profitable manner, be it a small iota of profit, because no social impact is possible without a commercial viability. And we do feel happy partnering with partners like Visa to bring the SoftPOS, for example. We launched, there was support, there are POS terminals that we are deploying. We have partnership support, and then there are way forward, a lot of things that we are working on together.
Great, thanks, Anand. So I think you can't really blame the 8% so much, right? Because I think all the new age startups have brought so many deals and discounts onto the ground that people want to run from deal to deal. But I'm sure it's going to be heartening for the audience to understand that 92% of our consumers are focused on loyalty and good service and respect the service provider. So I think that's great. So I think Anand, just if I can stick with you for a moment. See, I hear great numbers from you in terms of the opportunity, in terms of the market penetration, right? But what are the next three big things that have to come into the market according to you, or what is it that are the next three big things that you're going to do? I'll give you a simple example. I did my exchange term abroad 20 years ago as a part of my MBA, and I remember encountering some service called FPOS. I'm sure the guys at Visa would be well aware of it, right? Where you could just swipe your card and get cash at a retailer, right? In India, we're still not there, right? Although in hybrid forms, we're doing that now, right? But maybe the last 5-6 years, because of the whole India stack and fintech revolution, we've leapfrogged a little bit ahead of the world. But with the controversy, for example, around crypto, not directly something that I'm looking for a response on, but I'm just trying to use it as an example where a lot of people are saying that this may be a regressive move that the Indian government is taking or the regulator is taking, right? So how do we ensure, right, that the next three big things, or what are those next three big things that need to happen in India? And how do we ensure that they do take place and they don't get mired in any regressive decision making?
So mired or regressive things, I don't promise you. That is fait accompli for anything that grows big and there is a attention which is caught. But what I believe is that three things which will drive India is user experience, leading to interaction and engagement, and most important, not gratification, but enrichment. And experience will take care of all the frauds possible. And I can assure you, we can sit on a workshop separately. If you are able to design the right experience, you can get rid of all the frauds. And the interaction and engagements will drive the right purpose of the users and the providers. So there is a congruence of what they want and what I want to provide. Like Mr. said, for the Paytm thing that they do all varieties of the segment of customers, you have to do mapping with what does the user want and then give them the right interaction and engagement. And if this leads to a long-term enrichment of either a path to financial well-being and a trusted network nearby, or in some form help build a credit score for getting loan down the line. All those things I would say is part of the enrichment. So those are the three things. I'm not getting into what technology, what payment mode, what service, whether a device or a soft POS or a card will help do that. But these are the three key things that I believe that Pay Nearby at least is working on.
Great. Thanks, Anand. So, I'd like to just take the same string over to you, Saloni. You were talking earlier about Soundbox and, initiatives around the IoT space. And I'm sure you're looking at a lot more because, as the consumer volume, as the transaction volume has increased, you've seen a great number of opportunities. So, again, just to put that question to you, what are the next three big things for Paytm, right? Over the, next few years, maybe the next decade? And how do we ensure that we stay upfront on that?
Right. So I think for us, safety and security is paramount. I think as financial transactions increase, both for merchants and consumers, for everybody in the ecosystem, and I think for the government as well. If you look at the RBI report more recently, they also talk more about safety and security. That is extremely critical because as volumes grow, we have very, very ingenious minds, and we find ways to beat the system. There are people who are just waiting to break in and trump over a system. And I think Jamtara, it came out and it showed us how creative people can be. So for us, safety and security is number one. We want to make sure that consumers, merchants always feel that this is the safest place to transact. But apart from that, I think we will put in a lot of energy in building, like I said, the nuanced services that every industry needs. Because without those nuances, we're not going to adopt the system as rapidly as we would like to. And today, I think the government has made a great move. UPI, just taking the MDR off the table enabled a lot more merchants to come on board. But that only a government could have mandated. A private player like us couldn't have done. And the third thing, I think what we are really going to do is just focus on more value-added services. Value-added services is where there is more, interest for the merchant, especially because it's not just a plain vanilla service that you can collect a payment. There is much more behind it. And building those value-added services will ensure that we have the right hooks. And for each of those things, I think we partner, like Shailesh mentioned, with Visa. I think there are 2 or 3 different projects that are going on at any given point of time to see how we can improve in each of these areas.
Great, thanks, Saloni. So I think interesting example around Jamtara, right? Even today we keep hearing, I think day before yesterday we heard the Delhi CM's daughter being defrauded of some 35,000 rupees using some tricks on one of the payment gateways. So I think when you mentioned that security and safety is your primary objective, I think it's heartening to hear. And I think I'd like to then go over to Shailesh and pose the same question to him, right? Again, I'll bring the same perspective that I brought on at the first question, right? As somebody, as an organization with a much greater vintage, right? How do you see the next three big things? Because you've seen paradigm shifts that have been, probably tsunami scale over the past few decades, right? So what do you see as those three big things coming up for us in the next decade?
Certainly, Prasad. I'd say three things will happen or need to happen in India. Firstly, and just as a quick sort of context to this, as the pandemic happened and the digital revolution happened, the one segment that has been disadvantaged is small merchants. They've been left behind because the big tech players have moved much faster. So with our 64 million odd small and medium enterprises, to me, one of the biggest big steps forward for us as a digital payments ecosystem is to enable small merchants for digital commerce. It's a necessary big step forward for the economy. And that is happening through a set of partnerships. It's happening with a set of low-cost solutions that are enabling the merchants at that scale. And it was also happening by way of economics. So big steps like the government putting out the Payment Infrastructure Development Fund that enables the ecosystem to move forward. So there's a bunch of things that are happening around that. A whole lot more needs to happen. The second big step forward, according to me, is to scale e-commerce. As I was saying earlier, today it's an $83 billion segment. It's going to be $200 billion before we know it. There are a lot of challenges with e-commerce as it is today, but largely they relate to scale. Today, sometimes some payment systems will fail. Today, there is too much friction in e-commerce. The speed of these transactions is not ideal. And of course, security remains the number one concern. So all of that has to move forward for us to enable the massive change that we're seeing in our economy as more and more transactions go online. That would be the second trend. And then the third is that and it's not so much an item or a change that happens one at a time, but it's an evolution, and that's around user experience and customer experience. That has to change when it comes to face-to-face commerce. So things like, for example, tap to pay that we're talking about, that Anand just mentioned on the enabler side, the same thing needs to happen on the consumer side. Lower friction payment systems, such as, for example, we have something called Visa SafeClick, where we step in and perform the authentication. Just making sure more and more such payment experiences get more streamlined, because when customers get a better customer experience, when they feel secure with it, then they will adopt. And that then sort of adds up toward what the government wants to do in terms of our digital enablement journey. If I could, there's actually three underpinning principles as well. Firstly, no compromise in security. That has to be something that everyone embraces. There can be no compromise. One incident has too many other implications. So we can't have any of those compromises. The second is that we have to make this sustainable. And we have to make it sustainable for all of the players in the ecosystem, which means there have to be economics in the business, which means that there has to be innovation in these payment experiences. And then the third underpinning principle I would state is that we need to create more open and scalable platforms where there is an openness to participate. Right, so we enable one such platform where more and more players are using that, but we have to allow more players to come in, because that's where we'll get the sustainability and that's where we'll get the innovation. So that would be, three big steps forward and three underpinning principles. Sorry, I took 3 plus 3. So
Great,
that's all right.
It helps us, it helps the audience, and I think we all get a deeper perspective. So it's all welcome. So Shailesh, I think the first point that you mentioned about the small businesses getting left behind, right? I think with payment gateways, one of the key things is that across the spectrum, you have touch points to businesses, small, big, and huge, right? You've seen how businesses have been able to evolve. You work with partners who can help businesses. So are there any specific goals? Are there any specific approaches towards enabling small and medium businesses to grow, right? So, for example, Anand mentioned that, a little lateral, but, a fertilizer shop being able to sell footballs because they get insights saying that, look, this is becoming hot now, and it doesn't really dilute your business, but you could earn a little more money, and then you could scale up. So both tactical and strategic advisory, is that something that payment gateways are doing? and what can they do better?
Yeah. So the payment gateway is a specific role in the ecosystem. So I'll come back to that. But three things need to happen over here, right? Firstly, the legacy system was that banks would go out and enable these merchants. Now, as we get to the smaller and the smaller merchants, sometimes it just doesn't make sense for a large bank to be able to deploy that last mile connectivity. So it's important for us to enable players that are interested in that ecosystem and are willing to operate at that scale. Sorry, I've lost you, Prasad, and I've got somebody else's picture coming up.
Hi, can you still see me, Shailesh?
You're back. There was somebody.
Yeah, so I think the speakers
Yeah.
for the next section might be joining.
Yes,
One of the
yes.
drawbacks of the wonderful technology that we have.
Yeah. I thought I lost you. There was a lady on, her picture was on. So I was saying that we have to enable the right set of partners. So in that, one of the banks are in, the big tech players like Paytm are in. Now it's important for us to get the fintechs enabled. So a lot of our work is around enabling of the fintechs, and Anand referred to an example. But we have a fintech outreach program. We had something called Visa Everywhere initiative last year. We're redesigning our fintech fast track platform. All of that is just circle around saying, how do we enable more fintechs to participate in this payments ecosystem? Because they bring a lot of value, not just to the payments players, but also to the end use users, the merchants and the consumers. So that's one aspect of it. The second is we have to keep on making technology more accessible and lower cost. So tap to phone is one example that Anand talked about. That means you can use your phone to become a payment device. It eliminates the need for a POS. That's a fantastic step forward. We're trying to do the same thing with, as it relates to more types of QRs being able to operate interoperably. Not just one type of QR. We should be able to link all of those together. It ties in with what we're calling a network of network strategies, which is how do we work with the Paytm? How do we work with the PhonePe? How do we work with an ecosystem which is distinct and solves some specific problem, and can we link them up to the rest of the digital payments ecosystem? And lastly, it is around economics. So a lot of our work is around making it more affordable, but keep some economics in the game, because if you don't have economics, then no one has an incentive for security or for innovation. So keep the economics there, but make sure that the economics are fit for purpose, as well as reduce the cost, as well as make it more viable in terms of capital expenditure. And there we've been fortunate to be part of the discussion with RBI in terms of rolling out PIDF. So those are some of the things that we're thinking about as it relates to enhancing the ecosystem.
Great. So I think, Shailesh, I'll pull from that same theme and go over to Saloni. Saloni, I think in terms of where you are, right? You have now been able to touch a lot of small, medium businesses, right? And you do get a lot of data and analytics in terms of what kind of products they're selling, what is the kind of revenues that they're able to earn, right? Which also gives you a unique opportunity to be able to run business intelligence and be able to give them insights. Is there a specific program that you run around it? How do you think that would help these businesses, and what are the goals that you seek to achieve out of such a program?
So, we have a bunch of initiatives that run because a merchant or a business, small or big, needs multiple things at the same time. So if you look at it, what we're doing is business.paytm.com is the website where businesses can go and find out more about this. But we have 4 large buckets. The first bucket is how do you collect money, and this is all in one payments. You may want to collect using offline, online, links. There are multiple products. So how do you collect money from your clients? The second is how do you disperse money to your vendors, to your employees? So we have solutions and systems for that. The third is what do you need for your own business? Do you need a bank account? Do you need employee salary accounts? Do you need loans? Because like you said, we have all of that data. We can enable loans and extend loans to you at a very quick pace. And we have an entire lending team that is working on that currently. And the fourth bucket that we enable merchants with is distribution. So digital distribution is very critical. And I think that is a subject that we are very, very passionate about. So we have 2 programs. One is the Paytm Mini Apps program, and the other is Paytm Ads. And both of those can be used for businesses to reach out to more consumers. and to access and set up their own distribution and garner more customers for themselves. So with these 4 large buckets, and these are multiple teams within Paytm, but there is a certain focus, you can actually take anything that you want for your business from business.paytm.com. And now we are focused more on making sure that we move merchants from one to the other as their needs and their demands grow. And I'll give you a simple example. With COVID, there was a young merchant. He had 5 shops in Pune selling stationery. 5 shops completely shut down, business coming to a halt. Quickly came to us and said, enable a payment gateway. Then came back and said, can you give me an EDC after 4-5 months when the shop started opening again? Then came back and said, hey, can you give me a loan? Right? So you don't know at which part of the journey what the merchant wants, but there is a systematic way that we do our outreach and ensure that all of this is available to them.
Great, thanks, Saloni. So I think taking the same thing to Anand, right? The way you are building your business is almost a franchisee model, right? You're rolling out across geographies and getting small entrepreneurs on board, right? And I think one of the key goals that you would also have is to both scale them up. And I think a subsidiary goal would be to scale up the people that they work with. So, how is it that you're going about that, and how can that be a part of payment gateway innovation, right? That enable our small and medium business partners and their consumers.
Yeah, right. So see, we serve the customer segment who does not tweet. That's a differentiation, because a UPI user can tweet and tag the finance minister and get the $700 back. We serve a segment which 700 rupees is a month ration cost, which could be Salish's or mine cab fare to dinner tonight. Yeah. So we have to be extra careful in ensuring that there is a lot of stability before scale, and we automate the hell out of the whole flow. That is where we have gone to ensure putting our own switches and get NPCI certification on ASP for all our technology stacks, because they help us reduce hops. Why I say so, that 2 million transaction a day, comparatively very less to my other colleagues here, means 4 million hops less in a day with the direct connectivities with providers like NPCI and other platforms. That said, to be able to run smooth transaction to my retail touchpoints who don't tweet and get away, we need to be extra sure that not only do we give them stable tech, but also we augment their income without occupying shelf space. So we are in an era of digital, and not only banking, all businesses digital is the whole idea, where without using the shelf space, the formatting of retail is undergoing a paradigm shift. Like I gave an example of football at a fertilizer shop. And likewise, you can go to a kirana dukan and say 2 kilo aloo, 1 kilo pyaj, or 25 rupees ki FD de dena bhaiya. Because to do that 25 bucks FD at a branch, it is grueling and inhuman if a lot of people queue up. And forget about asking for account statement. Everyone reaches branch to ask account statement. So how wonderful it is to go to the kirana dukan and ask for it, or ask for a pack of chips, a bottle of Coke, and 2 months of Hotstar, please. How cool it is, right? So augmenting his income, harnessing his trust without occupying the self space. He is already there. The fact that 98% citizens come back to him month on month to consume the same financial services, that person has a lot of local credibility. This pipes us to give him loan. There is enough human intelligence beyond artificial intelligence that helps us drive various partnerships. Like Saloni said, like Salish said, the endeavor is not to do everything all alone. We partner and we handshake on our platform with multiple meaningful providers with similar congruent goals and purposes. Yeah, that's what we do at, but to also add on the technology and risk, no amount of technology advancement can surpass human greed. I will not say stupidity, but this is someone who quoted, and I only would say that the design experience can take care of a lot of it, not all of it.
Great, thanks, Anand. So I think as we're coming to the end of our slot, before I thank you and let you go, I'm going to ask a question which is burning outside in this domain. Quick, short response. How do you see? And I'll start with you, Shailesh, then go to Saloni and Anand. How do you see the future of crypto, and how is it going to change life for you?
Okay, great. Hey, Prasad, I actually realized I didn't answer the previous question on payment gateways. So if you don't mind, 30 seconds on that.
Most certainly.
Before we get on to crypto. So specifically for payment gateways, what are the tasks for payment gateways to make commerce better? Firstly, scale. Right, today we have customers that use Visa has a payment gateway called CyberSource. There are customers who now ask for 1,200 transactions per second capability. So there are players that at their peak, be it high season sales or be it the IPL, they require that kind of scale, and it's critical for payment gateways to keep pace with that scale. The second is omni-commerce is critical. The same players now want to offer a card present or an in-store transaction as well as an e-commerce transaction. So that's the second piece for us to enable. And the third is what Anand and Saloni have both said, which is enable others. So a wallet node on Paytm should also work on a CyberSource, because that's how partnership happens. Okay. On your question of crypto, I think, well, there's two parts to it. There is the component of currency, and then there's the component of what the technology that underlies all of this is. As far as we're concerned, we're a platform. We enable more than 200 currencies worldwide. If any of these becomes a fiat currency and these are recognized ways of doing commerce, then we will be there to enable it. As such, we don't, it's not something that we are sort of trying to build, but yeah, our job is to enable commerce. So when that happens, we'll be ready.
Great. Thanks. I appreciate that, Shailesh. Saloni, your point of view on that?
Honestly, I'm not qualified to respond to this, so I'm going to pass your question.
Yeah, so I know it's deliberately controversial, so I think we're always ready for such a pass. So thanks nevertheless. Anand, how about you?
So what currency is it that fluctuates so well, so much? The core of the currency is to bring stability and not volatility. So I don't understand the $200 to $4,000 to $40,000 fluctuation. Having said that, we are yet to solve a lot more lesser problems than to reach there. Let it come. It's a matter of time.
Great. So a diverse set of responses to that question, just like a diverse set of insights that we got from all of you. I thank you both for your time as well as the insights and perspectives that we got from you on this call. I think FinTech as a community for us is something that we have just launched. It's evolving. The topics at hand go much deeper than what we are able to do in a 40-minute slot. So, we're hoping that we'll be able to, get a hold of you and have longer, probably one-on-one conversations on more BW platforms in the very near future. And we hope to be able to get your time again very soon. But thank you today for taking the time, and we hope to see you soon. See you again very soon. Thank you very much.
Thank you so much.
Thank you so much. Bye.
Thank you, Shailesh, and thank you so much, Anand, for joining us. Well, ladies and gentlemen, it is all happening right now at the Festival of Fintech 2021. And as per our schedule, exactly at 2:10 Indian Standard Time, we're moving on to our next panel. Ladies and gentlemen, I'd once again like to thank our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. Well, ladies and gentlemen, now for our next topic, which is creating robust security and fraud prevention infrastructure for fintechs. We are joined by our panelists, Mr. Sanjeev Kumar, CTO, Pine Labs, Mr. Rohit Garg, co-founder, SmartCoin, and this entire conversation is going to be moderated by Ms. Noor Varsia, Group Editorial Director, BW Businessworld, and Digital Market Asia at BW Businessworld. Well, ladies and gentlemen, with this, we pass on the live baton to the wonderful Noor Fatima Varsia for taking it over and having an incredible conversation. Over to you.
Thank you so much, Bhavna. Thank you so much, Bhavna. I am really looking forward to this conversation, to be honest, because I do not know anything about the subject. Well, I know very little about the subject, but I've got two supermen with me right now, and I was going through your profiles and I was like, damn it, I will be caught if I try to be smart. So I'm not going to be. I am just going to lightly ask you the questions that I said I would be asking. So just to give everybody a bit of a sense over here, we have Mr. Sanjeev Kumar. He is the CTO at Pine Labs. Pine Labs itself is over 2 decades old as a company. And Sanjeev, if I'm not mistaken, has been there for nearly 14 years now. Correct me if I'm wrong, Sanjeev, go for it. And we also have Rohit Garg, another really, really smart head between us. Rohit is the co-founder at SmartCoin. I understand he had 3 more, and he has 3 more partners. I'm guessing they're all IIT alumni who started this. And he is a 5-year-old brand, actually. So it is quite a mix that we have over here of experience and then the nimble new footers who came in place and were really disrupting the market. Both are deep tech companies. So the topic is really apt for you right now, and I should officially welcome you both. I'm going to take advantage of both of your experiences overall and then what you make of the market right now. Everybody went through a little bit of a crash course in technology last year, but you guys were really in the thick of things, and arguably you had a better year than most people because technology seemed to have leapfrogged by like a decade. So our topic is very simple, which is creating a secure and fraud prevention, robust infrastructure for fintech. I was being mean when I said it's simple because when I was reading about it, I was like, this is all over the place. So, you know, just for people like me out there, how would we keep it simple when we start? And the first thing that I want to look at, you know, I'm going to pose this question to both of you, which is really how should companies look to integrate fraud prevention programs in their companies? What probably are some areas to watch out for? I do want to go on the tech side of it also a bit, but then, you know, I'm going to begin with Sanjeev over here right now. Sanjeev, just give us the first sense of it, which is what are some of the things that companies can do? I mean, you know, you would have seen a massive form of evolution at your own side in the way you would have kept up in your game, keeping your own, the merchants that connect with you safe, et cetera, et cetera. So just give a sense of what are some of the do's and don'ts perhaps when companies think about fraud prevention programs.
Yeah, thanks. I mean, prior to answering that, let me thank you all for having me here, right? So you know, this topic is too wide, right? That how do and there is no a definite answer to it. Discipline is the key there, right? So first of all, I think there is a common term which I use across in any panel. I say, if compliance is a formality, then compromise is going to happen, right? So make a practice that people adhere to it. So remove the word compliance, control H with adherence in your company. So it means people have to adhere to what you write. If you say that security principles are to be followed, people have to adhere to it. If you say that passwords are to have this pattern, people have to adhere to it. If passwords are to be, this should not be simply that my password policy says that it expires in 45 days. Force the expiry. So I'm saying about, first of all, insider, compromise, right? Outside, you can put a lot of offenses that do's and don'ts. Being a payment company, you are anyway bound to comply and adhere to many things, be it PCI-DSS. For Pine Labs, I can talk about we are PCI-DSS, we are PADSS, we are PCI Visa PIN, and we are since the card data and the PIN block passes through us in the offline world, we are also under the scrutiny of all the networks and the acquiring banks. We process EMI loans, so we are under the scrutiny of issuing banks also. But so coming back to the original question of do's and don'ts, right? So do's and don'ts it that like get the best world class infra for your payment gateways. Put the good quality WAF. Be patched. Your patching policies have to be very, very regular. Your get and give access to the things which are required. Care for the data at rest equally than the data in transit. So the data in transit, everybody talks of, well, I have got HTTPS, but HTTPS takes care of your data in transit only. But once you see that data has landed at my home, you feel that your data is safe. But what if there was one vulnerability which got exposed and somebody is able to enter your house and your data at rest was lying purely plain and you didn't pay as much attention to it? then you pay to the data in transit. So that's where the compromises mostly happen. And if you see the studies, the data in transit is not the area of interest. The data at rest is the gold mine. If you get the hand of it, your GBs of data is lying in open. And retain and store what you really need. And if somebody has stated that you don't need to have card PAN and your business doesn't need it, don't even try to have it thinking that tomorrow you will make something out of it. The risk side is much more impactful and can be dooming than the possible gain you can have in future.
All right, fair enough, fair enough. I have to admit that a lot of that is something that I would probably go back and then search and read up more, but I did get the broad gist. I'm good at shopping, so I got 2 points of view that you said, or rather 2 points that, that have struck out with me. One, I love the fact the way you formulated when you said that compliance, if formality is equal to compromise, use adherence, good advice for everybody. And then the choices when you make, when you are trying to build in something, and don't get carried away. Just to build on that, Rohit, let's get you in over here. The technologies, especially for somebody like me, and I'm sorry I'm comparing it to shopping, but choices are something that are out there. Even in terms of technologies, we keep hearing new things coming up all the time. Our own CTO at BW Businessworld has these new solutions, and he's like, these guys are really doing well right now. The first thing we want to ask him is that, how do you know they're doing well? How do you think how do you know they're going to stay and they wouldn't have some kind of a breach or problem later? So, I know it's not a fair question, but just because we're delving on this topic, from your point of view, when we are talking about fraud detection tools and technologies, for example, what is it that you bear in mind when you're looking at it? In terms of when you're looking at creating a robust infrastructure, what are maybe some of the checklists, for want of a better word?
Right. So thanks, Noor, for hosting me. Right. So Sanjeev obviously talked a lot about how the security, the general compliances, as well as how do you go beyond that, right? I talk about fraud specifically because obviously fraud, one, I think at a broad level, I think obviously all of us understand fraud, but then I think it also starts to go deeper based on the domain and the thing that you're doing, right? And fraud actually becomes very important because we have seen globally companies, right? Who have actually died overnight just because fraud ballooned up in the system. Like for lending companies, like I would say there are two ways of risk, right? One is fraud risk, another is the intent risk, right? So what's their propensity to pay on a loan? What we have seen is intent does not change overnight, right? Good guys say will not change their intent overnight unless say something like COVID happens, but generally does not change that much. Fraud is something that can, just shoot up, right? Because especially for a company like us, which is giving loans to the underserved masses in India in 100% digital model. So through our platform, we have already given loans from our single office in Bangalore across all the states and more than 90% districts in India. So as far as the Arunachal Pradesh or Andaman, Nicobar or Jammu Kashmir, we have given loans, right? So now it becomes very important for us because, as we know, right, once people hear that, there is an app which gives you loan without even meeting you. So they'll now obviously try to come up with all sort of tricks and, fancy stuff. So there are few things that I think we have tried to take care of, right? And which is, I think, pretty much important for anyone who is doing this. Number one is how do you make sure that you have complete checks on identity? Because people will do a lot of, ID forge and ID theft. Now, I think Aadhaar India Stack obviously was quite an amazing, I think advancement on that front. But unfortunately, it's not available in the same format to all the platforms and fintechs, right? Obviously, banks have access. So then you have to basically build your own infra, layers on top of it. So for instance, I think one of the things that we do is any user that is coming onto our system, right? We say we'll not only look at whether it's, Aadhaar or other, like PAN documents are verified or not, but we actually go well beyond that, right? So say if a user comes in the system, we actually start mapping him through multiple identifiers. It could be through his email, through the device that he's logging in, through the identity documents he's providing, right? And I think one of the important things there is also like some things are hard identifiers, some are soft identifier. So hard identifier could be like if a guy came up with a PAN, which was already used to take a loan application and he's now coming as a fresh guy, it's obviously a clear fraud, right? So you don't want to give loan to that guy. But a soft identifier could be that a guy actually created a profile on this phone device earlier, and now there is a fresh profile which is being created on this. Now it might be someone from the family, it could be someone who basically gained unlawful access to the device. How do you differentiate between the two, right? Do you raise a red flag or a warning, or do you block him? So all these sort of nuances then become more and more important. But the first thing is you should be able to track, you should be able to capture it, right? So you should create the infrastructure and basically the engines to support it. In fact, I'll give you another interesting example, right? Early on, when you start actually capturing all these guys, so some of the guys who actually were frauds, they will try to, create multiple profiles. They'll come from a different phone or the same phone, but a different SIM, or they'll go to the village and, get IDs of like his known, long relative. But once they were not able to do it, what they'll do, like someone said, has taken a loan. And when his EMI is due, what he'll do, like he'll ask his wife or his father to basically, get loan as a fresh guy, use that money to repay his loan, and then basically take another loan to repay that EMI. So in the process, they're showing that both of them are good borrowers while they are not, right?
Right.
So now how do you identify it, right? Because now this becomes a second degree level of fraud, right? Not the first degree. So it becomes that complicated, but if you understand it, right, you can start combating it, right? And then it becomes actually a far more deeper, far more effective way of capturing like frauds in the system. So I think what's very important, like what I'm trying to say is, I think you should clearly identify. In fact, I would suggest that you should have a separate team which is only trying to figure this, because frauds by design, they generally start small, right? I mean, frauds don't balloon up until a certain stage. But if you keep allowing, that leakage to happen, then at a certain point, you won't even come to know, and it will, would have eroded, wealth like from your systems. So I think you should have separate team. You should have focused infra to capture this systematically. And I think that is something which allows you to then, I think, build on top of it. So I think this is something that I think could be a good start for someone who's trying to create that.
All right, brilliant. Just give me a sense right now over here, and we're going to broad base this totally across, and we'll take advantage of among our registered delegates today. We have like many startups actually, whose names that I saw, and many SMEs. The costs. When it comes to actually putting your technology together, while it has become essential right now, many times there was like a cost barrier if you were trying to do something well. From both of your experiences, you can just weigh in right now. Is this a thing of the past where the tech cost is now not something that should hold you back, or it's just in our mindsets right now, or it is going to, when you say, like a focused team or dedicated approach, it means that you will have to shell out that much from your purse?
Right. Sanjeev, do you want to go first or?
Go ahead.
Sure. So see, I think there are two components to it, right? One, I think, is the infra cost, and one is the people cost. Yep. I think as far as the infra cost is concerned, I think today, I think they're in an amazing place, right? So I think with all the cloud systems, and I think they're also getting more and more sophisticated, you obviously get access to, I think, basically infra at a much cheaper cost. You can, I think, do a lot more experimentation, right? So, I would say that, and then that is something which is, again, not as much fixed, right? It essentially builds up in a variable manner, as opposed to earlier where you had to invest a lot in servers and other, sort of infra, which was actually difficult for a startup, right, to begin with. So on that front, I think we are pretty much sorted. Second is the people cost, right? So I think it also, I would say, partly comes down on the DNA and I think the way I think you are trying to create business, right? So for say someone like us, which started with a goal that, we want to cater to the, I think, say the small shopkeepers or the blue-grey collared workers in India who are spread across all the corners. I think we knew from day zero that I think tech is going to be the biggest differentiator over there, right? And I think you can see that, I think, from the team side, I think it's essentially built like that. But I think what I'll suggest is that I think people will always have a choice to maybe start small, right? So when I say you should have a dedicated team, you don't even need like a 20-member or 30-member team. Even if you're one guy who is just now, basically getting into your system and trying out ways to do like what all frauds are possible, right? Can I come with this thing? And, and for this, you don't even need an engineer, honestly, right? Because all the customers who are frauding us, right? They're not essentially sophisticated folks, right? They're the guys who just have so much time at hand that they're thinking of various jugards, right? To get it done. Right. So I think essentially we have like QA in tech, right? Similarly, you can have a QA on the fraud side, and these guys can get it done, right? So once you start building it and you start reaping the benefit, then I think like incrementally you can build on it. One thing also I think which you can do right early on to figure how important this is maybe I think once you identify, you start capturing, say, the frauds that were attempted, but you say didn't let them in, right? And if you start, if you say create a metric on how much, say, money you saved because of that, or how many attempts did you, I think fail, then this also gives you a sense on the size of the problem for you. And accordingly, you can start allocating resources in that fashion. So that allows you to make sure you're able to balance that trade-off. But I still believe, I think, for companies, depending on your business, I think that's a cost you should not shy away.
Yeah, I got it. I got it. So I do want to weigh you. I do want you to weigh in on this, but I still want to build a little bit on the first point that you had made, which was about the compliance part of it, basically adhering. When you're talking about things like policies and procedures, for example, and when companies are really looking at that level, so now we have understood that this is something you must do. It has to happen. Everybody tries to do it. The point we're getting at is how do you do it properly? How do you do it at the right cost? How do you do it with the right partners? So I want to understand from you within the company perspective right now, for you, how were you looking at as a company, as Prime Labs, how were you looking at, or how did your policies and procedures change over a period of time in their ethos, so that you were able to stay robust when it came to your own secure and fraud prevention systems?
So see, I think I'll first go with on the infra and the people side of implementing the current in the current role. In the current era, how do you implement a smart framework for fraud, right? So I think Rohit said one thing that for a startup, the infra used to be the biggest problem, that you have to have those 100 or 200 K USD in kitty in order before you could ship your hardware in the data center, and before you could before you could write or think of shipping hello world, this 250K were to be apportioned for it, right? So gone are those days. You don't need those any longer, thanks to the cloud providers. You can have your smart TensorFlow program running at a meager sum of 200 USD a month. So it's like getting house on rent, right? So getting servers on rent. So that's also infra part. On people part, there are two things, right? So a part of the QA team could be made a part of the risk ops team. So risk ops team. So whatever you ship, whatever domain you are into, in order to give the proper customer service and keep your service level high and keep your interest aligned and intact, you will have the ops like ops, fin ops, risk ops, right? So concept of risk ops is not new in a way that people who understand the risk threat modeling and the people who can do eyeballing are required. But before that, the programs like so few things, right? So 250 or 300 rules that an outlet. So I give you an example, right? An outlet selling pizza cannot have a transaction ticket size of 5,000 rupees at night 2 a.m. A gold shop cannot start selling at Chennai airport at 4 a.m. So these are certain known frauds, right? These are there is no denial to it, right? Yes. Your ticket size cannot be a step function that in the month of Jan average ticket size was 1 lakh and in the month of Feb it is 10 lakh, right? So now there is a predictive modeling element to it. The fear which companies have on predictive modeling is, what if it goes to false positive? Will I lose the business? So then, boss, you train your model then. How will you train your model? Feed more data to it, right? So I think AI/ML, reducing false positive, continuous training of the model, reducing attack surface or fraud surface by involving good risk ops folks, improving your deterministic, old school model, that 250 rules by learning could become 300 or 400. I think the attack exposure can be brought down. Now coming to your compliance, so infra as a service was unbelievable 10 years back, but I feel nothing as a service is unbelievable at the moment. If hardware was the toughest thing to bring on a service, if you ask me, because I have that background of that also, that I could never believe that somebody will be able to will be a spin-off the server of a choice, because OS is installing a flavor of Linux was an activity of 3 days, right? Then put the device drivers on top of it was the activity. So setting up a server used to be the days events, right? And so now these are like at a click of a button, right? You write Terraform script and within 2 minutes you have it ready. And there was no guarantee what you have tested will work on production. Now the Terraform test just increase the size on production, it is now up and ready. So coming to compliance, do I see that happening something like CAS, compliance as a service? We are not very far off. that should happen, because you should have compliance as a service coming. Let's say, let me take a very pointed example. I see, again, I'm from the payment firm, so it will always go back to the compliances which are applicable to the payment companies, right? Like, so PCI DSS, 12 major controls. There are sub controls. There are 210 something, use cases which come. Quite a few of them are pretty much the infra level, segmentation level, VPC level. I mean, a cloud provider has got much more depth of the data, much more, control onto it. 80% of that can get covered. If it is a matter of collection of evidence, I mean, evidences which are the massive work. So if you ask us, how do we used to do the compliance earlier? Compliance used to be an year-end festival event, wherein, I mean, auditors, you used to come. Auditors used to be like, meeting, or 3-4 meeting rooms booked for them. We used to have the festival across this thing, right? This was a matter of 5-6 years back. Then I said, what is happening? If you are other end, then why do we have to have the festival? I mean, why don't you have the objective evaluation of what we are doing? 12 controls are not running away. They are a deterministic problem. They have the deterministic answer, and the evidences will also be in the very. So what is it for which you have the option ABC? The answers are fixed, right? So why do we have to have this festival? If you are around there adhering to it, just choose a time that these 10 evidences at the click of the button, it's submitted. So those cultural changes we have brought, not only for PCI DSS, PA DSS, from normal festival, it's like a scientific meeting, like any other product meeting, right? So it's like a product engineering meeting now, right? Now this compliance as a service coming, wherein all evidence collection, logs, toolings are in place. I'm sure the burdens will come down, cost will also come down. The dependency on the individuals will also, go down. So in the time to come, compliance as a service, I don't see it going very far away, but still I think there are the process and controls have to have fine balance. In order to simplify, it should not lead to a compromise. Like Rohit was saying, that for identity, there are in the absence of, let's say, Aadhaar, since it is not equally available to everybody, right? So guys have found out the way that you have a Google safety net, you have a device fingerprinting, gesture controls, many ways people have been able to find. So more you program, more power to code, and more power to AI/ML, more power to better trained model, better threat modeling pattern, and then you have not perfect but near perfect CAS model, CAS.
Awesome. Yes. Compliance as a service. I don't know how many more things are going to come as a surface, but so, amazingly, we are left on the last 15 minutes. I do have 2 major points that I want to definitely table while we are at it. One of my points that I wanted to discuss was this multi-layered approach when we are doing, Rohit also touched on it. Sanjeev has also spoken about it a little bit. When we are talking about multi-filters that you have so that you ensure you're robust. Now, I know that both of you are more towards like the B2B side of side, and there is more services there. But from a consumer or user experience, now that we are talking to a larger audience here, from a user experience point of view, sometimes it can be annoying. They understand, like even somebody like me, I understand I want my data to be protected. By the time you're asking me the 3rd time to choose a figure that looks up or something, or what looks like a car over here, it is annoying. I want to move away from that side. So what is a balance? How do you balance that you do have that multi-layered approach, but at least for a lay user, you haven't really made it crazy? Rohit, you go for it first, and then I know I'm going to twist it and bring it back to Sanjeev.
Sure. So, Noor, I think like for us, actually, it becomes very important, right? Because I think like on the one hand, you want to obviously keep customer journey very smooth, right? And very frictionless, right? Because it obviously helps the customer and of course the business, right? But on the other hand, you have this nuance that you have to manage. I think the way we go around it is, I think there are 2 parts to it, right? One is how are you? So like Sanjeev also touched on it, right? I mean, the more data that you build internally, right, around the customer, on understanding his profile, without even asking for a lot of things, right? And today, I think we are in a world where a lot of passive data is also available, right? So if you are, say, installing my app and, coming to me, there's a lot of things about you that I already know without even asking you, right? So can you now make use of it to do multiple level gradation or like build a user persona right on the back of it? Once you have it, then I think another thing that you can do, then you can have multiple layered flows, right? I mean, so based on the user, say the confidence that you have on the user profile, right? You can ask them certain things, or you can choose to not ask certain things, right? So for instance, like I'll give you an example, right? So say if you ask the user for a selfie, right, for your system, now the thing is, once he gives that selfie, now you can do again automated image checks, and you can figure, whether this matches with the guy's ID documents or not. But the thing is, where say the score is below a certain threshold, so now you don't need to pin every guy to do say sort of a video check or a liveness check. But say guys below a certain threshold, now you can ask, why don't you open your video and we want to, I think basically do a liveness check on you. So now this allows a flow where say maybe 90% of the guys actually give the right photograph and they're able to, get through that, photo verification point very quickly. The other guys will actually have to turn on the video, but now you have these differentiated flows. Same thing can happen with the information that also you need, right? So again, say someone like you, when he say comes on a lending platform, if I'm able to say a certain amount of data on you, I don't need to like compulsorily ask you to provide me everything, like, give me a 3-month pay slips or a bank statement and everything. But I know I can let you go, right? Because you already seem pretty, I think high scoring person. But for say someone else, I can actually ask him to give me certain more information to validate and let him through the system. So I think the thing is, one, as I said, I think you should have an infrastructure to work with a lot of, I think, passive or indirect information, and you should have created technology to basically use it in your system and basically demarcate user person or his risk profile based on these parameters. So that is something you have to build internally. Secondly, as I said, I think you can build these gamified information flows, right? So you don't ask everyone for everything, but you have built these gamification flows. And I think the reason I call it gamification is because if you're, say, giving more pain to a certain guy, you might also associate with it with a certain incentive, right, that he can get in return for that. So it will again then depend on the domain, right? But you can ask them, right? In fact, I think a lot of apps also do it today, right? So if you give me this information, then I can, I think maybe give this something extra to you. So then user also has something in it, right, for them to go through that process. So how do you balance, I think, customer experience at that end? And I mean, that is something that you can tackle with gamification. But I think these two things actually can help you quite a lot to balance, I think, this trade-off.
All right, fair enough. Fair enough. Since I want you to speak about it, I just want to twist it a little bit, which is, we're talking about balance right now. He's given us at least 2 ways of how we are doing this. But, when you are as a customer, I also expect that if I have given you so much information, by now you should not ask me something like, can you tell me your account number again? I'm just making a very basic example. My expectation is that the brand will already know a little bit about me. The company will already know a little bit about me. And it is annoying that I have to tell you the whole thing again. So when you are, or when you're looking at what maybe some of the trends may be emerging on this, what are you seeing? How are companies looking at, while definitely personalizing and customizing to whoever has come? And the first point that he mentioned, the tiered level approach, while they're doing that, but at the same time, it didn't go to a place where it could have led to some kind of a breach or a data fault.
So see, again, I think here, this all comes down to KYC, right? Ultimately, that you want to know your customer more and more. Yeah. And it's a very thin line that I decide to go ahead, I decide not to go ahead, right? So it's like, and you draw a line, more the data you have, more the confidence score you have, right? So ultimately, Rohit is in lending. We also do some kind of merchant side lending, right? So on merchant side, still you have the GST details, you have the GST based APIs, you get some kind of confidence score, you have the CIBILs to your rescue, so you don't have to really. I mean that side it's not that painful, right? But I mean the question here is how much is too much to ask, right? Right? How much is too much to ask, right? So how much is too much to ask is a function of how much is the customer in need of, right? So that an app or program cannot decide, but gamification, like Rohit said, is an excellent idea. That if you feel that you have been incentivized and you are in the need, you will definitely go for a try, right? So it's like for an individual, You need POI, you need POA. I mean, without that, you can't even go ahead anywhere, right? A proof of identity and proof of address, if you don't have, it takes you nowhere. Beyond proof of identity and proof of address, what else do you need to be able to score? Of course, you have the device info. Possibly one guy will go ahead and say, I have the contact graphs. That a person this having this phone number, I have given the loan, and there are 5 persons in his phone number. So what you are saying is that there has to be an element of intuitiveness and smartness that, thode mein jada, right? So take less, give more, right? So you have a lot of data which are indirect in nature, could be extrapolated, right? We were taught, extrapolation of the graph, right? That 3 points are given, derive the 4th point by doing the freehand, typing of the graph, freehand, so very, very same way here, like, you have so many indirect, information, contact graph, social graph, you have is, and now with offline eKYC allowed for everybody, right? By using share code and phone number, you get the address details and all. So in a way, essentially, you don't really have to ask too much, but again, it's a function of how much is the customer need. How much are they willing to, how much are they willing to share, and and to what extent they are comfortable. But having said that, it's paramount that whatever they have given, there is an element of confidence building with the customer that you are giving and putting your data in a very secure platform. It comes down to that, right? The moment you have one breach, you had it. Then there is no, it's a point of no return.
It is a point of no return. We are on last 6 minutes. I still have this whole topic to tackle about employee and management fraud training. And once again, this was something Sanjeev, he was literally laying the tone of the discussions when he said about, again, my favorite code of the day is going to be adherence versus compliance. But how much of a role does this play right now in India? How much are you all probably seeing? I'm not talking about your own companies, because I do know that either you're coming from a place where you are like mentally attuned to it, or just given the legacy, it has been happening. So I'm not trying to get a broader gauge. How much are we seeing that people are actually investing in employee and management in terms of fraud awareness training, and maybe some best practices that you are seeing in this? Let Sanjeevji go first for this, the older brand.
Okay. No, so I think that's a favorite topic, and I can keep talking till cows come home, right? So like this topic is very favorite to me. So in the sense, like, see, the point is, one, the PCI, PADSS, visa compliance, or PCI PIN compliance, or banks compliance, or network compliance, they all mandate that your employees get trained. Now, you can dilute by defining your training models, right? That I need to just get the tick marks and check boxes filled in that I have trained so many guys, there is an attendance sheet. So that's where I say such kind of compliance is compromised by design, right?
Yeah.
Right. That is the attendance checkbook, right? Attendance check boxes. So then like CTOs, CISOs, and CXOs have to take it far more seriously and not wait for a breach or incidents to happen, right? Because incidents could be a point of no return also. So it may not give you an opportunity to relook and rethink.
Yes.
So what happens is that make people so let's say if you say, my favorite question in an interview to any architect who I hire is that where do you store the database password? And I kid you not, people do mostly wrong in that. Somebody will say I have it in an open file. Somebody will say I have it stored it in somewhere, like, yeah, so they might not be practicing it, but they might not be practicing it like that. They might have kept their database password safe, but somewhere people take it too lightly, maybe, right? See, the point is your application is making a connection to it. And it is the key to your entire data. It cannot. So somebody asked the next question I ask is, can your DBAs copy the data and go home with it? They said no. I said, then what stops them? Answer is not known. I have given full access to DBA. How can you tell me no, right? You can copy you're creating the back of it, but then the next question is that keep the data, give access to DBAs, but divide the keys into such a way that it requires a village to collude to compromise you. So meaning is that one employee or two employees alone cannot should not be able to create the backup and take it home or take it anywhere in the drive and reconstruct the data and float it off. Float it anywhere they feel like, right? So even internally also divide passwords into the code, into the database, into the file systems in such a way that it takes 3-4 guys like custodians to be able to break into the system as such, because it is unintentional compromise are easier to happen. So it is not that employees will intend to do it, but by mistake things can happen. You may leave your database browser connections open, right? Things can go wrong. You may by default. So once, simple case, I'll not take the name of the companies, right? DBA incidentally ran a query which increased the card balance, right? Card balance. So it means card balance was kept in clear, and database administrator had the right. This is for some company. Somewhere I read the use case. So DBA having full right. Tomorrow, let's say in case of Rohit's company, somebody increases the limit based on a tier. It's just one command, right? Update this table where this is. This like online, right? This is a catastrophe, right? Why will you not encrypt the amount? Why encryption is only to pin, and why not amount? Why should it tamper it? So even the data at rest keep in a useless state. So data at rest has to be kept in a useless state, that even if you take my backup, I have the key vaults with me. I have keys vault with me. Unless you connect the keys vault, an entire village or tribe colludes. And if your company colludes for a fraud, then you are done anyway, right?
Yeah, that's true. That's true.
So it requires a massive collusion. Anyway.
So, just to recap what he said, Rohit, you must have got all of what he said. I am like frantically taking notes. But for me, what 2 points really stand out is don't wait for the incidents when it especially comes to employee training. And you should really go for, or rather, if you're going to do it only as a formality, it is compromised by design, he said. And then he gave a larger example about how you should not take even the little things or the simple things very lightly. You have to be serious in terms of how you're protecting yourself and how multi-layers of protection must come in play within the system with multi-stakeholders. Anything you want to add to that, Rohit, when we're talking about best practices from a people standpoint while making this infra?
Right. So, Noor, I think Sanjeev covered, in great detail in terms of how, say, internal fraud should be, captured against, right? Yes. So how do you make sure your tech is, protected enough, your processes and people are exactly kept in the loop, right? So I think those are obviously, very right things, and must for especially any, tech-driven company, right? So it has to be done. One only thing that I would love to add is that, so while this captures obviously what's happening internally, right? How do you make sure you're also able to capture what's happening outside the company, right? So for instance, that's why I said, what I have seen in general, right? Fraud generally, because they start small, especially customer frauds, right? I think there are two problems that happen. One, I think people don't really pay enough attention to it unless it balloons up, right? And as I said, I think once it increases very fast. That is one problem. Second problem that we have seen is the lack of right label data as well. So for instance, today, say, obviously we hear a lot about a customer, getting a fraud, basically defrauded because someone asked for his UPI pin, right, and made the payment into his account, or something else happened. Now it's not very easy for customers also to report, right? Whether fraud happened or not. Even if they do, then obviously company also has to figure whether it's the customer genuinely reporting it or not. So the issue is that I think doing the right labeling in terms of whether this instance was a fraud or not, it's not easy. And the thing is, if you're not capturing it right, then your machine learning algorithms can also not learn right? Because they need the right label data for that. So you need to, create a culture of, capturing this sooner. I would rather say be conservative on that side than, be ignore and wait for confirmation, right? Because as I said, the risk is too high. So I think how you are creating that internally, are you creating a separate team? Are you encouraging them? Are you incentivizing them to, find more about it rather than, because a lot of companies try to hush it, because obviously no one wants to show that our systems are, not capable of capturing this. So how do you make sure you encourage that and build that culture? And I think organization to support that. I think that is something which can then work in unison with how the internal teams are structured to create, a fraud-proof system. But yeah.
Right. All right, awesome. Last couple of minutes left, gentlemen. I do want to take this as advice. We more or less tabled the questions that I had in mind. I did want to speak a little bit about some of the text, but you gentlemen have really given me better answers than I was hoping for. So let's just go with advice. It's literally last 3 minutes, so both of you get like a minute each. Advice for players, especially, it's a very broad topic. So if I immediately want to go back today and do maybe like a check, that all right, is my infrastructure even at say a 7 on 10? What are some of the questions I should ask myself today? That is, either Sanjeevji can take it or Rohit, and then I'll change it again when I ask the next person. Hands up on who's taking it.
Go ahead.
Sure. So I mean, see, I think me and Sanjeev, I think we have covered, most of the things here, right? I would say, yes. One, I think make sure, your tech captures the right things. You have created the right infra, because everything starts with a detection. And number two, you have, people, who are actually making sure that they are really taking the right action on it, or at least flagging it, to the concerned teams and people. So that's, number two. I think number three would be, in my view, creating the right metrics to make sure, it's voids correctly. It's actually getting flagged, to the right guys. Because say someone like Sanjeev, he would obviously get to know, especially given organizations also, become pretty large over time, right? So it's getting very difficult in that sense. So I think once you take care of, the people and processes, rest of the things, at least, then you can take the right action and start dealing with them. But if these two are not right, then it anyway becomes impossible in my view. So I think those two should be a good place to start.
The first thing that you go back today from our audience is these are the first two things you should look at to see if you're ticking the right boxes without just making it a checklist. Sanjeev, you want to add?
So I think I'll try to sum up what I said. Essentially, right? Then training, internally, getting the right kind of systems in place. And how do you decide what kind of right system is for you? So there has to be dependency graph in what kind of segments you are, and there could be no answer which fits all. But the point is, any kind of data you have, any kind of data you have, just see what governance principles are laid around it, and read those guiding principles very, very seriously, right? So those principles are laid. Don't read it very, very casually. And get the right folks around it and get those action, right? Be it, let's say again, I'll re-invoke. So if you are a payment company, OWASP top 10, or PCI DSS, PA DSS, PCI PIN, and there are ITGC guidelines against the governance and the compliance, that what flows in the company and what flows out. There is process based check. So there are numerous guiding principles available, and it's just a matter that it cannot be a casual read just because it is not a mainstream business. Risk is mainstream, and fraud becomes super mainstream when fraud happens, right? So fraud is to be taken more seriously, and again, the governance principles are to be one has to stick to.
All right, gentlemen. We were blessed because we had two extremely smart brains with us right now to answer so many questions, with some of which, to be honest, even I was all over the place while asking. I'm going to add one point ahead of everything else, which is find a brilliant fraudster, and which is what Rohit said in the beginning, and let them go and really crack your system and see what are the different things that can go wrong with what you're doing. That's what you must do at the word go. With that, I'm going to thank Rohit. I'm going to thank Sanjeev for awesome comments and for your time. Thank you, both of you.
Thanks a lot, Noor.
Thank you so much for having us. Bye-bye. Good day.
Thank you so much, Sanjeev and Rohit, for joining us today. Well,
over to you, Bhavna.
Thank you.
Thank you. Good day.
So, ladies and gentlemen, this is all happening right now at our wonderful FinTech festival, the summit, and right now in the BW Festival of FinTech 2021. I'd once again like to thank our partners, Zaggle, Angel Broking, and Cambridge Center for alternative finance. Well, ladies and gentlemen, right now at 2:55 p.m. IST, we're just overshot by 2 minutes, but we'd like to respect everyone's time. On our panel discussion, Fintech Changing the Future of Insurance, for the next 40 minutes, you're going to be witnessing a brilliant fireside chat between Mr. Ruhail Amin, a senior editor, BW Businessworld Group, and Mr. Vishwanath Ramarao, CTPO, ACCO General Insurance. So ladies and gentlemen, this is going to be an incredible fireside chat between Mr. Amin and Mr. Ramarao. Thank you so much, gentlemen, for joining us and giving us your valuable time. On behalf of BW Businessworld, we welcome you. Over to you, Mr. Amin.
Thank you so much, Bhavna, and thank you. It was a great session prior to this, some great conversation. And as already said, that our topic, this fireside chat, is about Fintech changing the future of insurance. And we have with us Mr. Vishwanath Ramarao, CTPO, ACCO General Insurance. Welcome, Mr. Ramarao, to this conversation.
Thank you.
I hope I'm
Thanks for having
enough.
me.
Yes. Yes. Just to put a little bit of context before I start my set of questions, we know that the rise of fintech, the changing consumer behavior, and advanced technologies are disrupting the insurance agency industry in a very big way. What you call the term insurtechs and technology startups, they continue to redefine customer experience and are giving the traditional players a new vision to look at, So these are some of the things that we all know about. So let me go to my first question that I have for you. Advancing technology has, given a solution to long-standing customer issues and created a series of deep, lasting systemic challenges for insurance. How have these trends and these solutions impacted the business of the industry overall?
Mm-hmm. Yeah. Look, I think technology is disrupting every business, not just the insurance business. And here in insurance, it's quite deep.
Right.
What used to be a traditional agent-driven sales process is now replaced by an easy-to-use digital portal. You can browse the portal, you can browse the product, you can understand the product a little bit better as a user and as a customer. You can take your time coming up with the right product for yourself. You can configure it. Things that were not possible earlier are now possible on the sales front, on the distribution front. On the claims front, what used to be a typically laborious claims process with a lot of back and forth, unstructured data exchange between the consumer and the insurance company, a lot of analysis by hand and investigation by hand, is now been replaced by automation, right? It's robotic process automation in some cases, it's artificial intelligence in some cases. Either way you look at it, it's dramatically different than how traditional insurance companies have run businesses. And that allows businesses to scale better while maintaining a very high bar for customer experience. And that is true of P&C businesses, health insurance, you name it. Everything has dramatically changed, and this will continue to accelerate.
Right. So you just referred that the bar has been set high, by the coming of fintech or insurtech, as we call it. But tell me, in what ways exactly, if you could elaborate on it a little bit more?
Yeah. So see, if you take a typical health insurance policy, oftentimes the regular process of purchase of policy requires a significant understanding of the customer and by the insurance company. And that required lots and lots of form filling, paper forms in many cases, delays in being able to sort of get the right quote and prices. All of that has changed over the last 5 years, right? Now you can fill out a digital form, oftentimes fill out partial data, and the system can complete the rest of it for you. It already understands you as a customer. It already can recommend the right products for you as the customer, the right add-ons for you, the right configurations for some insured, the right policy construct itself in many cases. That's true of motor insurance, health insurance, you name it, right? So the entire process of purchasing is now back to becoming consumer choice. It's no longer a fixed hard line process that maybe was the way the insurance company was operating.
Right.
And on the claims front, again, you open up an app today and you can press a couple buttons and claim. And
right.
That delightful experience brings you instant gratification. It takes you maybe 15 minutes to get your claim approved in many, many cases. And that speed of doing business, that ease of doing business is dramatically accelerating the adoption of the product, right? What used to be a complex product, burdened by these explanatory problems in between and middlemen and all the actors that were there, now is being replaced by digital products and digital interfaces that are much better suited for consumers to be able to choose, participate, and choose in the decision-making process. And so in some ways, that empowerment of the consumer, giving that choice back to the consumer, configurability back to the consumer, that's dramatically improved over the last few years.
Right. I just want to go back to what we witnessed. We have just come out, we're about to come out of a pandemic, I hope, and the early signs of it are at least here. Tell me, I mean, we talk a lot about that the past 11 months or so have been really kind of the dream come true for digital first companies. And tell me, how has it been in your case, given the kind of black swan event that we saw? How did it kind of play out for you in the last year? If you could elaborate on that.
Sure. See, we have three product lines. One of them is micro insurances. This is a product line where we offer small moment, small ticket insurances for people to really experience our brand and our product. This could be a ride share. It could be, you're sitting in the back of an Ola car and you have an elevated risk at that moment. That's when this product kicks in. So these types of products that were primarily driven with our partner ecosystem, that are built with our partner ecosystem, built for a large user base to experience insurance. These, of course, are dependent on how the overall general economy works, right? And so when that economy kind of came to a standstill, of course, it impacted us negatively as well. But at the same time, other product lines like motor insurance, where we are a direct-to-consumer brand, we have our own product experience that we are very proud about. We put it out digitally. Those types of products that were direct-to-consumer digital products were taking off because a lot of people that would do certain things a certain way in the past, maybe it would be a paper form that you would fill out from your broker and buy insurance, that had all shifted towards online behaviors. And so that purchase behavior had changed, and that's sort of one big accelerant that we saw. The second one is just the adoption of digital technologies to notify the insurer, in this case us, to of events that a claim event, for example. The adoption of that app, that digital strategy by the consumer, we saw again significantly accelerated behavior, where people felt almost compelled, right? Because they didn't have any choice anymore. Contactless digital technologies really accelerated as well. So both of those have been quite positive for us, and maybe offset the negative of the overall economy being being down for everybody in the digital space.
Right. There's also a section of people who think that fintech is versus the traditional players that have been there for long, though it's the same ecosystem. But within the ecosystem, how is the equation between the new offerings that are around and the traditional players? And given the kind of relatively a new product on the scene, how are customers reacting to it? Are they finding it easier to adopt to the fintech and the insurtech, or are they still trying to grapple with the understanding of this product?
Yeah, look, I think the market itself is very large. India, as a country, is underinsured. There's a lot of growth left in the sector itself. So, you will always find people of all segments and spectrums, right? There will be people who are digitally very savvy, or very comfortable transacting online, are very good at making those decisions for themselves. know where to look, know how to sort of find the right product for themselves, right? And so that digital savvy sort of forward thinking customer is obviously getting a lot of choice, right? We're with a lot of even traditional players presenting a digital front, they're definitely getting a lot of choice out there. And for people who are looking for that pinnacle experience where you just want to directly just go make a few clicks and make that purchase decision, or associate yourself with the new one of the newer insurance companies like ours that are all digital. All of those types of forward thinkers are getting a deep accelerant, right? And so that's been very, very helpful.
Right.
But like I said, the market is very big. The population is underinsured. So I'm very, very sure that both traditional players have a role to play here, as well as digital products like us.
Right. So this point of underinsured is something wherein I really want to understand the numbers here and the opportunity that you see, and give me a sense of like how is which categories within the insurance sectors are looking very promising, where you are focusing for this year, and which geographies within India are the ones where you are looking on, and the demographic profile, if you could give me those numbers.
Yeah. See, if you just look at the numbers, insurance is a contribution to the GDP where we stand versus maybe a typical European country or a North America. We're maybe about 1/5 of that, or maybe even 1/10 of that, right? And so there's a significant opportunity definitely for people to be able to purchase insurance and secure their lives a little bit more, their assets a little bit more. The issue has been just penetration, right? Reaching India across the country is actually quite hard. It's a country built of diversity, and so you need many different channels, and the costs to reach that consumer has always been the challenge. But if you look at sort of fintech acceleration in India, we're one of the leading digital financial and financial technology. We're one of the leading countries in the world, right? And so that push nationally to kind of make all of that go faster has really helped bring people along and educate them about the value of insurance in their own lives, right? A good one is just health insurance. Like if you just look at the queries on health insurance over the last 6 months online, it's probably tenfold of what it was before that, right? And so both COVID has accelerated that desire to say, hey, look, I want to be able to secure my life. I want to be able to secure my health, and I need products that will allow me to do that, and at the right price point. So that's one area that is definitely dramatically shifting. But so also is, P&C businesses like motor insurance, car insurance in particular. Car owners are all very digitally savvy. They all have fingertip access to the right digital products these days. So that's again, significantly improved, and you can just see that in just the way people come to our products and the way they behave. That they look savvy. They don't look like this is the first time they're making an internet transaction. So that prior introduction to financial technologies, maybe with the wallets, with smaller online transactions, now is bleeding over to the larger ones, and deeper commitments and deeper relationships, like with digital insurers like ours.
Right. So we know that enriched connectivity and AI solutions can eliminate friction at several touch points in the customer's journey. With all this in place, tell me, what are the big roadblocks faced by fintechs and insurtechs to create a seamless customer experience? Are there still any roadblocks in your view? What are those?
Yeah. Data is one of the biggest things, right? Getting access to the right data for you to be able to, customize the product for the user. And in our particular case, we follow a unique approach to pricing risk, right? We have individual risk pricing. We don't just do sort of overall book level risk, but essentially we look at each customer individually and decide the best way to be able to serve that particular customer, which is why we are home to some of the safest drivers it's in the car insurance space. We're home to the safest drivers. Probably as a product, we cater to that segment with our price points. So that risk pricing requires a significant understanding of the consumer and data, and so that is still a work in progress across fintech and across in general across a lot of industries in India. Structured data access to that at the levels and at the sort of the scale that we operate at. That's still a long way to go. So that's one area. The second area is, I'd say, assessment technology when it comes to sort of looking at a damage or looking at a claim and being able to automatically be able to assess the impact of that or the financial value of that. That's still, again, an unsolved problem. I mean, solved to a degree, but it doesn't quite replace or do the exact same thing that a human assessor would do. So that is accelerating. That still has a lot of, I'd say, catch up to do. And it, again, requires significant first-party data access and more sort of cutting edge technology before we can get there. But we're on that path already. So I'd say there are a few bottlenecks. I wouldn't say it's all perfect, but at the same time, they are getting solved. They are getting scaled and solved, and so that's heartening to see that that structuring is happening, that intelligence is coming on at large scale. If that is happening, we're still okay.
I remember recently I went for a car insurance and I could do it without human connect. I mean, they told me to click pictures. I think the technology itself, but yes, I mean, the human factor has been kind of eliminated in that. I mean, it was totally without any human contact. One more thing I want to ask you is that we're also witnessing a huge, the market is getting crowded with offerings and solutions and price points. In this kind of a setup, how is your company trying to stay a step ahead and create the differentiated, identity for itself?
Yeah, so we're unique in the sense that compared to most players, we are maybe we're the only or only one or maybe one of the few that have a direct-to-consumer, completely direct-to-consumer business model. So that consumer direct business model allows us to build that relationship and essentially over time, build better products for our users, right? We're able to look at the user for a significant enough time that we can price the right product for the right user at the right time, which is quite different than maybe a non D2C model where you might look at the user purely as unnamed person. It's just one element of your book to you. So you're not able to build that relationship, and that shows in just the way the insurance product itself feels to you. What we are really trying to do is to bring that human touch, to simplify the product, and just to be able to say to users, hey, look, this is something that you can make a choice in your life, and that financial education and that inclusion, being able to sort of simplify the product, that's very powerful, right? It's one of the biggest ways that we can bring more people to the table, educate them about what is right for them and be able to secure, insurance can help them secure their assets and their futures. And so that's quite unique about ACCO, that we're very, very customer centric. We're very much about that direct relationship, and we hope that that's something that our users are able to appreciate as well. And we see that in just the way our users are connected with us. It's not just, while the digital product is very important, they love us on social media. They absolutely love the experience. They love the fingertips access to information. So all of that is, I think, quite different compared to maybe again a traditional insurer that maybe doesn't have a D2C model.
Right. Tell me, in terms of products, new categories, what has, like last year, what have been the takeaways, if I may ask, in terms of new product offerings that you have, or are you also planning for 2021? What is on, if you give a sense of what kind of products are you planning to have more offerings?
Yeah. So for us, health is, of course, the big focus area, like many other insurers as well, that we're seeing accelerated interest in health. And so we're working on some fairly interesting health products, health insurance products. But we had already built a fairly innovative platform of micro insurances, right, where you could sort of experience insurance across your digital products, not just on our platform, but wherever you are, whether that is a ride sharing problem and you need some coverage there for a small amount of time, or whether it's a stay and securing your digital transactions, right? So that continues to be an area of innovation for us, and as the economy and people start to participate more in more sophisticated financial instruments, maybe even things like credit borrowing, right? Borrowing used to be a very traditional sort of way of doing it. Go to the bank, fill out the form, meet the manager, try to sort of borrow. Now all of that is again getting very, very digital. People go click a few buttons. There's enough information available for you to be able to borrow. So attaching insurance to those types of things is continuing to be a big focus area for us, and an innovation area.
So tell me, from a regulatory standpoint, as far as this future of insurance sector is concerned, is it all fine and all? Are there any kind of changes that you is there a change that needs to be done to make it more seamless and widespread from the regulatory standpoint, in your view?
Yeah, honestly, our regulator is quite innovative, right? They have a significant appetite for new products. They're constantly through the sandboxes pushing companies to innovate and try and do new things. And so I think that relationship is very, very healthy. It's in good shape, and the regulator works with insurance companies for the benefit of the consumer, and that's working really well. I do think that for companies like us, which are really trying to be very customer-centric, consumer-centric, extending that insurance, boundary and making sure that we're able to do whatever it takes for us to be able to serve that consumer. Sometimes there are some, gray areas there that we need to work more closely together to be able to solve for the consumer. And I think that those are the types of things where the regulator has been very helpful in encouraging that customer-centric behavior, right? So even where the laws or the regulatory boundaries are not absolutely clear, or maybe have been formulated maybe 10 years ago and require a little bit of a rethink or a little bit of a change in that process to be able to deepen that consumer relationship. I think those are continuing to be in areas of change from a regulatory standpoint, and that's always great, right? It's always good for the consumer to be able to kind of have no restrictions coming out of the regulatory framework, and that's been wonderful as well.
So this is my favorite question to everybody who is close to customers and is listening to them very closely. Tell me, in your category, how do you build loyalty among your customers? Is it just the product? Is it just the offering? In your view, what is that thing that kind of makes them loyal to this product?
Yeah. Look, I think any insurance business fundamentally is a service business, and it needs to work at the most when the user is in their most vulnerable moment, right? It's an accident of your car, or you're just hospitalized and you need help there. And so it's very important for us to be able to, base that consumer relationship on transparency, right? You need to be able to understand the product. And that's why we have a D2C model, because we fundamentally believe that when people understand the product, the insurance and the insured relationship improves. So transparency is one of the most important things for us. And then that service. While you may have a certain sum insured, it's just how you feel through that process is just as important. And that's not going to come only from just the product that you have or the digital surface that you're touching. It should also comes from how the entire process feels and works, and how well we're able to blend automation with that human touch. And so we take a lot of pride in our customer experience, customer service, and being able to lean in and add that personal touch, in addition to making this process transparent and easy and digital. And so I think it's a unique combination, where, you know, this is truly technology powering human interaction. So we look at it on all surfaces. We don't look at this as just a digital product. We look at this as a direct to consumer relationship business, and we want to sort of be able to take all aspects of that and do better.
So I'm aware of some players that have focused on the awareness part of it. They say that the growth of this market is linked with the financial education and awareness among the consumers. And that is the big area where the entire ecosystem will benefit. Tell me, in that respect, what all initiatives are you planning to undertake or have undertaken for the company?
Yeah, see, awareness comes from being able to advertise and market to the right consumers the right message, being able to sort of make that proposition clearer as much as you possibly can. But it also continues there onwards, right? When they come to your application or website, being able to take them through that complex insurance journey, simplifying that down to a few clicks, is also another way of building awareness, right? And so for us, the design of our product is truly built on making that as simple as you possibly can, using less official language, translating that to the consumer, making that easier to read. Your policy document should be parsable, easily consumable. Your purchase experience should have every step with support that with reasons why it works a certain way. Explain the choices that they're making. Sometimes we use double confirmation and interfaces like that, where we really want the user to be able to say, I know what I'm doing here, right? And so simplifying language, simplifying sort of that purchasing experience, and carrying that over then to the claims side, and be able to kind of, at that moment, like I said, the most vulnerable moment, be able to show that the product that they bought is now actually working for them, right? And when that trust cycle builds, we're then able to support word of mouth and other brand building and NPS exercises. We're able to bring more people into the fold and be able to convert people to relationships. And so it's not just one thing or one initiative that you do. It's just how you work. It's at a DNA level. And so digital is particularly direct to consumer, and digital are particularly well set to be able to do that.
Right. I have 5 more minutes and a couple of more questions. One is, tell me, what is the kind of vision for 2021 for you from the ACO standpoint?
Yeah, so we're still a young company scaling, and so for us, it's to be able to do what we do for what we do at the highest possible level of service, right? And so scaling service across other cities, other parts of the country, making that service experience as uniform as we possibly can. Things of that nature are really core to the business, and we will continue to sort of invest significantly on that. Health insurance, like I said, is a pretty big focus area for us this year, and so we continue to sort of innovate there and build better product, make that a little bit more feature rich, make that a little bit more digital wherever we possibly can, and distribution, right? Being able to work with our partners and be able to not just sort of have an insurance product, but bring that insurance product to where people already are. And so that's our vision for 2021, to really, make the product even more delightful, continue to take the product to the doorstep of the customer wherever they are through deeper distribution channels, bigger distribution channels, and continue to sort of improve on service and make that even better. So all core things to an insurer. Nothing that you might consider as out of pure innovation. Here we're talking about really just deepening what already works and making it even better, and that's 2021 for us.
So my team just told me that 10 minutes, not 5. So I'll just broad base it before I come to my other questions. Tell me, with so many players in this sector, do you think over the next couple of years it will get consolidated? Only the ones with maybe deep pockets and great offerings will survive. I mean, how do you see the market panning out for this sector?
Yeah, I think competition is going to continue to stay here. There might be a little bit of consolidation, but I think just the regulatory framework that we have, most of the insurance companies are very well capitalized. They're run extremely efficiently. So this is going to be, for the foreseeable future, a deeply competitive space. While there will definitely be some consolidation, we don't expect it to be to the degree where it is going to disrupt the market forces in a way where it's either not friendly to the consumer or not right. We will continue to see I'd say room for all types of players, small and big, and I think it comes down to who's able to serve that customer better, who's able to make that deeper relationship happen. And I think the fittest of the fittest will survive, the nimblest will survive, and definitely the remaining ones will lose market share. But there is a share shift that is going to happen closer towards nimbler, more service-oriented companies, and that's something that we're excited by.
Right. So the sector you are in also kind of means that there's an always-on environment, and responding to customer in a very human way while using all the big tech and the deep tech. Is it challenging to kind of maintain this human-centric, driven by technology approach and at an always-on and create an always-on environment?
Yeah, I mean, I see for us, we look at this as a tooling problem, right? Humans have always wanted to do the right thing, and our team of people inside the company have always been amazing people that want to do the right thing for the customer. Oftentimes what breaks down is scale brings in challenges. Being able to do that to every customer at scale is quite hard. And so we look at technology as not just a pure innovation platform, but also a tooling platform. We love building tools that our internal teams are able to use to make that interaction with the customer a lot easier, a lot more delightful. And so whether it is sort of messaging products once you have started a particular insurance claim process, or whether that is internally being able to sort of bring all of the data silos together and be able to give one customer view to the internal agent that's working on your case, you name it. If we are in a position to transform use technology to build the right tools for your own team, you're going to be able to really enable your team. And empowered, enabled team can bring that human touch. And so technology and people need to work together to serve here, right? It's not replacing one or making something, changing one from one to the other. It's about sort of working together to spend more time with the customer. So even things like robotic process automation or any other automation that we try and do, it just returns time back to our employees to be able to talk to our customers in the most meaningful way possible. So, a tools-led approach is something that we feel very strongly about inside the company, and we think that's the best way for us to be able to combine technology and people.
So fintech is also a field that is considered to have used tech in the most efficient way, the big technology, and sometimes it seems that it is on a mission to eliminate the human part of it, completely out of it. Is it so, and will that work?
I think it's not a replacement problem at all, right? It's about a scaling problem. You're really trying to just say, how can I bring financial inclusivity to a billion people? And when you try and do something at that particular scale, your processes, whether it's a business process, whether it's a technology platform, everything needs to be able to sort of scale. And so as that scale starts to happen, humans really cannot keep up with that scale, right? There are just not enough people to sort of do all of this in a traditional way. And so technology intervenes to build that platform for people to be able to do that. And so I'd say it's not a replacement problem, it's an enablement problem. How do you enable a smaller group of people to serve a larger base? And how do you build that connective tissue using technology to make that happen, right? And so technology also has to feel human, and it is still powered by humans. So instead of a CX agent, maybe there is a bot sitting out there, but end of the day, that bot's script, the way it behaves, the way that's programmed, is based on the behavior of a human. So I think the ability for humans to be able to make that their personal touch available to at scale to millions of transactions, I think that's not elimination, it is augmentation. And so for us, we really think of augmenting human capability with technical skills, not to replace humans with technology. Like that human touch has to be there, especially in insurance, right? Maybe in other places it's different in fintech, but especially in insurance, it is really important that it feels human. Like I said, the most vulnerable moments, we need to be present. And so being able to sort of do that augmentation is the key.
My final two questions. One is from a tech innovation point of view. I mean, if I think one has to know what's happening in tech, one has to ask the fintech companies about it. What are some of the new offerings that you're trying, innovations that you're trying that would be part of fintech and insurtech as we move on? Right now, it's like seamless. You can click and get it, and you have a kind of a human, response. But what do we see from a tech innovation standpoint as we move on in this sector?
Yeah, I think one of the areas that you will see a lot of is robotic process automation, right? So these are any types of stepwise business processes that people were going through internally that's being sort of automated significantly. So automation is going to continue to be a very big area overall for InsurTech. Machine vision, we're pretty big. You mentioned this earlier, where you could just take a few clicks and essentially your claim was captured. You didn't have somebody visiting your home or your workplace trying to sort of capture the damage. It's all sort of understood by your application. And so sort of machine vision continues to be a very big area. Structured data extraction from unstructured data, that's another big area. A lot of paperwork is very unstructured, right? And building common protocols, whether it's in health insurance or in some other place, it takes a lot of time. And so the technologies evolved to the point where some of those big disparities in data protocols and things like that can now be massaged, and we can still derive a common sort of structured data approach from all of that. And so that continues to be a very significant technical area of innovation. And I think a lot of the stuff you may not see, it may come out very, very delightfully as a very simple click. For the consumer, that's the idea, that we're able to take all of this stuff and just make what is working, what they're used to, a lot quicker, a lot more delightful, a lot more efficient. And when we do that, I think people will again just have the bigger trust in insurance, and that penetration is going to be key to our growth.
Right. My final question, talking of the entire industry, the future of fintech and insurtech in particular, and in the Indian environment, where do we see it in the next, say, 2 years?
Yeah, look, I think, we're already, I mean, India is already one of the fastest and sort of most advanced financial technology countries in the world, right? And so as we look at the health mission, for example, that the government is really pushing hard for, it just comes down to inclusivity, right? Having more and more people in the fold of financial technologies, and bringing more people, empowering more people to make those financial decisions, making them easier, simpler, one click, delightful, transparent. Those things, those core things, will continue to sort of be the focus areas for the next 2 years, right? We're doing well as a country in that area, just being able to sort of digitize as much as we possibly can, but it will accelerate. And then there are these sort of at the top of the pyramid, there are technologies like digital currencies, right, that are going to that India is grappling with as well. Those will continue to push, right? We will see more and more innovation around blockchain technologies, and whether that is necessarily in non-fiat currencies, or whether that translates to maybe other types of innovation on the back office side of things. We just think that that's an area that'll again continue to sort of accelerate.
Right. Thank you, Mr. Ramarao. It's been a delightful, insightful, and a deep dive conversation. And really, really thank you for taking out time and joining us on this Festival of Fintech. Thank you so much for your time. And over to you, Bhavna.
Thanks for having me.
Thank you. Thank you so much, Mr. Amin. Thank you so much, Mr. Ramarao. What an incredible fireside chat that was. Thank you once again for your valuable time.
Thank you.
So, well, ladies and gentlemen, now at the BW Festival of Fintech 2021, we're looking at, once again, thanking our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. And right now at 3:40 p.m. Indian Standard Time, there's going to be a great panel discussion on the cryptocurrency and blockchain fintech infrastructure and initiatives. Well, in this panel discussion, we're going to be joined by our panelists, Mr. Charles DeHousey, the Director of Consensys. Our next panelist is going to be Mr. Jaideep Reddy, Leader Nishit Desai Associates, Mr. Kumar Gaurav, Founder and CEO, Kasha, Mr. Pranav Sharma, Co-Founder and CEO, Woodstock Fund. And this entire conversation is going to be moderated by Mr. Sharat Chandra, Chapter President, GBA India. Well, ladies and gentlemen, as you can see on your stage and screen are our incredible panelists who have just joined us. And for the next 40 minutes, let's delve into the topic of cryptocurrency and blockchain fintech infrastructure initiatives. Well, with this, I'd now like to thank all our incredible panelists. We'd request you to please switch on your cameras and join us on the stage and screen. And I'd now like to thank and pass it over to our moderator for the show, which is Mr. Chandra, to take it forward with his panel. Thank you once again for joining us. And on behalf of BW Businessworld, we really highly acknowledge your time today. Thank you, and over to you. So ladies and gentlemen, as you can see on your stage and screen, firstly, Charles, thank you so much for joining us. Mr. Sharma, Pranav, thank you. And Kumar right there. And I believe some of our panelists are yet awaited to join us on the stage and screen. But I would, whilst we have a moderator joining us, if we could have certain opening remarks while we have Mr. Chandra joining us, if you could have certain opening remarks on the topic, Charles, if you could do the honors of your opening remarks on cryptocurrency and blockchain fintech infrastructure and initiatives. If you could have just a certain opening remark, and
absolutely happy to join here. Thank you so much, Bhavana. Thank you everyone for having us. So my name is Charles DeHousey. I'm the director for Consensys in Asia Pacific. And what we see at Consensys, we are a leading blockchain engineering company focusing on Ethereum development. Is really a full pace growth of the space from both the DeFi side. The developers are growing more and more in terms of community and developing more and more with mature tools. But we see also a very strong push from
the governments in general, as well as the world of enterprise. And that's something which many people have been waiting for some time. It's if you've been in the industry for a while, you've been through the early adopters curve, and you maybe have felt at some point that it was a bit early in the market. I think this time is behind us now, and there is really a very strong demand from central banks, for example, with the hot topic that is CBDCs, central bank digital currencies, and the enterprises in general, especially the industry of finance, is definitely pulling the technology, building beyond proof of concept. So it's a very exciting time, and I'm sure we're going to have a very vivid conversation today during the panel.
Absolutely. So, ladies and gentlemen, also as Charles just started and gave the introduction, I'd like some opening notes even from our other panelists. First up, Pranav. Pranav, if you could have your opening notes on this topic, we'd love to hear that. Over to you, Pranav.
I think, so first of all, thank you very much for this amazing opportunity. And I think it has become that category wherein, I mean, you can hate it, you can love it, but you got to speak about it, So I think, so these are very interesting times. And clearly, as Charles also mentioned that, I think there's a lot of conversations going on in various corridors, whether it is startups, a lot of exciting stuff happening there. We have, a bunch of them here. Of course, legal fraternity, regulators, and institutional players. Elon Musk, bought about 1.5 billion worth. Then there are others, who speak about it as a perfect storm, tulip mania, etc. So I think this is basically, I think, opening up various conversations, sort of creating a true globalization that all of us thought at one point, wherein there could be teams globally which could collaborate, create futuristic applications, transfer value in a borderless way. So it is definitely creating a challenge for regulators and various people to make sense of this new world and sort of build mechanisms to regulate, to monitor, to participate. So interesting times. Thank you for the opportunity.
Absolutely. Thank you so much, Pranav. Well, ladies and gentlemen, we do have a moderator, Sharat, online right now. Sharat, I was just asking our key panelists. First up, I asked Charles and Pranav for their opening statement on the incredible topic, and Jaideep and Kumar Gaurav are left. So if you could, conduct it further, I have taken your spot for the last few minutes. I hope you didn't mind that. And but I'd rightfully give you your spot of being the moderator for this panel discussion. Over to you, Sharat.
Thanks, Bhavna, and sorry for joining late. I think this has been a pretty exciting week, as Pranav was saying that for the simple reason that Elon Musk made an investment of $1.5 billion in Bitcoin. It has given a bull run to the digital asset space, and it has also created a discourse around regulation. So the ECB chairman, European Central Bank, she was saying that there has to be a global regulation around Bitcoin. And in the current parliament session, we have a bill which talks about banning private cryptocurrencies, but it also talks about the need for creating an RBI digital currency. So I would like to kickstart the discussion by putting the first question to Jaideep, the legal expert here, and seek his views, what he thinks, what are the ways cryptocurrencies can be regulated. And because we all, most of us would agree that a blanket ban isn't going to be doing any wonders to the industry, right? So what are the ways cryptocurrencies can be regulated, and can we regulate it as an asset class as compared to a currency itself?
Got it. Thanks, Sharat, and hello to all the panelists, all the attendees. Happy to join and weigh in on the legal and policy aspects. Yes, the first kind of headline I would say is regulate, don't prohibit. Now, of course, the text of the bill is not out in the public domain, so we don't know exactly the contours of the bill. But if we are going based on the draft bill that was published 2 years ago, then there would be a ban even on holding or transferring any cryptocurrency other than the official state digital currency. So as you mentioned, that's a very extreme step. In fact, even the Ministry of Electronics and Information Technology, which published its draft blockchain strategy recently, even they have recognized that public blockchains present a lot of benefits, and they have cited various use cases based on the Ethereum blockchain. And Ethereum, of course, requires Ether to run. So one wonders how the blockchain strategy would pan out if even holding Ether becomes banned under the draft bill. So for various reasons, including constitutional reasons, where it would be too extreme a measure, as we've seen the Supreme Court has interfered where the RBI measure was too extreme, as well as India's interest to be an emerging technology hub and promote innovation, etc. It would go against the tide of current of the global developments. For a mixture of reasons, prohibition is not desirable. Cryptocurrency is a platform technology like the internet. It can be used for good and bad. And countries have always dealt with platform technologies by regulating it. Now, we as a firm have made various suggestions on how this space can be regulated. The first step would be to regulate the intermediaries, which is the exchanges and the wallet providers. They, of course, many of them are already responsible, and Kumar is here, he'll share more on the best practices. But at least all the major exchanges do KYC, they verify their customers, they cooperate with law enforcement, they file taxes, they don't accept cash transactions. So they, in fact, give a window to the government into the industry and help create more oversight into the industry. Now, if the government can formalize these norms the same way it regulates banks, stock exchanges, payment system providers, etc., if it can regulate the crypto asset intermediaries, that will bring a complete visibility and legitimacy to the industry and also protect consumers. So happy to go into more detail as we go along, but that's what I would broadly say on this.
Thanks, Jaideep. And since you talked about Ether, right, and most of the discussions around digital assets are also driven by stable coins, where I would like to bring in Charles and seek his views, because most of it DeFi is built on 70% of DeFi is built on the Ethereum ecosystem. And in certain ways, DeFi has also propelled a discussion towards central bank digital currencies. And since Charles, you are associated with a couple of CBDC projects, I would like to understand from you, what are some of the motivations or drivers for central banks to explore central bank digital currencies, and what are some of the risks which the central banks are looking at, depending upon their jurisdictions?
Absolutely, thank you, Sharat. I think there was some a lot of work done by central banks over the years on blockchain in general, in digital asset at the beginning. But what was really a wake-up call was Libra, this Facebook initiative, which really accelerated the work of many central banks today. So if you look at the data from BIS, the Bank of International Settlement, which sits on the top of all global regulators, they estimate roughly about 80% of central banks working today on CBDCs. So there is two avenues these central banks are exploring. The first one is wholesale CBDC, which in a way is kind of the first path, in some way also maybe the easiest path. So wholesale CBDCs really look at the use of CBDCs between central banks and commercial banks, and how this can be optimized and kind of changing the pipes over there. Some other central banks have been pushing forward the topic and are already working on retail CBDCs. The big retail CBDC project is obviously the PBOC one, which started named as DCP, which is now renamed at ECNY. And it's really looking at enabling and kind of renovating the payments industry within China with the use of CBDCs. So two avenues where they're looking at. And as you mentioned, Sharat, there is also the stable coins. Stable coins are there. And depending where you look around the world, some countries are already open to stable coins, and they are comfortable with having, for example, the US dollar being issued possibly at some point in time by the Fed in a form of a CBDC. But if some commercial banks want to issue themselves stable coins with the right reserve against the stable coins, it sounds like some markets are open to that. So there will be a competition for CBDCs with stable coins, and I think that's really beneficial. Some other countries are closing the door to that. I think at the end of the day, the people will find their way, and it's better to remain open. but there is a lot of activities. And what CBDCs are bringing is essentially renovated and fair access to the fintech ecosystem of any countries. Finance is usually managed only by banks, mostly by banks, by a few payment companies, and these fintech have been industries have been pushing the industry forward. And if you can move everyone to a new kind of settlement system and new kind of infrastructures, it's going to give a fair access to everyone. So I think that's one of the big opportunities. The other opportunity is also to get some kind of live data about your economy. As a central banks, you've got the opportunity to, with your CBDC, to know where is the money going, how is the money being used, and that's really a great opportunity to understand and support more the economy in a more efficient way. And if you look at situations such as the pandemic, we are all going through right now. Central banks are trying to support their economy, but in a way, they always get information with a quarter, 2 quarters, if not more, of data coming later to them. So that gives a much more reactive economy in general. There is many benefits, and I think CBDCs will probably compete with stablecoins, or maybe leave aside for some time. That's really interesting to see how this history of a new kind of money is written before our eyes right now. We are very, very lucky. I'm not sure my parents or my kids will have the same chance as we have today to see this fundamental of the economy, money, being reinvented. It's a very precious time, and we should enjoy it as much as we can.
I think this is one of the biggest reinventions of money, and everyone would look forward to how it can transform cross-border payments and how it can drive financial inclusion. So at this point in time, let me bring in Gaurav and seek his views. What are some of the measures he, as a business owner, is adopting in terms of ensuring compliance with respect to regulations, let's say KYC, right? Because there's a lot of talk going around money laundering and whether you are onboarding users the right way or not. And just taking a leaf out of Jaideep's statement that how we can bring in more sanity to the legal process, right? How we can onboard users the right way so that we can keep bad actors at an arm's length. So Jaideep, Gaurav, your points on how you are taking care of the regulation as far as onboarding users are concerned.
Talking about Kasha, we are a banking platform. We are not a crypto exchange by ourselves. So, and if we talk about customer onboarding, I think our own customer onboarding process, like if we are giving a bank account to an exchange or to a wallet or to a blockchain infrastructure, we go through the same due diligence process which any bank goes. In fact, we work mostly with our correspondent. So for example, in the US, our correspondent is JP Morgan. Now, when you are working with the same ecosystem which banking is, it's you basically all the rules which has been made for any financial infrastructure applies also on us. And then what we have seen is that statistically, I think we have more than 200 crypto companies and exchanges who are currently our customers, which includes almost every big name in the industry. So in terms of transaction wise, I think more than 20 to 30% transactions which happens in crypto today, it goes through one of our customers, and their end users are doing. For example, if we take in India, almost every exchange is our customer. So, and obviously as a bank or as a banking platform, we do a lot of regulatory stuff, and we, at a time to time, we do keep check on the customers which we have. Let's say a customer A or a customer B exchange, we do ask them what's their KYC process. Sometimes we do a random audit on them. We ask them randomly, okay, you please send us the KYC documents of all these transactions. Many of these things which the existing bank don't do. And that's why I think there was a report which was very clear that if you see the malicious transaction, or let's say the bad transaction related to money laundering which happened through crypto, is actually only the 0.5% of the total crypto transactions which happen. But if you compare it with the banking industry, more than 2% banking industry transaction which happens for money laundering and terrorist funding. So if we not speak just on the assumption, if we go on the data which we see, it's very clear and evident that existing banks are much more involved in any money laundering process or any kind of terrorist funding, and at the scale is large as the no, maybe bigger than the GDP of India. So we are talking on that scale. So definitely we need to take a lot of work, and especially when you are working on CBD or any kind of public infrastructure, it becomes more easier to track. It becomes more easier for us as a bank to look that, okay, if you have received a payment and you have done a crypto transaction, where that crypto transaction sits. If it's on an Ethereum chain, you can easily pass the hash, and like we use one of the products from Ethereum, it's CodeFi. Correct me, Charles, if it is wrong. So the Ethereum have the CodeFi product, which we have made compulsory for every exchange which they are making, that if they are doing a US dollar USDT transaction, if they're doing an Ethereum transaction, they have to take it through, so that we collect also the on-chain analytical data on these customers. So as a banking platform, we are not just doing banking, we are getting all this data. We are seeing what kind of addresses are, we are blacklisting these addresses. So when you talk about transparency on the crypto, we have much more transparency than the funds which we receive from the offshore accounts of our customers. We literally have to go through the manual documents, which sometimes could be right and could be wrong also. So as a banking platform, our job is much more easier to actually monitor our customers' crypto transaction than the regular banking transactions.
Thanks, Gaurav. And I think most of the exchanges and crypto entities are already following the existing compliance rules. The government should step in and bring in more regulatory clarity on that, how they can be regulated. And I think that's my own personal opinion, is that maybe bringing all crypto entities under PMLA, Prevention of Money Laundering Act, can be one of the ways where you can bring in an extra layer of compliance and due diligence. Now, at this point in time, let me bring in Pranav.
I think FATCA have already done this work for all the countries, that it's not an option for any country to decide that. If you are a crypto exchange or if you are running, you have to have a money laundering measures in your system. And as a regulated entity or as a banking platform, it's our responsibility. If we are giving an account, we do check on this.
Right. So at this point in time, let me bring in Pranav and seek his views on how the ambiguity in terms of regulation, how is it going to impact the investment sentiment, right? Because we have more than 6 million crypto users in India and more than 300 startups and entities working in the crypto space. How do you see a complete ban, or let's say just RBI digital currency, so to speak, will kind of how will that play out in terms of investments, and what will be some of the focus areas for investors in as far as Indian space is concerned?
I think this is a very nuanced question. So let me also give a very extensive answer to this. So let's break this into short-term, medium-term, and long-term impact. So let's start from the long-term impact perspective. Now, this is like a global phenomena, and which is scaling, so much of institutional support, bunch of startups, genuine startups, best of the talent globally working in this space. People who have built successful enterprises, serial entrepreneurs, etc., getting into the fray, putting their hard-earned money and most importantly, the precious time of their life to build genuine protocol startups which can create, I would say, inclusive and collaborative ecosystems. So I think it's a train which has left the station. So in that sense, from a long-term macro point of view, this is inevitable. It's almost creating a. So I think when Thomas Friedman he wrote that book on globalization, and of course it became a very celebrated book. He was talking about how the borderless world would be created. So I think it was largely about travel platforms, etc. But now this is also about exchange of value. So if the internet is going to be present, let's say in Timbuktu or Rwanda, or I'm just taking some names of countries, or Russell Khema, etc. So, it's going to be eventually, exchange of value is going to happen one way or the other. So from a long-term macro point of view, it's bullish for everyone. Everyone is going to get a chance to participate. From a medium-term perspective, it's going to be very localized phenomena, because it depends upon which country you come from. Let's say if you look at India, I think largely the concern, my sense is the government could have is that there's a systemic risk, and there is of course a money laundering risk, which has been expounded in detail in this forum. But systemic risk is also very real. If let's say you have a large country where let's say large number of people are still not included in the banking system, into financial ecosystem in many ways, this could create, maybe this is a two-step journey. First is having a CBDC and then opening up to various other currencies, and then seeing that creating boundaries so that the money flow does not happen in unbridled manner outside the country, right? From a short-term perspective, answer is definitely it's going to be challenging, because the retail investors are going to definitely back off. Institutional investors definitely were never into the fray in India. The family offices are going to slow down, etc. I'm sure many people will also look at potentially moving out of the country, etc. So I think all those things will happen in the short term. But I think my sense is people who are genuine builders, who are doing great stuff, and like most of the people in the panel, I would say all the people in this panel here, for example, I think who are long-term believers in this space, who are long-term believers in innovation, in ability to participate, a borderless world, etc. I think this is inevitable. So I think the larger responsibility on us is to all of us is to come together and create a possibility for conversations, dialogues, and also creating self-governance so that we are able to, build, better conversations with, government regulators, etc. So this conversation, what you actually built this whole theme around compliance, KYC, ML was a very enriching conversation. It actually, I'm sure if there is a regulator who's listening to this would realize that, hey, they're like a bunch of people who are doing the right things and much more. So I think just a question of, getting these conversations out to the right audience and them experiencing that, hey, let's create a mechanism in the short term for people to participate so that the long term can be a seamless journey for all of us together without any stress, strains, both for investor fraternity as well as builders, people who are building amazing startups.
Thanks, Pranava. And I think you spoke rightly about the self-governance or self-regulation, where all entities in the crypto space can come together and they themselves follow the right rules. So what I would also like to bring in Jerry's perspective here about what he thinks about some of the investor protection laws. Do they need to be redefined for cryptocurrencies, or they can be reused in the same form? How the investors' rights can be protected?
Sure. So to some extent, the current regime does protect investors because you have the Consumer Protection Act and you have criminal laws like the Indian Penal Code, the Prevention of Money Laundering Act, etc. And if you look at some of the major Ponzi schemes and frauds which have happened, like the Gain Bitcoin scheme by Amit Bhardwaj, that was prosecuted under the Indian Penal Code and various other laws like the Price Chits Act and the Maharashtra Protection of Depositors Act. So it's not that the current regime is totally toothless. And if any consumer has a complaint on, say, the level of service provided by an exchange, they can file a consumer complaint under the Consumer Protection Act. And the new act is quite sound and robust and compared to the older act as well. Having said that, there are further tweaks which we feel can be done because these are generic laws. They will not, for example, successfully compensate an investor if there is a fly-by-night operator who makes off with the funds, because they don't mandate that there should be some reserves held or that there should be any kind of insurance. So that's why we had actually recommended some kind of licensing regime. Kumar's entity is obviously licensed, I believe, under the cooperative banking regime. But a generic crypto exchange is not necessarily required to be licensed by any financial sector regulator. So it would be good if a licensing regime is introduced, like this a similar framework to, say, a prepaid payment instrument provider or a payment system provider, where there are certain net worth requirements, there are certain reserves requirements, KYC requirements, insurance requirements, fit and proper criteria for the management, etc. And that will prevent unscrupulous players from entering and ensure that only responsible players are around.
Thanks, Jaideep. And one question I would like to also bring in here is, since the RBI is talking about the CBDC, what are some of the risks of disintermediation and how they can be mitigated if at all RBI goes ahead with a, let's say, a wholesale CBDC or a retail CBDC?
Is that to me?
Yeah, Jagdeep, your views.
Yeah, so if it depends how they structure the wallet, because if you look at CBDC as an extension of paper currency, to hold paper currency, you don't need any bank or financial institution behind that. You are directly transacting, and the Reserve Bank of India has taken liability for the note. So if there is a CBDC in a way that somebody can hold a wallet directly with the Reserve Bank, that would obviously disintermediate financial institutions. But whether the Reserve Bank wants to kind of take on such a burden where it will be responsible for that ledger and monitoring that ledger, etc., is a question. So they may in fact give that role to the banks, and then the banks would still have a role to play, and such as flagging suspicious transactions, etc. So so far the RBI has not come out with any details of how it plans to operationalize it. I think they're still exploring the feasibility. But yes, if the new bill comes to pass, as far as the official digital currency part, then there could be it could be operationalized. But how it would be operationalized, we'll have to wait and watch.
I think most of the central banks are looking at interoperable CBDCs so that they can facilitate cross-border payments in an efficient manner. And I think Charles would agree with me when I say that interoperability will be key to one of the design choices for CBDCs.
Yes, absolutely. You want to be interoperable within your existing systems, should they be RTGS or any national system. But you also want to be able to transact within your with your peers. So every central bank is looking at which stack of technology or which bridges you can build to make sure you get this access. And to come back to Jaideep comments on retail CBDCs, I think central banks probably wants to keep the banks within their ecosystem. There is no reason for them to jump into being responsible of all citizens' wallets, for example. And what we see in China for the retail CBDC is really some kind of hybrid solution where the CBDC has the same characteristic as a banknote, like physical money, but it's totally digital. So you can move it from one wallet to another, but it's always linked to a bank account at some point. And something people have not yet captured totally. And this is really, I think, the kind of killing features of CBDCs is this aspect of programmable money. So you will be able to design, let's say, Hong Kong dollar or Indian rupee or any currency, and try to give some rules to this money. Like this money is supposed to be spent only for your health expenses, or is supposed to be spent only in India or only in Hong Kong, for example. So there is also a challenge for central banks to design a new type of money, which will create and trigger a migration to a new infrastructure. And the reality today, if you look at what the fintech have achieved, and I think India is a great example, and there is many other countries also, where actually finance is working fairly okay. You can still optimize things, but the challenge is to bring value to the central banks with the benefits of CBDCs, and also to the user. You need to design a product. You need to design a CBDC which will really trigger a move to a new infrastructure, and automated KYC and AML, programmable money, cross-border payment within all the compliance regulations and constraints you might think of, are something which is really hard to reproduce today within the existing financial infrastructure, and which will really make sense for central banks to really deep dive in. The new money should not be only faster; it should be smarter. And I think we are still at the beginning of investigating what the technology can bring, investigating what means directional money, what means programmable money, and what it brings to the ecosystems and the stakeholders.
So Charles, I would like to seek your views on how do you see both DeFi and CDeFi, centralized, decentralized finance, coming together, and how do you see the adoption of enterprise DeFi in the coming years?
That's a great question. I give you two examples. Some of the leading DeFi protocol companies today, such as MakerDAO and Aave, few people have noticed, but these two companies have acquired financial license with regulators either in the US or in the UK. So I think there is today these two worlds are really operating in separate kind of universe, but they will be merging for sure. And I would not be surprised that some of the banks and regulated entities in some years, I cannot tell you is it in 2 years or 5 years. I'm not a magician, or I'm not able to put a timeline on this, but I think the infrastructure will be renovated the same way CBDCs have found their way into central banks. I think DeFi will find its way within regulated finance, and probably these two worlds will merge at some point because there is value, because there is automation, because there is transparency, because you can pool a lot of resources. So we have to give time to all these companies and big organizations to realize what it is. We see in Asia, in the US and Europe, some banks starting to offer digital asset custodies, some of them starting to offer stablecoin access, and some others. So I think everyone is starting his journey, but it's definitely emerging, and it's not going to be one world or another. I'm much more a supporter of a convergence kind of theme, where these two worlds actually will find ways to operate together.
And I think regulation will be the right driver for adoption, and both in DeFi and CDFi as well. So let me come to Gaurav and seek his views on the need for financial literacy, especially for crypto products, right? How we can make the common man on the street aware about what are the right choices about investing in the right crypto products. How one can drive that? Gaurav, your views.
No, just reading. I think people have to educate themselves. Definitely, the retail firms who are in the space, they are doing a lot. We just did a JV in India with the United Multi-State, so that we can also have a physical branches in India, so people can get the same feel and touch. And most important, when we talk about Indian market, it's a different market than the where we were operating before. It's US or UK or Europe. Here, people still coming from a taboo where we need to have a physical presence. We need to have seen in front of you. And it's not wrong. It's just how the culture in the country is. If you see, even after demonetization, the cash circulation in the country have increased instead of going down. So definitely the digital payments are going up, but the cash is still in the country because of how the whole country has been organized. So yeah, different companies, but there is no like one pill which you can give to 7 billion people and they will be next day get enlightened with the cryptocurrency. They have to go and read. My only advice is just don't invest in something because others are investing. Try to read it, try to understand it. There are firms, first rule in any business or any crypto is that if something which is over-promising, you have to be careful. You have to read in it. So if we just talk about the Indian scenario, I don't think anyone have lost any money in legitimate cryptocurrency. They have lost money in scams, which actually had nothing to do with cryptocurrency. They were just the name of crypto. So no, it's going to be, Jaideep knows much more of these companies because maybe his clients keep coming to him. But if you see every transaction where the police have to be involved, there was not a legitimate crypto transaction. It was something which is on the paper. And that's why I really encourage the move which Indian government is taking, so that we can have not the blanket ban on crypto, but a blanket ban on these scams, because they are bringing just the bad word for the technology, which is really innovative. It's a new money which is being designed, not only programmable, it's smart, and most important, it's something which cannot be faked. Today, even between the banks, we have sometimes transaction goes and we find out that the correspondent banks just lied about the transaction. We come to these kind of scenarios. So having this kind of money in this really interconnected world where everything is just digital and everything is smart, we really need a smart money. maybe it not need to be used by the consumer directly, but at the infrastructure level, we definitely need it as of today.
Thanks, Saurabh. So we are coming towards the end of the session. We have just 4 minutes left. So I will ask Pranav to share his closing comments about what he thinks about the recent announcement by Jack Dorsey and Jay-Z about setting up the B Trust Fund and how India can make the most out of it. Pranav, your thoughts?
I think this is just the beginning, and many more such trust and funds, etc., will come, and some of them will be motivated, some of them will be very agnostic money. So I'm not going to comment on very specific funds, because there are different angles to it. But I would say that this space is exploding because this is a good intersection of innovation as well as value, right? And just want to pick up on the previous question that you asked, Gaurav. This is very much similar to asset management industry in India. I still remember that when I joined very early on, mutual funds were called as a scam. And practically, SEBI sort of evolved and understood the regulations, and a lot of course, asset managers were pulled up. They paid fine. So various things like, for example, Chinese wall between research team and the investment team, these things are like international norms, but they came into being over years. Then, of course, there were other bodies, industry bodies, which were set up. So I'm saying there was a point at which internet was considered to be banned. There was a point at which, PCs, computers or laptops were considered to be banned, extremely high duties, etc. So I think we are just going through a cycle right now. So the reason I think all of us are at ease is because we are all genuine people, authentic people doing the right things, getting people to participate, getting people to, create value. And I think my limited, closing remark on this would be that if there is an audience which sort of, senses that, hey, this is going to be banned, so why should I touch it, etc. I think in a way, what they are missing out is participating into the future. And there are a lot of intelligent people who participate, sort of creating trust, buying in personal capacity. The Elon Musk, people who are inspiration for youngsters, etc. on one side. On the other side, you have these, young people coming together, creating protocols, creating value, global companies, funds globally participating into it. Then, of course, there's a massive opportunity for government to earn revenue on taxation, right? And then, India can become the back office of blockchain, like the way TCS and Infosys ushered a boom in India, or what Flipkart could do, or to the e-commerce industry, or this whole sharing economy, what happened. So I think there are multiple facets to it. So my closing remarks on this would be very simple: that let's participate, let's create a framework in which all of us can create I would say umpteen opportunities for Indians, and take it forward from there.
Thanks, Pranav. And I have got 5 more minutes. I mean, got an extension. So
Amazing.
What I can do is maybe ask everyone, all the panelists, to share maybe one line as their closing remarks. We can start from Charles.
I will say that the regulators will regulate. It's not always the negative things. It goes up and down. So some quarter you feel down because your regulators have not done exactly what you were expecting. But eventually they will probably tax this economy, and tax will be a good sign that things will keep progressing. And also try to not look only at whatever asset price movement, but look also at all the army of engineers reinventing their career, the army of entrepreneurs reinventing economies, businesses with this technology. It's really mind-blowing, as much as the internet was mind-blowing some decades ago. And the internet got the same kind of rocky path before it gets like full adoption. So we just need to be patient, resilient, keep doing the right things, and not looking only at short-term gain, but looking at how you can grow the people, how you can bring them access, and every time you can bring an engineer to the world of blockchain, helping him to understand, him or her, understand smart contracts, how distributed system works in general. That's always a gift, because I think it's going to keep them busy and well busy, and help them to upgrade their career for many years. So feel free to just bring and educate the teams if you are an entrepreneur or a technologist, so everyone can be part of this, and be patient. I think there will be peer pressure also. So I feel a bit of tension right now in India. You seem to have a question mark on what will be the regulators' view. But there is some really good things coming at some point in time. So patience and resilience as the technology is.
I think the keyword would be patience and resilience. Jaideep, your thoughts, please.
Sure. I'll just make two quick points. One is crypto is not just about trading, contrary to popular perception. There's so many applications. UNICEF has used it. The World Food Program has used it. It's not just a hotbed of speculation. There are genuine applications built on it where the most talented software engineers are working on it. So that is one aspect that regulators should keep in mind, and that blockchain possibly cannot succeed without a good crypto ecosystem. The second thing is, people. I've seen some outrage on Twitter, etc., about the new law, but real participation has to come with genuine engagement with government and MPs, etc. So people should kind of genuinely reach out, whether it's by whatever means available they have, and make their point across, whatever their point may be, whether it's for, against, or in between. And that will give a more kind of informed perspective to the lawmakers.
Thanks, Jaideep. Gaurav, your closing remarks, please.
It's just, I think Jaideep and Pranav already, talked everything. So I think what's happening in India, just because it's very India focused, what's happening in India is very normal. That's a process we have to go through for every industry. Also, the regulators evolve over the time. The SEBI, which we see today, was once upon a time was a dummy organization with almost no power. They were just having as less as like any common organization which cannot do anything, even if they can see there is a scam going on. So regulators also evolve, they learn. So it's not the regulators are just living in the cage. They are also learning and evolving, and the same how SEBI have evolved for the mutual funds and other things. I think the regulators will learn and evolve, and we will have a better crypto regulation. It's just it have to go through this process, what's happening. So this is not something to be afraid of. We have to understand the technology is a revolution. There is no doubt about it. And the closing remark is just buy some Bitcoin and crypto.
Yeah. Thanks, Gaurav. Thanks, Pranav, Jaideep, and Charles for sharing your thoughts. And I think this has been a great discussion. Thank you, everyone.
Thank you so much.
Thanks to you.
Thank you. Thank you so much. And thank you to all our panelists for giving in your esteemed thoughts today. We really value your time. On behalf of BW Businessworld, thank you for joining us. So, well, ladies and gentlemen, it's been going great. And now we're moving on to our next panel, which is scheduled at 4:25 p.m. Indian Standard Time. And we're right now on the second day of the BW Festival of Fintech 2021. Well, I'd like to thank again our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. And right now on our 8th panel discussion, which is scheduled from 4:25 to 5:05, is going to be on the topic Fintech Changing the Future of Asset Management Sector. Well, this incredible panel is going to have these panelists. First up, Mr. Sanjeev Sharma, co-founder Squirrel, Mr. Swastik Nigam, founder and CEO, Winvesta, Mr. Dhaval Kapadia, director, portfolio specialist, Morningstar Investment Advisor, India, Mr. Yashvardhan Aaron, co-founder and chief growth officer, Ruptok Fintech, and Mr. Prabhakar Tiwari, CGO, Angel Broking. And this entire conversation is going to be moderated by Mr. Abhinav Trivedi, Managing Editor, BW TV and Digital. Well, with this, ladies and gentlemen, I'd request all our eminent panelists to join us as you can see them on the stage and screen. And I'd like to pass on the onus of moderation to the very talented Mr. Trivedi for taking it forward with his panel. With this, thank you all once again for joining. Over to you, Mr. Trivedi.
Thank you, Bhavna. Thank you for this very great introduction. Now, before I start introducing what is asset management, a lot of people do get confused between asset management. What exactly is asset management? And we have been talking about fintech since morning, whether fintech is useful, whether fintech is not useful from consumer perspective, from user perspective, demand, supply. I was a part of the discussion early in the morning. Before I, get ahead and enter the technicalities, my blank question to all the people here, and I'll start with Dhaval. Dhaval, I really like your headphones.
Okay.
I'll start with Dhaval first. Dhaval, does asset management as a sector takes fintech as a threat, or does it take it as an opportunity? That's my first question. It's open to all the panelists, of course, but we start with Dhaval.
Yeah. To me, I would honestly think it is an opportunity, right? I mean, whether it is in terms of, fintech could help in various ways for the asset management sector. One is, obviously, if you look at, the asset management in terms of, conducting what are the various things that, an asset management company or industry would do, right? Obviously, they are managing money. To manage money, they would, do research, on various instruments that they are investing into, whether it's stocks or, ETFs or, debt instruments and so on and so forth, right? So that's one part of it, at a much higher level. The other piece is obviously, acquiring customers, right? For people who buy into, those investments that or instruments or funds that the asset management company is offering, right? So, I mean, I would say, these would be two sort of core elements. Obviously, there are many more parts to it, like servicing, operations, transactions, and so on and so forth. But if you look at each of these legs, whether it is research or onboarding or, operations or transactions and so on and so forth, I think, fintech obviously can play a significant role in each of these areas, right? So, I would think it's an opportunity, when it comes to whether it's, when you're doing research or when you're transacting. I mean, if you go back, a few years ago when we didn't have so many digital platforms, right? And executing trades, just imagine executing trades during a pandemic, where everything is locked down now without, fintech or the platforms that we have available right now. A lot of that would not have been possible, right? So, I would say from various perspectives in all of these areas, fintech, again, customer onboarding. Just very quickly, I know there are a lot of people here to talk about, more items as well. But, reaching out to retail, investors, people who want to invest, say 1,000 rupees or 2,000 rupees into, through SIPs through a couple of mutual funds. Now, I'm not sure, whether too many banks or wealth management companies will go after these guys, right? So, but an online platform like a fintech can obviously, provide, is open to even retail sort of the smallest of investment tickets that can be supported by the asset
I think there's some
companies.
audio fluctuation at your end. There's some audio fluctuation.
Okay.
Was I the only one who was hearing it, or did other panelists hear it as well? So that is the problem with technology. You're not sure what's happening.
Yeah,
please go
ahead. So maybe I'll talk a bit slowly as well. Is that so I was saying that onboarding such sort of clients or investors from small towns, small cities. I think without fintech platforms, I think it would have been very difficult to onboard retail investors into the ecosystem. So I think from various ways, examples that I gave, I would think it's an opportunity for the asset.
You classify it as an opportunity. It's not a threat for you. Swastik,
that's right.
You don't seem happy with Dhaval's answer?
No, I actually think that generally fintech is on both sides of we are competition and we are collaboration.
Yes.
We are competition because if you sort of see it as new asset managers trying to really have a foray, you can't really go the old traditional route.
Correct.
Right? Recognizing compression on fees, and we've sort of seen that movement from active to passive management in the rest of the world. Right. And if you think of it, like some of the pieces which Dhaval mentioned about risk management, the fact that actually passive asset management is part of also trying to take the burden of risk management away from the active investor to the end customer as well. So yes, I've seen a fee compression, and that fee compression, of course, also results in the distribution stream sort of being a bit of a pain. However, particular to India, we see that it's a far greater collaborative opportunity. The ability to distribute on a what you could call almost a phygital basis, right? Empowering a distribution network with the digital technology really adds a lot, where such a small, less than 5-6% of India is really even investing actively in financial assets.
Less than 2%. Just if I rightly understand.
Actually, yeah, you probably are right? I'm just talking in terms of number of demat accounts and sort of where you really get that to as well, right? And the number of folios. So absolutely, it's an extremely massive opportunity for collaboration. What that would also result is in the evolution of the asset management industry to becoming almost digital first, right? You've seen specialist managers going into becoming digital first as part of their distribution in many parts of the world. And we can see that, especially, if you don't have the luxury of a massive brand name, you are a single, lone warrior. It's far easier for you to create a kind of a far more digitally nuanced product than it is for you to be doing distribution all on your brand's name.
Sure. Now, the other panelists, Yash, Prabhakar and Sanjeev, what I would request is that, the problem with the generic question is that the first two panelists take away the chunk of the answers and the remaining one don't have to add much. So if there is any other aspect which people want to add, we can continue with this question or we should move on to the next part of the question. But anyways, I'll give the mic to Prabhakar.
Yeah, so Abhinay, I would like to add to this, I think, see somewhere I would say it's more of like a strategic partner in a cooperation mode, and I will talk about how Apple and Samsung, which will compete like cats and dogs in the smartphone business, will compete on technology where Samsung had an advantage. And Apple
don't tell me also here, right? We are having them compete in every sector.
Correct. So the point I wanted to make here is that, and the other important thing is that today I do not think that the gap between the traditional conventional company and fintech is so much. Like if you look at angel broking today, like we are a 30 years old organization in the brokerage business. We have always been innovative. Today we are competing with the likes of Zerodha, Upstocks, and Grow, which some of them are VC funded company on equal terms. We are having the second largest exchange turnover. We are like in top 3 in terms of demat account acquisition.
Yes.
In top 4 in terms of active clients. The point I'm making is that you cannot assume that the companies which have been in the business for longer are necessarily conventional and do not know about the technology. So when you talk about, see, the only advantage fintech have is somewhere they start without a legacy. So they are able to show more nimbleness. Many of them are funded by VC who have a longer gestation period in mind, and they do not ask from ROI from a day one. So the point I'm making is that it's not about considering them threat. I would rather like to learn with them, partner with them. Like we partnered with Small Case, we partnered with Strix. We partnered with those people. And just today, I would like to introduce angel broking as another fintech. Now you may laugh at it, thinking that 30 years old history. I'll say, so what? I'm already competing. I have everything available. I can open your account in 5 minutes. My experience is amazing. There are other things which I will take care of it in future. So I would say net, the point I want to make here is that it's a matter of being a strategic partner. It is a co-optation out there. And even traditional companies can convert fintech. It's all about using technology. And that's what I think is the future.
Strategic partner, that's what Prabhakar said. Sanjeev.
I think what Prabhakar and Swastik, they really hit the nail on its head. I think the partnership is the way to go. We've seen globally also, and I see that happening in India because the opportunity in India is massive. You look at the household savings, we are, even if you look at the MFAUM, we are at 30 lakh crore on the Jan end number. It's 11% versus, the GDP. Whereas, the rest of the world is something like 60%, 70%, 80%. So there's a huge gap, the headroom is huge. And I think there's both the play for the, traditional asset management along with the fintech, both of them can come together and, just grab this opportunity.
Okay. Yash, you seem more curious.
Hi, good afternoon. First of all, thank you so much for having me here, Abhinav and the BW team.
Sure.
So just building on from what the other panelists said, the next growth chapter in our great country is going to include the financial inclusion of masses, right? And that, for that, value needs to be created and not captured among each other. So, of course, both these sort of players need to work hand in hand. They need to collaborate and they need to just provide, the ecosystem to facilitate that.
Okay. Facilitate that. That's what you feel, Yash. Now, the second part of the conversation, I'll start with Sanjeev here. Sanjeev, asset management is not something which customers use on a daily basis as compared to credit or a debit card or maybe digital payments which are done on a daily basis. That's where fintech is spreading its arms and like anything. What do you think is the basic difference when it comes to the approach of asset fund managers in using fintech as a help tool? I mean, rather than using it as a data tool, is there any specific help which or a specific collaboration which asset managers can look forward towards fintech rather than just using it as a data tool?
I think what a lot of asset managers globally and also in India has started doing it is that they are reaching out to the fintech players and try and construct product based on the customer persona, right?
Okay.
So the idea is, see, in a typically physical
You're saying
world,
customization of products.
Customization of the product. For example, typically in an offline world, you will have a client and an advisor advising him on a various product, depends on his requirement, and it's very difficult to replicate to entire the mass, right?
Correct.
He'll just say, okay, put X amount of money in this fund and Y amount of money in this fund, right? Whereas when it's a fintech coming in, he's doing a goal-based investing based on the algos and based on his risk profile. He can customize it based on the user-to-user interface. So that's what we have seen, happening here.
Customized solutions. Swastik, do you agree with what Sanjeev has to say?
Yeah, no, I believe that's quite true. The one particular distinction that I find is in the why asset management exists for us is that you're basically outsourcing decision making, right?
Correct.
That's the key to it. Now, of course, as more and more, and the reason why it's done it is for two reasons. One is lack of experience, right? And you are all and asset allocation investing is by the nature of it a suboptimal exercise, right? The second part is that the lack of time, right? And awkwardly enough, the more sophisticated you are, the more time poor you are. Even if you have the wherewithal and the capability to do it, you just don't have the time to do it, right? So outsourcing that decision making to third parties is where it sort of works. Now, like you mentioned about the credit cards, all of those consumer items, there is no dirt from the persons, from the end consumer's point of view of decision making, right? Because yes, I want to buy it, swipe it, make it as seamless. So I'm just sort of trying to compress my time. I don't have an allocation issue over there.
Sure.
Asset management does have this, right? There's this additional layer of value that needs to get added in terms of that asset management, right? Now, particularly because of the pandemic, right? And particularly because a large number of asset managers have not done very well, because if you were to try to follow traditional rules in asset management, you would have tried to sit yourself out in cash for a very long amount of time, right? Throughout the pandemic. And that's meant that people have been a bit distraught and saying, okay, I'm going to do my own investing, because now I've suddenly been able to add time to, to my sort of, to what I historically didn't have. And that's, so yes, to answer sort of, to add on to Sanjeev's point, yes, we do see the persona building is definitely there. Some of our assumptions of that persona have been a bit disrupted through the pandemic, because we've suddenly found people who weren't, who historically were time poor and aren't any longer. And that's moved towards, direct investing. That's why I've seen a massive increase in brokerage accounts, an outflow from the asset management industry in many places, a move towards passive investments as well. So that's the risk that we have to bear with, and that's one thing which the asset management industry will need to look at coping up with. At the same time, creating products is a very valuable capability right now, and a very valuable opportunity, because you've suddenly got a much larger sophistication of the client. He's looking for far more, right? Historically, he thought I'll just give a few lakh rupees and every on SIP, and someone else is going to do it. But now, because he's also got this time, that's meant I really need to look back at my portfolio and figure out what's happening. So the bar on investment managers and asset managers has risen. I need to be delivering more product. I need to be making these products more bespoke. I need to be finding more asset classes for my end client to be adding value to them. And that's where we're working extremely well.
Sure. Yash?
Yeah, so you touched upon data collection. The other aspect of it is data analysis. And as Swastik touched upon, it helps you to develop more efficient marketing strategies and just designing product to cater to the customer in a way. A lot of fintech platforms have other products for which they have. So they have cross-selling. They have a lot of other data available.
Yeah, you're back. You're
Hi,
back.
sorry, am I?
Yes, you're back.
Yeah, we can hear you.
Yeah, so I was saying that a lot of fintech platforms have customers onboarded already for other products that they're dealing with, and it just allows them the opportunity to digitize the onboarding process once and for all, and just provide them access to mutual funds at very low costs, at very low transaction charges, and not just mutual funds. I mean any financial class. So,
sure. Prabhakar?
See, today, like if you expect this 20 to 30 years old customer who has grown with Google, Facebook, iPhone to talk to some gray-haired, financial advisor about their financial planning, then we are kind of totally mistaken, right? I mean, they are more comfortable. Sometime back I was reading some Oracle research, and they are saying that people in India are far more comfortable with robot than humans to talk about their financial stuff and all, right?
Okay.
Angel Broking was among the first to kind of launch a rule-based ARC platform, rule-based investment engine. I mean, in common parlance, you can call it a robo-advisory. And the problem with most of the algorithm is that it can do the backtesting very beautifully, because everything is like a wisdom in hindsight, but you cannot take away the human emotions, the way it plays out. And most of the financial advisor will tell you that while you can get a particular asset class intelligent information from some individual, but the holding and the kind of advice I can give you, the mindset change I can do for you over a longer period of time, I mean, nobody can match that, right?
Okay.
So somewhere, in my opinion, that's why such solution will work, algorithm will work. And from an angel broking angle, because we want to be number one in our business and also kind of have a significant play in distribution business in next 2-3 years time frame, we are figuring out to, and in fact we have like moved to a open architecture, and we have a smart API in place for algo trading and this high frequency trading. And also we are moving to open architecture where we want other fintechs to build propositions on top of it. So whatever we have been able to build as a capability, we want to offer to more fintech to go out and kind of do business on top of it. In fact, we are also willing to allow them to have an access to our customers where they can try out their newer ideas. So this is how it is kind of moving for us.
Dhaval, for you on the separation of categories?
I would think that probably one area in which fintech probably needs to figure out a way to work better is how to manage investor behavior, right? And probably Swastik and Sanjeev maybe touched upon it a bit as well. That how do you try and ensure because you may not have a physical interface with the investor. How do you ensure that he doesn't become his own enemy in a way, right? When it comes to managing their own portfolio, right? So I think that's one area which probably last year we had a very short bear market, so to say. So we didn't have a very long period where we saw a big downturn in the market, and that's when you would have actually seen the reaction of investors. But you've seen something else happen, like Swastik said, in terms of people starting to try and do stuff on their own, right? Buying stocks and trading on their own. So how do you manage this investor behavior? Sitting outside, you always think that what are these people doing? Why are they doing what they're doing in that sense, right? I mean, how long can this continue? How long do you think you can make money just by trading day in and day out? So I think that's one area where probably fintechs need to really try and sort of up their game, in the sense that try and figure out how do you deal with investor behavior. How do you ensure that the investor doesn't become their own enemy, so to say.
That's a very interesting point you've brought, and now this calls for a different direction to this conversation we are having. Now, when it comes to fintech helping asset management companies in retaining customers or expanding the customer base, when compared to US, India is a very underserved market. People hardly invest. Less than 2% of Indians invest, and when it talks about mutual fund, people just know that mutual fund sahi hai. Beyond that, nobody knows anything. Sahi dal khichdi bhi hai, lekin dal khichdi log khate nahi. People are just aware ki wo sahi hai. My point is, and I'll start with Yash, how do you think fintech companies can enhance customer base? What needs to be done on the behalf of fintech companies to help asset managers to enhance their customer base. Like one of the panelists rightly highlighted, judging the emotional factor. How can fintech solve something like a confirmation bias, which is more of a human trait than a technology trait?
Yeah. So the key advantage of technology, I mean, it remains that it is not bound by boundaries or the need of huge resources. Technology can. Sorry, am I audible?
Yes. Please go ahead. Yes.
So technology can just enable you expanding your reach and expanding your horizons. I mean, technology has quickly moved from becoming a business enabler to becoming a business driver. And so basically, the fintech platforms need to collaborate to just take the products to the masses and just include them.
Okay, Dhaval, I'll come to you because you initiated this conversation, balancing the emotional and the technical side. So I give the mic to you. What do you think fintech companies need to do in order to help asset managers to expand their base, apart from, of course, addressing the emotional or the human factor?
No, I think, probably, obviously, they're doing some of it, right? I mean, they are reaching out to segments that were probably, not catered to earlier, right? I mean, like we said, a lot of new investors are being added through some of these fintech platforms that we know of them, right? I mean, so I think they are able to do that. I think what we need to see is that how well are they able to sustain this, right? So you have people who started SIPs, who started investing, but how are they able to sustain the entire customer journey, right? It's not just about investing in an SIP, right? It's about achieving a goal, right? So how do you actually ensure that the investor stays through that journey? And probably what's going to happen, to my mind, is that as the investors wealth grows, as their goals sort of increase, as they grow in life, maybe they may need a physical advisor as well. I mean, probably, right? So can fintechs also in a way, can they sort of also build out a bionic kind of where, or a phygital kind of an approach where you have a mix of a physical presence as well as obviously an online presence as well, but
combination
to try
of
and
both.
sustain, so combination of both, so that you are able to sustain and stay with the investor through their own investing life cycle, as they're achieving their goals, and not just to my mind, as of now, probably it appears that maybe a lot of the fintechs are successful in onboarding new investors, right? But like I said, how do they really build out through that life cycle is the key. How do they increase the average holding period for an investor in a mutual fund, right? Even time and again, data shows that the average holding period for most investors, even in equity mutual funds, doesn't exceed 2 to 3 years, right? Which as we know, is a very short time frame to get the right kind of experience and to be able to achieve your goals from investing in mutual funds. So I think the key is, how do you stay with the investor through their life cycle?
So this behavior which you're mentioning, Dhaval, is not only confined to fintech, but in general, the mutual fund investment. This is a general behavior which investors
absolutely
have.
It is a general behavior.
So Sanjeev, coming to you and taking from Dhaval's point, do you think fintech, I mean, how should we solve this problem?
I think one of the things which we have done, I think some of the other platforms are also doing that, is that they're trying to, move away from showing the performance of a particular scheme for the last 1 year or 2 years, because typically earlier it used to be the best performing fund for the last 1 year, whether it's a sectoral fund or infra fund or thematic fund, irrespective, they'll just show and the user will say, okay, it's 100% return, I will invest in immediately, right? And that's a recipe for disaster, right? So what we've seen is that now everybody's moving toward from this kind of a marketplace to a goal-based investing. So instead of, so we are not in a business of selling returns to the customer, right? We are trying to say, okay, you are coming to my platform, can I help you reach your goal? Right? The idea is, over the next 12 months, 6 months, 18 months, 24, or most of the goals in our platform are fairly small, because the audience which we are catering to is very young. Their on average age is 24, 25 years. Most of them are saving for, say, buying a bike for after 3 years. Some are buying for a trip to pre-COVID trip to Europe, right? So those goals are very small in a sense that the equity doesn't come in that much. But instead of saying for this particular goal, invest in this particular fund, No, we are doing okay. Instead of that, you invest in this is the asset allocation. This is you go about it, and do not talk about performance of the schemes. Just say, okay, month on month, a year on year, how what is the progress of your goal vis-a-vis reaching 100%. So that is the only thing which will take the emotions out of investing. Otherwise, he'll keep on seeing the dashboard and whether it's a green or red, and he'll just act accordingly, like the whole just talked about.
And this approach, I would like to just lay some more time on this, Sanjeev. This approach of yours, how did you conclude that you have to follow this approach? Was it based on the data you gathered from the market, or was it peer-to-peer suggestion?
So no, I think one of the things was that both me and my co-founder, we came from the industry. So since you are in the industry, you can see the gaps more glaringly. And when we did a feedback before we launched the product, some of the feedback was from the users was that, I get a call from my RM, a bank RM or XYZ. Every time it talk about he's trying to sell me a product. It's all about him, his requirement, his targets. It's not about me. So I think that's what kind of drived us to make this product.
Sure. Swastik?
Yeah. So I think what I strongly echo what Sanjeev just mentioned. To add to that, so what that does tell you is it's actually a back-end, a product-driven, industry. It's still right? And that's actually one of my challenges with mutual fund Sahi here. Because when mutual funds Sahi has started out as a practice, the rest of the world was moving out to saying mutual fund Sahi nahi hai, right? Move to passives, right? So, but it does play a very important role, because it now is recognizing that the financialization of assets does need to take place. People need to move away from hard real assets into financial assets, because that is what really then starts powering the economy, right? So all things said and done, for the purpose that it is, it's definitely a solution. It does have a skewed incentive structure in the industry. On the behavior side, right? And so at Investor, we enable people to invest into US stocks, into foreign stocks. And the GameStop example is a really, really good example, because you don't have GameStop-like phenomena in India.
Correct.
But all these significant circuit breakers, you don't have short selling of the kind that it does. You don't have this massive activist kind of industry. And we had covered GameStop in the second week of December, when the stock price was like $17. Just a small industry story based on the reports and so on. And I mean, of course, we probably had some investors who went on to buy it and did phenomenally well. But we in fact had issued to them that it's dangerous, right? So fantastic that you did really well, but this is still a dangerous play. We're not in the investment advice business, but these are the kinds of phenomena where we see that we have a bit of a duty to tell them, right? So, right, as to what, the things that you don't know, the things that you are missing, that you have to take into consideration, right? By and large, the retail industry has lost out money in any of these bubbles, right?
I beg your pardon, I could not hear the last line you said. What?
And I was just saying that by and large, the retail investors have lost money in most of these kinds of bubble-like environments.
Okay. Prabhakar?
See, in my opinion, there's a big change in investor behavior. So in what we know as a thumb rule in stock market is that retail investors join in droves when the stock market is on record highs. That's what happens, and they come for the IPOs because they believe they will get those stock at the lowest price at that time, right? But it's the first time during COVID-19, when the stock market all quality stocks were in deep discounts and people came in droves, and this is a very change in behavior which happened. And it happened not because they have changed their mind, this is the time to enter stock market. It happened because their physicality has changed. They were confined in their homes, they had plenty of time now to kind of, do their studies, talk to their friends, and then, choose the quality stock and enter the stock market. After going for low for another 1.5 months, the stock market started picking up. And then the second order effect came in the play, where they went to their friends and family, told them the stock market is a great place to work, a great place to make money. It's just like taking a walk in the park, and they came in droves. And that's how still now, I mean, we are seeing, so much of, kind of customers joining us. Like in last 2 quarters, every quarter we're adding 5 lakh customers a month. Okay. Almost 10 million customers have opened their Demat accounts in last 1 year. These are like gigantic number. and being the top 3 in the Demat accounts opening in this country. I mean, we are seeing that number. So in terms of investor behavior, first I want to tell you that it's not the same behavior which will continue. For example, there's a change in behavior. I told you about how stock market behavior has changed over time. The second aspect I want to make is that most of the time why people have a short-term approach, particularly in retail, why they kind of break their mutual fund or without giving it time to grow, is because the disposable income was a big issue in the country. I mean, people didn't have so much disposable income, so much investment amount was not there. They were not keeping emergency funds, so they will break their mutual fund and other things, because of the requirements which are coming in the way. The best thing which has happened now, and I'm telling you, this is more of a tier 2 and tier 3 phenomenon. So we are seeing almost 90% of our customer for last 1.5 years are coming from tier 2 and tier 3 towns. And more importantly, go ahead. You're saying
please complete your line.
So and they are coming millennials. They are into first time into their job, and whatever they are saving thanks to COVID, whatever they could save in the commuting and socializing cost, from the Starbucks cup of coffee or whatever, they're able to put that back in the stock market, right? So in my opinion, the investor behavior, of course, is forever evolving. Fintech algorithm may help. And for example, the ARC advisory we have, it's like a mini PMS, though we don't call it, but we give. So if you want to enter the stock market with 10,000 rupees and with 5 stocks, we will give you those stocks, and how you break your 10,000. After a month, we will ask you to rebalance. Okay. But if you don't rebalance, we can't do rebalance ourselves because that's against the norm, which is there. They have to do the rebalancing themselves. And we are seeing the improvement of rebalancing compliance is improving. So I believe the investor behavior is not a kind of, something which will keep on evolving, particularly in a country like ours, unlike US.
Okay, so investor behavior is evolving with time. And like Prabhakar also pointed out, most of the customers are coming from tier 2 and tier 3. A lot of them are first-time investors. And that's what brings us to the last part of the conversation. Relationship management, a very key aspect when it comes to, for asset management companies, even a small digital payments app, even a small retail shop. Now, if I ask about relationship management, a very key aspect of tech companies, fintech being a part of them, is data collection. Now, there are 2 aspects to data collection. One is predicting the user behavior. Second is giving the customer the solution which they might need but are not yet aware of. Now, when it comes to fintech and asset management companies collaborating for future work, will it be helpful for asset management companies, and or what do they expect from the fintech companies so as to take relationship management to a completely new level? Not catching them off guard because there's a huge collection of data at their disposal, but serving them in the rightful fashion so that the user base is also increased. Swastik, we'll start with you.
So relationship management is a very, I'd say, nuanced field, and becomes even more nuanced, particularly.
Yes.
Recognizing that, see, fintechs, we tended to start on single verticals. However, the relationship manager has the duty of trying to tell on a more wholesome basis, right? Now, due to the phenomena that Sanjeev and I sort of mentioned about it being a very product distribution driven kind of industry, relationship management becomes even more difficult because, at least the SEBI IA rules now sort of give you the incentive structure to need to be client focused. So absolutely, it is tricky that, one, is the relationship management industry well kitted out to give a wholesome sort of solution? And unfortunately, in my view, it's not so, except for the ultra HNI and the HNI clients for whom, the relationship managers tend to manage on a far, far more diverse asset allocation kind of basis, right? Second,
so you can't outsource your relationship management to a startup, to a fintech startup.
No, I don't think the relationship management actually is the part which is the least fintech friendly, right? You can draw insights out of it, right? You can draw insights. You can use this data to sort of say, like how Amazon would say, people who bought this book bought these other books, right? So yes, you can draw those insights and say, what 20 to 30 years old, 30 to 40 year olds, these are what people are sort of investing in. And these are the good reasons why you would, and these are the disclaimers why you shouldn't, right? But at the same time, the fintech industry can enable, but I don't think it's the best place for the relationship manager to stay. To align some of the collateral incentives as well, in the way this industry is structured today, at least the weight is over here. As the fintechs and as sort of, the asset management industry and the wealth management industry, particularly, not the asset management, right? The wealth management industry becomes far more broad-based in its recognition of all of and expertise in all of the asset classes. That's where then, in my view, would there be a far better fintech layer to be able to provide to them for the RM perspective. I don't know if I was sort of clarifying, and I hope that was sort of adequately clarifying on the various incentive structures as the product.
Sure. We'll get to know about that. Dhaval?
Yeah, I mean, I would agree that, with what Swastik was saying in a bit in terms of, relationship management, with fintech, I think obviously fintech can play the role of more of an enabler to a relationship manager, right? I mean, in terms of understanding their needs and sort of, building out, today, for instance, if you're constructing a financial plan, right? A lot of people just simply use very straight line estimates, right? People say that, all right, equities can grow by so much over the next 5-10 years, and et cetera, which you need to build, goal-based kind of a plan for a client, right? But the fact of the matter is that there could be multiple scenarios that could build out, right? I mean, based on, the client withdrawing money at different points of time, based on how different market scenarios play out. So how would you really be able to build out all those scenarios for a client and present it to them in a very simple manner, right? So I think that's where, fintech in terms of, tools and understanding client needs can come in. I think the other way is in terms of, the asset management industry in India probably hasn't really, to my mind, although they like to position themselves that way, but they still aren't providing solutions. So in a way, if you want to invest in a single fund up to your retirement or up to your entire life cycle, would you be able to do that, right? The asset manager will tell you, all right, currently you put money in equity, you gradually move it to debt. But can't the asset manager create a product called as a target date fund or a life cycle fund, which can serve you for your entire cycle? Now, I think that's where probably, fintechs, based on, the data that they can collect about investors, what their goals, what their needs are, can help, try and build some of this innovation into the asset management industry. I know that's a different tune to what you were asking, but I think that's one area in which...
that's one aspect of it. Sanjeev, I'll ask you this question in a different way, since you mentioned one case study. We did a mutual fund campaign with one of the mutual fund companies who associated with us, and we called it Problem Kya Hai? Okay, so like you mentioned, like if this is a dream, suppose you have a problem, या फिर ड्रीम क्या है जो हम लोग अक्सर बेचते हैं कि मतलब आपको 10 साल बाद अपनी बेटी की शादी करनी है, or maybe after some time you want to send your kids abroad, or you want to settle down, you want to retire early. Everybody has some problems or a dream, the way you put it. Can a fintech, based on the collection of data, can offer such solutions, or they would be playing with the data and even offer more aggressive sales pitch when it comes to wealth management? I hope I'm making my question clear.
Yeah, I think it's a mix of both. I think the first thing we need to look at what kind of an audience we are dealing with here. So if you look at the entire, kind of the people who are investing in MF or in India as such, you have roughly around 330 million born after 1980, and roughly 400 or upwards of 400 million have born after 2000. So the people who are born after 19 and who are like a digital native, they behave totally different than we are, and especially I am talking about myself. So for them, their relationship is, in a sense, with money and with the, with the financial advisor is totally different. So, in a sense, there's a lot of research which has happened in US. In a sense, they prefer, if given an option today to them to go for a bank like a JP Morgan or a Goldman Sachs versus a bank from, let's say, Facebook or Google, they'll go for, Facebook, Google, or Amazon, right? So they are totally different. So that's point number one. Point number two is obviously it's
remember, Sanjeev, we are talking about data. So mention with So when you mention Facebook, Amazon, Google, you've got to be a little careful.
Yeah. So data privacy, reg tech, they're all becoming more and more, they're coming up in the upfront. And with now we are going up with the account aggregator, which can go live, so which will make the life of all the fintechs and all the users also becoming much easier. So AI customized portfolio risk profile will take time, but it's evolved. If you ask me today, no, at the moment, no, but over a period of time, they will, every your player will evolve. They become more and more centric to the user, and they can offer solution based on the user persona.
Based on the user persona. Yash, do you agree with that? Based on the kind of services you offer?
Yeah, so I just want to talk about a broader aspect of customer relation management as well, which is establishing trust between the customer and the corporation, so to say.
Okay.
If I were to give an example, say real estate investment trusts, which I mean, there's been a few recently listed which have been successful. The reason why the adaptability and the acceptability came within the retail investor market was because SEBI came out with regulations, and SEBI came out with a very proactive approach where they listened to the market feedback. They evolved those regulations in a way to establish that trust today. So similarly, I believe that fintech players need to pioneer and need to work with regulators to establish that ecosystem, so that, as you said, a lot of these customers are this is the first time they're getting onboarded onto into the financial system. So it's important that we take care of that aspect, whether that is with the adoption of blockchain technology. I mean, there's people more qualified than me to speak about that. But I believe establishing trust is a key aspect.
Sure, Prabhakar.
See, I would see this in two ways. So first way is from the customer angle, what you pay is what you get. Okay, simple as that. So I mean, in 2019 we went to discount brokerage model. Before that we were a full service brokerage firm, right? So we will not just give a great platform, but we'll also do a lot of research. We will do advisory and we'll do customer service. Now, when we moved to discount brokerage as a discount brokerage firm, we said that we will give a equity. We'll become a sizable retail equity player. So there will be uniformity to our product. I mean, we are not going after HNI or ultra HNIs. We will give the same sort of product, and this is how we're gonna be managing it, right? The first question the fintech or any company should ask is that what are you giving the customer what you are able to pay for? Like, I mean, because if we can cut down our cost, we can pass on the benefit to the customer. And that's why we are giving a 0 and 20 kind of pricing we could do. The second thing which I want to understand from the customer angle, sorry, not from the company angle, which is about, is it a relationship manager or you're talking about customer service or advisory? If it's about customer service, I mean, more and more it has to become digital. So take, for example, today we use a lot of chatbot, on our web interface, on our app interface. We have something to Angel Assist. So on customer service, you cannot dilute it at all. You have to provide it. The second is aspect of relationship manager is advisory. And this is where, a lot of fintech companies are coming out with innovation. We are also doing it. So this is where I would expect everyone to answer a question, what is the relationship manager for, the customer angle and from the, company angle.
Okay. Since we're running short of time, one last quick question for all of you. And I request all of you to answer in yes or no. That's it. No explanations. Uske aage kuch bolna nahi hai. And we'll start with Yash. Yash, do you believe that fintech firms today can handle investor bias? Yes or no?
Yes.
Okay. Swastik? You're on mute, Swastik.
I should be saying yes, but I must say no, unfortunately, right now.
No, we have to be human first. Sanjeev.
Same like Swastik. I would like to say yes, but not at the moment. The stage which we are in right now, no.
I really appreciate the honesty. That's what we are expecting from India's young entrepreneurial ecosystem if they want to solve real problems. Dhaval, yes or no?
No.
No. Prabhakar?
No.
No. So 4 out of 5 panelists today term that fintech is not able to handle investor bias. So long way to go, but definitely with young entrepreneurs who have the ability to take on difficult questions like Swastik and Sanjeev themselves, and of course the other panelists. Thank you so much for joining us. We look forward to a bright future with fintech and asset management companies. Sanjeev, Swastik, Yash, Prabhakar, Dhaval, thank you so much. Thank you so much for your time.
Thank you for having me.
Thank you, panelists, for joining us and giving us your valuable time. Thank you so much.
Thank you.
So, well, ladies and gentlemen, right on dot at the clock, 5:10 p.m. IST, we're going to be transitioning into our next panel discussion. Well, we hope you're having a great time and learning. Well, right now on the day 2 of PW Festival of Fintech 2021. Once again, a big thank you to all our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. Well, ladies and gentlemen, now for our 9th panel discussion, which is scheduled from 5:10 p.m., is on neobanking infrastructure changing the banking user experience. So for the next 40 minutes, let's delve into this topic as we've got our panelists. First up, Mr. Avinash, who indeed MD and CEO Zaggle, who's joining us, Mr. Ashish Tiwari, Head Engineering Neo, who's joining us, and also this incredible panel discussion is going to be moderated by none other than, ladies and gentlemen, Ms. Noor Varsia, Group Editorial Director, BW Businessworld and Digital Market Asia at BW Businessworld. Well, ladies and gentlemen, with this, I leave the floor open to Ms. Varsia for taking it forward with her incredible panel. Over to you, Noor.
Thank you, Bhavna. Thank you, and all the best. See you soon. I should also welcome both of our panelists. Ashish ji, you are on mute, but if it's all right, I will address you both with your first name, Ashish and Avinash.
Yes,
I have to thank our audiences right now. Saturday evening, if you're still in front of your system and if you're still listening to what's going on, then clearly you're quite the passionate follower of fintech and what's happening in that domain right now. Myself, I am a follower, but I do not understand it much. I'm really new. So I'm going to be dependent on both of these gentlemen to take us through all that's happening. And we have an interesting topic, which is about neobanking infrastructure and how it impacts user experience. We did do a little bit of a discussion virtually on how this should pan out. Now, hopefully we will be able to pull this off well. We have 40 minutes to do this. Now, I'm taking advantage of the fact that between these gentlemen, they have more than 3 decades of combined experience on what they have been doing. And both of their companies are quite out there in exactly this domain. In fact, both of them they attempt to put consumer first while they're looking at digital banking solutions. And not just globally, not just aiming to be global, but working with Indians or towards Indians who are global travelers already. From that perspective, what I'm hoping we can do right now, with permission from both of you, is just let's understand neobanking a little bit. Now, the definition for laymen like me is that it has absolutely no physical presence and it is digital only. So it's not digital and mobile first, it's digital and mobile only. Is this definition right? If both of you agree, it's cool. If one of you disagree, you have to correct me.
Oh, that is correct.
All right, perfect. So now this is just, it's like a very fine kind of a base that is there. Let's just delve into this a little bit. What kind of a market gap really was it? Let's give 5 minutes to setting our tone over here. What kind of a market gap really was it that led to the rise of a digital and mobile only format? And who really become the first quintessential customers or consumers of this? Avinash, why don't we start with you? And then I'm going to go to you.
Yeah, so thank you for this opportunity, Noor. It's a pleasure. So basically, if you look at how, I'll just take an example which all of you would be familiar with, right? So think of UPI. UPI is a beautiful interface, wonderfully created by NPCI. And yet a lot of us are using a Phone Pay, a Google Pay, an Amazon Pay, right? The reason for that is the user experience, the interface, right? You want an interface where if you have 3 bank accounts, 4 bank accounts, all their UPI IDs can be linked to it. You want a simpler interface, more easy, more intuitive. Today, I'm just going to extrapolate this example, right? If you look at what happens with banking, while banks have done a phenomenal job over the years to digitize and try to make it easier for users, still there's a difference in the experience that you may have with a new age tech company and the UX and UI versus a traditional bank, right? And take any bank that you would have banked with in India or even the global banks. And that's why this is a global phenomenon. Banks have recognized that their core competence is to manage risk, to be risk averse, to build trust with the consumer, and not necessarily to create the most phenomenal cutting edge user experience, right? So a lot of neobanks, what they are looking to do is to step in and fill this void, right? As millennials are coming in, as younger audience are coming in, and in fact, even older people like me are demanding a more enriched experience, right?
That's when you see that there's an opportunity and there's a gap, and if you can step in and fill that gap and create that experience for users are likely to sort of coalesce towards neobanking platforms. That's the nutshell explanation that I can give.
Super. Ashiji, I actually want you to add on top of this. What I also do want to understand is that how would this customer be, at a base level, different from a regular bank's customer? As in, are there any quintessential traits that will not make a regular bank's customer a neobanker?
Yeah, sure. And thanks, Lou, for the opportunity. So I will try to answer your question. But before that, this is a very good question to start with. Why neobank, right? So what was the gap? So let's see it from two perspectives. One is from the bank perspective, right? And then the customer. So bank, the area which bank also realized over a period of time. One, that they were not able to expand the range of their offerings. So that was the limitation which banks were having. Right? They have savings account, they have loans, insurance, and so on and so forth. But once the customer is coming to their, to the bank, at that point of time, maximum they can offer them, only one offering. So that was one of the gaps, right? So they don't have the platform to do cross-selling. They don't have the platform to do, some promotions and so on and so forth. The other challenge which bank was facing was that they were unable to unlock the unserved markets. For example, if there is a small bank in Kolkata, it is very difficult for that bank to get a customer from Chennai. So these were untapped markets which they want to definitely tap and get some ROI out of it. And the third, which I believe definitely was one of the reasons and the gaps, was the banks were not able to figure out the new revenue streams for a period of time. So they need to get the new revenue streams, and probably by two things. One, they have to reduce the cost, and for which the digitalization was the reason, right? And then get more customers. So that was from the bank perspective. Coming to your question, in terms of the customer's point of view, definitely Avinash covered a lot of it in terms of the customer experience, the CX. I think that the overall culture is changing now. In a WhatsApp also, when you see, when you send a message, you are very very excited to see whether that person has read that that comment or not, right? So that is the level which millennials are today. They want to see instant reaction. So there was a report which said that if there is the millennials, if there is a website which takes more than 3 seconds to load, they leave that website. So that is the trend, right? So the customer base is quite different now. So if you have to handle that customer base, which needs speed, agility, customer experience, so these are the main focus areas. And frankly speaking, we have seen that many of these customers are ready to pay something more to get that. So to answer the question, the customer segment is a little bit different now, which is not with the traditional banking approach, and that is where the new banks comes into picture, and that was the gap which now new banks are trying to fill.
All right, perfect. So, just to kind of take out some highlights from that so that we can build the next level of our discussion, as Avinash, in fact, pointed out right in the beginning, somewhere about the interface and experience, which is why there is a gravitation towards platforms which have come now. And, he quoted an example of UPI versus Google Pay, etc., on how the movement is happening. And he talked about the audience is now millennials, which I do think you fall into, by the way. And and of course, Ashiji built on that, and he explained. So one of the things that Ashiji has said, which I do want to keep with us while we move forward, is the limit that regular or traditional forms of banking had, and somewhere neobanking kind of built on top of that. The reason why I want to keep it is because I do want to discuss the limits that neobanking could face over a period of time. And both of you come from very, very established companies in your earlier avatars. Of course, Avinash has been there in Zaggle for now almost what, Avinash? Zaggle was established in 2011, and you have been there since 2012. Yes, so you've been there since 2012. So you've been there, like Neo is relatively younger, but Mr. Tiwari has had experience in Oracle and Make My Trip. So I would have loved to ask you that from Citibank, when you moved to Zaggle, did you have to explain people this is what I'm doing and all of that in that time, a decade ago? But the limits that we will overall come back to, the limits that neobanking can also face. Right now, we will go back to our topic, which is creating a neobanking infrastructure from a user experience standpoint. Now, here I just want to move on. While free from the legacy infrastructure, neobanking does depend on partnerships with bank itself. Now, can this prove hindrance in user experiences? Avinash, you want to take it first?
Yeah, sure. So it's a trade-off, right? There's a lot of benefits that you get being linked to the traditional banks. You get the trust, you get the risk management, you get the ability to be able to, link very easily to larger systems, right? And the trade-off is that to some extent, you need to traditional banks, for a variety of reasons, tend to be slower, right? So the pace at which you may be able to roll out a solution is slower. There will be some restrictions that the bank would put in terms of terms and conditions, in terms of language, the kind of language that you will have to communicate with for your customer, especially with your TNCs. But I think it's worth it because neobanking is very, as the word says, new, right? And an Indian customer especially is more conservative by and large, especially when it comes to their money, right? And because of that, and the last panel was discussing this, and somebody said that, if in the US, if millennials get a bank account from a Facebook or an Amazon, they'd rather open an account with them rather than a Citi or a JP Morgan. I'm not too sure if that's the case in India. In India, you would see a split. You would see some people wanting to do that, but others would say, I'd rather, keep my money in a traditional bank, which is under RBI, right? Because RBI is the final custodian, and we've seen that in recent past as well. RBI stepped in and saved the day for many retail investors and others. The other point, Noor, here is it's a little bit moot because that's the framework or that's the vision that RBI has envisaged, right? RBI has said that neobanking in India today has to be as a partnership with the traditional licensed banks. So it is the boundary condition, the rules of the game that have been set in India. Now, would these rules change in the future? Possibly, right? And neobanks which mature and do a good job, will they get a license as a bank? I'm hopeful, right? But as of today, the boundary condition has been set by the umpires and the match referee, which is RBI, and it said you have to partner with the banks. So that it is what it is.
Yeah, I think you're trying to make it like safe, secure. It also gave everybody a chance to trust you a bit more and grow, isn't it?
Absolutely.
Yeah, I think you wanted to add something.
Yeah. I think that definitely what Avinash said. The best part, in India at least, people are trusting the banks, and I think this culture is changing. It may take some time. It is like a marathon. It is not a sprint. That's what I believe, and it may take some time to change the culture. While what we are seeing, a lot of things have changed with the Aadhaari KYC. The onboarding can be done in 2 minutes. The video KYC, now the customers are coming up, the banks are coming with the video KYC as well. So things are drastically changing. The UPI stack itself, if you look, has helped in disrupting the the way the traditional banking was done. So things are changing. Yes, there are dependencies as of today. Also, the main dependencies which we see with the legacy infrastructure in banks is that they have different systems. One is core banking system, then card management system. Insurance system is different. So when you integrate as well as neobanks, you definitely face those challenges. So definitely we face challenges with the legacy infrastructure, but then there is an advantage as well. The customers trust the banks first. So I think we have to build on top of that.
All right, brilliant. We are going to keep building on some of the problems that neobanking can face, and I want to bring it back to cybersecurity, cyber safety. In 2020, everybody went ballistic, right? I mean, internally, our journalists had a challenge. If we can write a sentence which does not use faster digital adoption, or saying that accelerated of digital adoption of 10 decades, of a decade in 10 days and 10 months and all of that, everybody was writing that. Now, from that perspective, also cybersecurity, while everybody was trying to up their game and the solutions, became a genuine concern. In fact, we know people who have personally faced problems. So it's that close to home. It is as simple as downloading a bad app. Now, when it's neobanking and it's 100% digital and mobile, as we discussed right in the beginning, why is it still seen as a safe option, or what is happening right now, barring the traditional partnerships that we just spoke of? What are some of the other things happening right now that really positions it as a safe and a robust option? anyone can take?
So let me step in and then Ashish step in. See, the biggest thing, again, as you rightly said, and that is why the framework has been designed the way it has been, right? The neobank sits on top of your traditional bank. So all the security and all the checks and balances that are required to make the experience as secure as can be, which has been directed by the RBI, and the banks then try to cover it with additional security. All those are already in place in India when you work with a neobank, when you take a service or you take a product from a neobank, right? So then obviously the neobanks like Neo, like Zaggle, we come in and we build in our own AI, we build in our own interfaces, we build in our own technology layers, data layers, use a lot of analytics to try and create additional security. So that is why, by and large, these solutions are probably at least as secure as a traditional bank solution, if not more. And I would argue in most cases it's more, because there's an additional layer which obviously has its own security that's been built. Right?
I got it. Actually, do you want to add to that, or can I just make a point to Avinash's point over here and rephrase my question for you? This whole point of an additional layer, and this got mentioned earlier in the day as well, that there has to be a little bit of advanced layer of protection that should come in when we're talking about fraud prevention or security. However, it has to balance itself with user experience, because after a while it also gets really annoying for the user. Even if I know that this is in my best interest, when I'm really trying to do something in a hurry and we're all always short on time, it becomes annoying, right? How are we balancing, or how do you look as the entire, and like I want you to take a wider view, how do you look at balancing the two, that you do have this additional security which makes it a safer option, but it is not annoying?
Right. So let me answer that. Most of these neobanks have arrow of security options, which customers are not aware of. And, it is not impacting the customer experience. So I will give you some examples. For example, when you download any app, at that point of time, there is a device binding which is done, which customer is not aware of, So now, which this also means is that whenever you try to open this app in any other mobile, or if there is a hacker who's trying to open it, there will be OTP which will be sent on the customer's mobile number. So now no one is aware that it is happening, but at the back end that is happening. That is one. The other is that there are all the requests which are going from your app till the bank, they're all encrypted. So even if there is a person who is able to, transcript your thing, or they are able to, get the data, they will not be able to do anything, because everything is end-to-end encrypted. And many of these encryption algorithms are, in place from long time from the banks, because they have been using that in their CBS or core bank systems. That is one. The other is that, actually, to answer your question, a right balance between, the customer experience and the security part. So if you use Google Pay as of today, you feel secure because it is asking your biometric every time. So actually, it also builds a trust when you are asking few questions for doing. So for example, in any application, when you do fund transfer, or you do you are trying to lock your card, unlock your card, and so on and so forth, there is a OTP which is sent. So at that point of time, it may look that it is annoying, but at the same time, many customers feel that it is more secure. But because then they establish the connection with the the company like Neo or Zaggle, that they are asking, there is a two-factor authentication which is required. So most of these companies are now bringing up two-factor authentication for relevant things, not for everything. For example, if you want to see your transactions, please go ahead and see it after you enter the app password and so on and so forth. But in critical functionalities, that is where the 2FA is there. And as Avinash said, I believe that is much more secure, because you can go within, if your card is logged, you have to call any traditional bank. In this, you can just go and say lock card. It is like within seconds you will be able to lock your card. You don't have to go anywhere. You can unlock your card. You can set your international transaction limits. So from security point of view, I believe it is much more better. From user experience, it is much more better. At times, definitely we ask OTPs and other things wherever it is, critical functions are done. But I believe that as a customer, if I see myself as a customer as well, I would, like to do that, to give an OTP for a fund transfer rather than doing it without any OTP.
Yeah, fair enough. That is true. I mean, at least as older as you get, you really do. Yes, please, Avinash, you had a...
Just to add to what Ashish was saying, right? One of the things that we also do is we give the control to the user in some cases as to how much security would they like, because each one of us is unique, right? So you may prefer more security, I may be willing to take a little more risk. So the user then is able to say that, do you want a limit of say 5,000 before there's an OTP, at 20,000, whatever is that limit. And this could be, for various things, not just amounts. I'm just giving you an example of amount. And also, as Ashish said, one of the things which really differentiates neobanks is the fact that if you make a mistake or if something bad happens to you, the ability for you, because you as a user has the control, right? So she as a user can just go ahead and block the card, cancel the transaction. A lot of things that can be done on a digital platform, which is instant, cannot be done through a traditional banking interface, because there's a human element there. Somebody has to take an approval, somebody has to pick up the phone. Whereas here, it's all in the user's hands.
Empowers the customer in a way.
Perfect, gentlemen. We have been speaking about user more at an individual level right now, but of course, at least from our audience perspective, they will benefit if we are able to broad base this to how neobanking is useful also to SMEs and startups in India right now. I do want to, take advantage of both of your knowledge about the very sector itself and what it brings to the table, and divide this a bit. Just from what you're seeing, what you're seeing across everybody doing, from a growth perspective for people who are now delving in the neobanking space, where is more potential in the time to come? Will your growth come from engaging individual customers? Will it come from corporate? Which sector is likely to, or which of the two components is likely to bring more growth in the time to come? And then I'm going to bring this down to how the focus is happening. So Avinash, you want to take the first part, and I'll give the second part of him.
Sure.
So you can take it on, where is more growth? I mean, are both getting equal attention, or is there like individuals will play a bigger part in the first level of growth coming in versus corporates like SMEs and startups?
See, I have a biased view because our neobanking platform is completely focused on SMEs. Okay, we are building a SME and startup focused new banking platform. We believe the opportunity there is much larger. We also believe that the decisioning of the customer is more driven by rational reasoning and less by the heart. And let me explain what I mean. A consumer, even as a consumer, make a lot of consumer decisions basis my brand affinity, right? And how close I am to the brand and how good I feel about the brand, versus a promoter or a founder of a startup or a promoter of an SME is likely to decide more basis using the head than the heart, right? A rational mind. And as a entrant in this space, which is not a Facebook or an Amazon or a Google, we have a far better opportunity to attack the SME market rather than look at the consumer market, is how we look at it. And additionally, I think the SME market has a much larger scope and scale than the individual one. But again, as I said, it's a biased view.
No, fair enough. I think Ashish, you'll have the other point of view, is it?
Yeah. I believe that it all depends. Like fintechs are nothing but startups with unique ideas. If you see. Like there are two things. One, if you see the demand definitely is there in each and every segment, whether it is SME, whether it is individuals. Definitely individuals are more, and if you talk about millennials, their requirements are different. I believe that it all depends on what idea you are working on, and what is the target segment. What is the target segment? If your target segment is a mass customers, then your product has to be completely different. If you're talking about affluent customers, your product has to be different. If you're SME, then your product has to be different. The ask is in all the segments, if that is your question. The ask is there everywhere. It is thus that which startup is trying to tap, which customer segment. For example, the person who is traveling abroad, is affluent, he might be, more interested in seeing that, what about his FX charges, where he is spending more, and so on and so forth. Whereas as compared to a salaried employee, he might want to see that where his expense is going on. And in which pocket. So I think it all depends on which customer segment you are targeting. That's what I believe.
Fair enough. Basically, the system, the offer, the service is so decent that the potential or the room of growth continues to be high in both areas, is what I understand from what you're saying. Fair enough, I get that. So from our audience perspective, I guess one of the takeaways would be that if they're looking to delve in this sector, they should probably just focus on what their own offer would be, rather than looking at what like a sunshine sector could in this specific area look like. I'm going to just, bring this back to ecosystem. There has to be expectations, or there has to be things that has to happen. And Avinash actually kind of went on it, or, he kind of mentioned it right in the beginning when he said that there is a certain level of a framework that has come in play which allows neobanking in India to work in a particular way. Now, gentlemen, just show of hands, do you think the current way of the way Indian regulation is structured, is it limiting for neobanking from any point of view? Just a show of hands. If you think it's limiting, just raise your hand. Okay, he thinks it's limiting. I mean, no point at RBI, you don't think it's limiting. We'll go with Ashish. Why did you say it's limiting? As in, what should change?
See, in terms of neobanking, what I believe, unlike the United States or Britain, neobanks in India are not allowed to hold customer deposits. Now, in a way, we address that. It may be good, but what happens is that in that case, the neobanks, their revenue streams are very, very limited. They are definitely monetizing mostly on the bank partnerships, wherein the neobank revenue may be like as a stream of opening a current account, or by customer accounts, or any value-added services which the neobanks are giving. I believe once we have this digital license in India, I think that is going to be a game changer within India, and that is where there is much more revenue streams for the part, and there is no revenue sharing with the partner banks. That's what I believe.
All right, fair enough. Avinash, you want to add to that by any chance?
Yes. So it's not that I disagree with Ashish. I agree that a license really helps, but I think the neobanks also, like us, need to step up a little bit more and show a little bit more traction and scale, which would sort of give more confidence to an RBI that, look, these people know what they're doing, and they can be given a license, because that is, I think, this is my sense and what we have spoken across in the ecosystem, that RBI is not averse to giving neobanks a license down the line. It's a part of their roadmap. They're probably going to give it in 3 years, 5 years, who knows, right? But it's not something that RBI is sort of banned or rejected. But it's just that they feel that it's a little too early in the game, and they want the neobanks to step up and show more, innovation, show more traction, get more people to start to coalesce towards a neobanking or a set of neobanking platforms, and then they would feel more comfortable to give the license. So if you look at how Kotak got its license, right? Kotak Mahindra was an NBFC for the longest time, got tremendous traction, and then the RBI felt in, I think, 2002, 2004, felt comfortable to give a license to them. Same with Bandhan. So that's been historically how RBI has operated. And I think that's the mindset that they're looking at it from.
But Avinash, does it not sometimes, for argument's sake right now, both Kotak and Bandhan were playing in a very traditional framework already. Now, neobanking is coming, which a framework which is supposed to disrupt the traditional framework. Right now, you're meant to be complementary simply because you can't get a license of your own, and hence you need to partner. So right now you're meant to be complementary, but the moment that goes away, it almost becomes competition, right? It almost becomes like from that sector, there's a change in that sector which will start breaking framework itself. So do you not feel that it's not an exact comparable, or it's not something that really can be seen as a historic precedent to fuel your optimism towards this?
It is and it is not, because I do see a lot of convergence that's going to happen just as it's happening in the West, right? If you look at it, a lot of the, I think Bank of America has made an investment in a new bank. You have Santander who's done something, BBVA. A lot of, I think Citi is trying to do something. JP Morgan is doing something. Even Goldman has its own sort of a neobanking interface, right? The most traditional of, iBanks. So you're going to see a convergence. You're going to see a lot of traditional banks sort of acquire neobanks or partner with neobanks in a very deep way. And you're not going to see a situation where the traditional banks are going to be left behind too much, because end of the day they know that this is where the game is, right? And within that you'll see new models emerge where you'll see partnerships kicking in, you'll see acquisitions happen.
All right, we are on the last 15 minutes, and I do want to hold some time towards the end for every moderator's favorite question on your advice and your trends. So I will ask you, gentlemen, that too. But before we get to that part, I just want to speak a little bit on neobanking per se before we marry it back to user experience. And I want to bring India, I want to keep India into the conversation. Now, we've already discussed some aspects of it on where we are in terms of regulations. And both of you, I think, pretty much have voiced on how the industry either is already on board on what's happening right now and how it will change and how it should change so that the change happens and you can actually unleash the potential that neobanking holds. But is from a present day perspective, what are the characteristics in India that make this a sustained form of growth over a period of time? What are some of our dynamics that make this as an area to watch out for in the long run presence? Either of you can take this. Actually, both of you take it. So whoever wants to go first, go for it.
Yeah, see, I would like to go ahead if that is fine, Avinash. Things are changing in India. Not too long ago, if you see, India's biggest problem was that it had a large unbanked population, right? Yeah. With all this Jan Dhan account and everything, things have changed. The scale is now tilting. And the good part is that it is tilting towards the underbanked population. What is underbanked population? People who have bank accounts, but they do not have access to the full range of financial services. Now, this is the untapped market which neobanks are going to tap. And hence, I believe that this is going to sustain. This is where the neobanks have the upper hand. There are accounts as of today, the unbanked, underbanked people are there. So a digitally empowered customer's journey is going to be something completely different than what we see today, because it extends to not only having a savings account, he will buy insurance, he will buy, various investment tools, they will try to build on their savings. So on, so forth. So I believe that this is going to be, a sustained growth now. It is not going to stop because now there are many people in India who have bank accounts and it is just that they have to unleash the potential behind.
All right, perfect.
Okay, just to add to that, right? So I agree with Ashish. Similarly, on the SME side, you'll see if you look at a typical SME trying to get a loan from a bank today, it's a Herculean task. There's a lot of friction. There's a lot of paperwork. The experience is not great. And, that's where the opportunity lies for a neobank. Can you make it simple, quick, respectful? And how do you make sure that it's completely digitized? Because one of the problems that the banks have to service a certain segment is the cost to serve that they have and the cost to acquire, right? Their models are not digital, and that's where the opportunity is. And if banks, frankly speaking, had a completely digital model and they had been, on top of the game, banking, if you look at it for a variety of reasons, has the most number of legacy systems in any industry in the world, right? The number of mainframes that you'd see in banking industry and the number of, old systems, as Ashish was talking, a typical bank would probably have over 100 systems which are talking to each other through some complex, interfaces, which is a complete mess. So that is where the opportunity lies for a neobank. And I would also add that, for example, access to credit, right? Now, banks being risk averse are not willing to take that risk and underwrite these customers and go ahead and lend. So what we have done is, for example, we have launched our own card called the Founders Card, which is in partnership with Visa, which is South Asia's first business and finite Visa credit card, and IndusInd Bank. But basically, the whole experience is going to be driven by us, and the bank is the underlying issue, right? So we are creating products and solutions which address a very clear pain point, which is the founders or the founders of startups, the promoters of SMEs. They need access to credit. They need something which is state of the art, not something which is like, also ran. And we are providing a state of the art, South Asia's first, as I said, business and finite Visa credit card.
Got it. I got it. So overall, we have talked about a mix of things that stands out for India, and pretty much it's everything where the traditional banking sector has kind of not been able to do it, whether it was underbanks, whether the quality of service, or how you make it uncomplex or simplify the offer. That is where the potential lies, and hence, as you mentioned a little while ago, the room for growth continues to be high. We have very, very effectively moved towards the part where I'm going to ask you about the challenges. Now, both of you would have made your plans for 2021. I'm sure every plan that you made in 2020 would have gone through a crazy change and new strategies would have come in play. Now, just to layer with whatever expectations you have in 2021, Avinash, I'm going to make you talk again first. I don't know why I'm doing this, but it's just that because you're talking SME a bit more, and I do know from our registered users' point of view, there are a lot of them right now over here. We just give us a sense right now in terms of the big challenges that you foresee in 2021 and some of the steps you took as a company to kind of combat that.
Sure. So I'll speak a little about the ecosystem and what I see from our customers' viewpoint and what I see from our point, what we did, right? One of the things that I see is a lot of SMEs are coming back and they're seeing demand pick up. Are the banks really keeping pace or are banks very worried about NPAs and going a little slow and cautious? I believe it's the latter. They're being a little slow. The SME's need for credit and working capital is really, really high today because they see that they have an opportunity to tap into the suppressed demand, and also the spurt in demand that has started to show some signs, right? And a lot of companies are hoping that those green shoots, you can just leverage them. But is the banking system supporting them enough? I don't think so, because the banking system was, if you remember, in trouble to some extent, even pre-pandemic. So the books of a lot of banks are a little bit, shaky. So that's where the key challenge is. And can you somehow help these SMEs get the access to credit, and so that they can get their business rolling, right? From our perspective, one of the things that we did in 2020 was to really relook at our business model, relook at what we are offering. We completely went digital. So, for example, we used to issue a lot of cards on the prepaid side. Our issuance of cards was 90% physical, 10% digital. Today it's reverse. So 90% is all virtual and and mobile, and 10% is only physical. And we've seen a phenomenal adoption by consumers, by companies, by corporates. And we've seen this pattern emerge across board, even whether we are talking of our expense management platform, the number of SMEs that have signed up to an expense management platform, linked to a GST interface, linked to their accounts receivables. Those are things which they really, really are lapping it up, because they are recognizing that digital is the way forward. And digital is something that they can use to compete with the biggest of the big companies, right? How else would they compete with the large boys, big boys? Their accounts receivables.
Got it. Our speakers are coming in, so we are going to thank God for technology right now, and that we will see the next panel merging right into our panel as we move on. But Ashish, it's your turn now, since you're now talking about people like me.
Yeah. Yeah. See, the challenges which we are going to quickly cover definitely is the customer valuation in terms of the customer experience. And primarily we are going to target three major customer segments in 2021. One is the mass segment. We already have a product which is called as Neo Bharat, and we'd like to expand on that. The other one is the affluent segment. We have a Neo Global product. We'll try to expand on that. And the third one, which we want to definitely target in 2021, is for all the salaried class employees, which will be definitely a Neo banking product. So those are the three customer segments which we are going to target in 2021.
All right, perfect, gentlemen. I think what we had at least discussed, that these are the broad areas we're going to talk about. We have at least brushed through some of them. I am doing the extremely inelegant thing of looking at my list to ensure I didn't miss out anything, especially because you all already know how good I was in my homework. All right. We are on the last 5 minutes, and I am on my last question. So I think I did follow Ashish ji, the breakup that you had done, Ashish ji, in terms of time division. Now, this one is wrap-up question, which is key trends that will see changes within the so-called buzzword, which is neobanking in the fintech sector. So 3 points, 1 or 2 or 3 points, both of you, on the key trends that are coming up. The idea of asking this question is, from our audiences, people who are over here, for them to be able to go back and look at their own business plans. Are they asking their teams the right questions? Are they getting it right? So just the key trends that'll be important in the time to go. Ashiji, you first for this one.
Okay, thank you so much. So key trends, definitely one, blockchain is going to be, trending like anything. And that because, all what happened in 2020 helped to reduce the fraudulent activities, phishing attacks, and secure payment. So I believe blockchain is going to trend. Big data has been trending. It continues to trend because it helps to, figure out the best of the offerings, reduce fraud, automating a lot of stuff. And the third one, which I believe, it may come, which is like fintech as a service. You never know. That's what I believe. This may come up because a lot of the banks are trying to compete with neobanks now, and since there are regulations as well that you have to go digital now. So I don't know how many banks really have that infrastructure to do. So I believe that, we may see something coming up in 2021, which is fintech as a service platform.
Very cool. Avinash?
Yeah, so I agree with most of that, what Ashish said. But I'll add to that. One, I think that you'll see a lot of convergence, a lot of traditional banks getting into neobanking. You'll also see, tech companies, Googles, Amazons, Facebooks, all being interested. They've already forayed into payments, WhatsApp, and you'll start seeing looking at how can I expand that into more, right? You'll also see neobanks themselves look at getting licenses. You may see RBI open some of that, allow part of it at least, right? It may not be deposit taking, but allow lending and stuff like that to start off with. The third, and sort of linked to what Ashish mentioned about blockchain, I completely agree. Blockchain is massive. It's going to be it's actually the present. It's not just the future. It's already happening. But I also think globally you will start to see, and this is more about the global neobanks will start to differentiate because they will tap into the crypto trend. They've already started to. The Bitcoin and crypto trend a lot more than what the traditional banks can do and will do. So they'll tap into that sentiment, that ask, that need, and they're going to really, really benefit from that in a big way because there's a lot of latent demand around cryptos and Bitcoins, rightly or wrongly. I'm not going into the merits of that, but that it is there and neobanks will tap into it faster.
All right. For anybody who missed this entire discussion, the single recap would be neobanks are the coolest and the most brilliant. According to both of these gentlemen, neobanking did rise because of the flaws and the lags and wherever there were gaps in the traditional banking system, and because there was a parallel growth of the consumer that is absolutely looking at these kind of changes and these kind of products, whether it's individual or whether it is SMEs, startups, or even larger corporates, which is why when I asked them if there's anything limiting neobank, clearly nothing, according to them. Ashishji was at least kind enough to say a little bit of regulations, and then both of them very quickly made up saying, but what RBI is doing the right thing and changes will about. So if you're in this space, you're really looking at some golden time ahead. Some good advice did come. Both of them recapped with the trends that you should look at. Blockchain, both of them did mention big data. And I think Ashishji has again successfully added a new buzzword, which will be finance, fintech as a service in the time to come. So if anybody gets fast later, this man should be blamed for it. Yes, more or less, these are my takeaways from it. Avinash was very, very optimistic. So he's talking about conversions. He's talking about how traditional banks are going to get into this whole neobanking, the neobanking space. Neobanks will get their own licenses. The competition will start changing. Both of your partnership will come under play. People like me will be very happy when we write those stories. The crypto trend, and that will also push towards a move towards growth. With that, I must really, really genuinely thank Ashishji and Avinash both for your time, for awesome answers, and for not making me look stupid because I really didn't know what was happening. So thank you, gentlemen.
You were fabulous. Thank you so much.
So much.
Thank you, gentlemen. Thank you, Bhavna. Leaving it to you and we are off.
Thanks, Ashish.
Thank you.
Stay in touch. Bye. Bye.
Avinash, and as you rightly said, Avinash, Noor was absolutely awesome. You know, the way she's summarizing it, and I know that while she was summarizing it, there were continuous smiles from both us, from both our panelists, and that's what it is all about when we are learning. But at the same time, it is going direct to the consumers who want to understand it way better. You know, so the way you all made it was absolutely fantastic. So thank you so much once again.
Thank you, Bhavna. Thanks.
Thank you. So ladies and gentlemen, well, this brings us to the final panel discussion of the day. Well, we're right now at the BW Festival of Fintech 2021. And once again, I'd like to thank our partners, Zaggle, Angel Broking, and Cambridge Center for Alternative Finance. Now, ladies and gentlemen, we're moving on to the final panel discussion, which is scheduled at 5:55 Indian Standard Time, which is on the Fintech Simplifying Retail and Transactions. Well, ladies and gentlemen, for our final panel of the day, we're going to be joined by our panelists. First up, Nityanand Sharma, co-founder and CEO Simple, Mr. Yogi Sadana, CEO Cache, Mr. Devi Prasad Baral, co-founder and CTO Finance Peer, and this entire conversation is going to be moderated by Mr. Ashish Sinha, Senior Associate Editor, BW Businessworld Group. Well, ladies and gentlemen, it is happening all right here, and we're right now on the final panel discussion, which is then going to be followed by the much-awaited BW Fintech Awards at 6:40 p.m. Indian Standard Time. So thank you all for joining us, and as I can see, all our panelists are joining us on the stage. I just request you to kindly put your videos on, and this is the final and the last panel of the day. So thank you once again for being a part of it. Thank you so much, Nitya, for joining us. Thank you, Yogi. Thank you so much on behalf of BW Businessworld.
Yeah, my pleasure. My pleasure, Bhavna. Thank you.
Thank you so much. Thank you so much, Ashish. With this, I'd now like to pass on the live baton to you to take it forward with this incredible panel. Over to you, Ashish.
Thank you, Bhavna. I hope I'm audible, Nitya ji, Yogi ji, Devi ji.
Perfect. Yes.
Yes, you are, Ashish.
And briefly, Nitya ji, you are speaking from Bombay, if I'm not mistaken.
No, I'm in Bangalore.
Oh, you are in Bangalore. And Yogi ji, you would be in Mumbai.
I'm in Bombay, and you can call me Yogi. There's no reason to add the G over there.
We are in the Modi ji's era. G is the buzzword. So glad that you guys have joined, and thank you so much for being part of this FinTech Festival from Businessworld. Let's start from the very basics, and I want to take our panelists a little bit down the memory lane, not too long back, just 3-4 years back, maybe precisely in 2016. I would like your views on the linkage, if any, between the announcement of demonetization and the rise of fintech thereon, and the kind of numbers we are seeing in terms of online spends and digital transaction happening. So would you like to take this up first? Nitya?
I can start. Yeah, sure. So yeah, of course, demonetization was this massive step in 2016. And I think there are two important lessons from it. The first is obviously during demonetization and maybe 3 months following that, we had a big dip in cash in the market, whether it's cash for offline commerce or online commerce. But soon after, cash came back up, right? So even till pre-COVID times, the amount of cash people were using to buy things online and offline kind of stayed the same, even pre-demonetization times. And I think the lesson from that is anything that consumers adopt is about consumer experience, right? I mean, of course, the government or regulators can force anything, and sometimes it does have an impact, but eventually it's all about consumer experience. It's about user experience. It's about consumers, having an option that they want to use as opposed to something being forced into it. So that's kind of like on one part, my view on demonetization. The second is demonetization definitely brought a very important policy perspective of the government to the future, which is government was really focused around the cashless economy, right? And I think demonetization was definitely a big drastic effect, but a lot of things that were happening in the background is kind of like what has led us to where we are today, which is the whole Aadhaar, UPI, everybody having the bank account, Jan Dhan Yojana, the whole 9 yards, which basically means in our country right now, we have the best infrastructure for financial services, right? We are the most banked country in the world. We have the best banking infrastructure, and it is first class. We still need to construct user experiences on top of it for consumers to adopt it, whether it's payments or neobanking and so many other things. But yeah, I mean, I think for me, demonetization was about really government having all the infrastructure that they were building, and not demonetization itself, because it itself did not, I think, move the needle.
Yeah, so my follow-up question in addition to that, before Yogi ji can answer about demonetization and its impact on rise of this fintech world we are seeing, especially the online transaction, the digital transaction, and which is widely now happening across bigger towns and smaller towns, is what was the situation? Had this demonetization not happened, do you foresee, like in hindsight, things would have grown for this sector, and the digital payments would have seen the kind of growth that we have seen as the numbers reflect, Yogi? Yogi ji, this I'm asking.
Sure. Okay, so Ashish, I don't really believe that. I don't really believe that the amount or the effect of demonetization would have been creating a very different view on the fintech which is there at this point in time. Whether demonetization had happened or had not happened, I think the entire world was moving towards a very digitized part of the economy, right? So, and I think what COVID just did to that is it accelerated a bunch of digital payments and user experience on the digital journeys and accelerated by maybe 5 years or 10 years. I think it's a hard thing to say whether it's 5 years or 10 years. But exactly what it has done is that people have moved away from a physical store perspective. People are thinking more about digital, not only in payments, but also on shopping as well, right? So I think those are the big trends which are coming out, that people are trying to see that how you can avoid a physical touch point, how you can avoid a physical contact and complete the process or the journey in a digital format, right? So if you look at the latest numbers which are coming out from UPI, there are some 4 lakh crore plus payments which are happening on a monthly basis, which have been unheard of, right? So the work which the government has done, as Nitya was also explaining, in the digitization of the economy, the JAM thing which has come out, which is the Jan Dhan Yojana, the Aadhaar, the mobile, and the entire experience which the government has tried to set up, this massive infrastructure on which we are sitting on, is probably very unique in the world at this point in time. So I think what demonetization did or not did for the fintechs and the digital economy which we are sitting on at this point of time, I think is hard to say. But at the same time, I think a combination of things which have happened over the last 4 or 5 years, which includes the UPI, the JAM, the formalization of the economy, a combination of GST. So if you put all of these things put together, I think these are the catalyst of the change which is out there. And as I said, COVID did something which the government would have not done, right? So
it would come to COVID. COVID was the favorite question to ask everybody. How things have changed.
I'll not steal the thunder from that question that you want to ask, but my point was that look, what COVID did to digital was what the government would have spent another 5 years. People are thinking about UPI payments. Even if somebody wants to pay a grocery or even a vegetable purchase, people are saying, okay, can I pay you via my Google Pay account or some wallet? So the entire concept of using cash has gone away. So I think it's a combination of all the steps, and not just the demonetization has basically helped the most.
True. Devi ji, your company is like kind of a very specialist in a very specialized space, targeting the school-going children and providing them with the fees for the entire year, etc. What were the reasons for you to get into this? Because if I'm not wrong, your company started in 2017. This is after. So my context behind asking to start this discussion with demonetization was simple, that I have seen over my various interactions with people in this space that a lot of these companies who are now right now successfully doing and taking on the baton of this fintech industry and carrying on it with it, many of them started around that time. It's like 2015, 16, 17. So what were your main reasons for getting into this particular niche segment?
Yeah, sure. So I think getting into the niche segment is probably an answer to that. What are the trends that we might see in the fintech sector going forward, right? Because you may see a lot of fintech companies right now, and you rightly said in last 4-5 years, there are a lot of startups in the fintech areas which has come up, catering to different niche, right? Because banks were basically catering to entire spectrum, and they were not basically trying to do justice to each and every sector and the people who can get affordable finance, right? So for us, if you look at, we actually started as a P2P lending company in 2017. So that was basically the trend that time we started, and then after that RBI has came up with its own regulations, and because of that we the business for the P2P lending segment was limited, because the amount of investment that somebody can do, the amount of borrowing that somebody can do in a platform, P2P platform, was very, very limited. Now it has been, RBI understood, now they have increased it. But when we started the company, we thought that we will probably make the next unicorn in India probably in 2-3 years, because the potential was so high. But RBI actually restricted everything. But while we are doing that, the P2P lending and transaction in our platform, we saw that our investors, who are basically the individual investors, they are not institutional investors in a P2P segment. We saw that there is a very high confidence they have in the education sector. Okay. And then we pivoted the idea, why we still run the P2P, but we pivoted the idea and we saw a market that which nobody was doing, is ideally providing an affordable fee financing solution for K-12 segment. Okay, preschools to 12. There are SDFC Credila, there are banks, there are other companies who do it for higher education. Nobody in India has done it in the school segment, right? And we were India's first company, I'm proud to say that, who actually did that. And then we were selected by Google because in 2018, the theme of Google was companies, they selected startups, the theme was solve for India. So it's a typical problem which you're solving from India, and it's a typical fintech which is targeting to a very niche segment, as you have already said. So it came actually from an idea of a pivot rather than the core company. We still run both the companies. Our P2P company still is a supplier to this education financing vertical. We have other partnerships, like we have ICICI Bank, a lot of NBFCs where we raise funds and basically give the supply to them, supply to this entity. But this is how we started, and right now we are probably the most leading company in this segment right now in India.
Nitya, your company's name is simple, and we are talking about simplifying transactions. Can you run us through the kind of innovations or kind of challenges that you faced, and based on the customer feedback of doing online transaction, what was there in the initial days, how things have progressed as we speak till date? 3 or 4 things which you can give as an example of the problems you faced and the solutions you provided. Nitya, you are on mute.
Yes, sorry about that. So basically, if you think about what is happening in the world of e-commerce, we are focused on e-commerce right now. So if you look at what's going on in the world of e-commerce in India or around the world, you see 2 trends. First is purchases are led on mobile phones. So mobile commerce is e-commerce. So for instance, in India, 90% of all transactions are done on mobile phones. So that's number one. The problem is, out of 100 people who come to a mobile phone to make a purchase, only 1% buy. So which means there is 99% people who fall off the funnel, right? So only 1% conversion. And if you think about why that happens, it's really a bunch of frictions that happen between a consumer wanting to do a transaction online and actually completing it, which is number one, trust. Do I trust e-commerce or this retailer that I'm about to buy from? Some large retailers like Zomato's, Big Basket, and Amazon large companies have over time built trust in e-commerce with consumers. But when you think about smaller, newer merchants like direct-to-customer e-commerce retailers, while their products are good, their intention are good, their customer service is terrific, consumers are still little reluctant in buying from them, and therefore the trust comes into this question. Second is any question around, okay, well, if I buy and if I need to return, will my refunds be in real time, etc., etc. So basically, and then of course at the final point of checkout, where I have to enter a password, transaction can fail. It's a bunch of process, right? Basically, what happens is when you think about a consumer who's buying things online, they are typically young millennials, urban, tier 1, tier 2, tier 3 city consumers, and they have very high expectation of user experience on mobile. But when they are buying online, typically, there are just so many friction points that they encounter that basically leads them to abandon the cart. And that's where Simple comes in. What Simple does is what we say is Simple is a way to buy anything on the internet with one click, and you can just pay later. It's very much like, if you remember the khata that we all run with the local kirana store or the milkman or whatever, we kind of ask the question, can we build a khata for the internet where consumers and merchants can run khata for each other? And Simple can be the platform so that consumers get one bill for everything, and identity, risk, and trust can reside at the network level. And so basically what Simple does is it's a one-click checkout. It's very easy to use Simple. It has a lot of buyer protection features, which allows consumers to feel more trust, etc. And then of course it's pay later, so that if there is ever a budgeting need, consumers can just buy now and then pay later within 15 days. So that's kind of like what Simple is. And it's really about moving the e-commerce from desktop to mobile, and from e-commerce as a logistic utility use case to experiential e-commerce, where consumers really demand high quality consumer experiences, right? So that's kind of like what we are seeing in the market. Consumers asking for one-click checkouts, easy, very high quality trust and buyer protection. And merchants want to provide that, and that's a gap we are filling in the market.
And in terms of innovations, are there any stories, like any specific examples of hurdles faced and solutions provided at the back-end side? I mean, customers see the front end. They just want the user experience to be very simple, nice, easy to use, easy to understand. But at the back end, does something come to your mind which you tackled and provided a solution?
Absolutely. To provide anything simple in the front end, the back end is very complicated typically, right? So I'll give you one example, and this is something that we learned as we were building Simple, right? So when you think about a typical online grocery use case, so let's assume you're buying grocery, whether it could be chicken or tomatoes or whatever, right? And typically when you buy something for, let's say, 1 kg, when they eventually cut the chicken up or they fill up the tomato, it's typically not 1 kg, right? It'll be 950 grams, 900 grams. And let's say your bill is 600 rupees, right? Typically what you will see is when they will measure it, eventually the bill will be 550 rupees or 575 rupees or whatever. And, they've charged you 600 rupees now. Now, 25 rupees or 50 rupees have to be returned back to you, which is a nightmare, right? I mean, so, credit cards, UPI typically takes anywhere from 7 to 10 days to refund, etc. And it's just like it's never a lot of money, but it's a constant pain in your mind, right? It's just like something that bothers you. And then sometimes retailer asks you to put it in the wallet and so on, right? As a consumer, I just want my money back, right? With Simple, because it's a bill, it's really a bill, the merchants, retailers can themselves downward adjust the bill, right? So for instance, if you bought chicken for 600 rupees, and if I'm giving you chicken for 590 rupees, I can downward adjust it bill from 600 to 590, so that you don't even have to pay more than you are supposed to, right? Now, it sounds like a very small thing, but when you are buying things online and really building trust and providing that type of user experience to consumers who are buying things online all the time, this goes a long way, because people don't have to worry about these type of things anymore.
Okay, thanks. Yogi ji, your company is targeting basically millennials, working professionals, and there are several others. If I'm not wrong, your space is getting cluttered. There are more companies and more competition. What how do you compete then with, because everybody is providing the same thing, and I've interviewed a couple of them who are, I don't want to name here. So
Sure.
how do you offer differentiation, and is that a challenge for your potential customers going forward?
Sure. So look, great question, Ashish. The point that we have out here is that there is a very large market, and it's not like a one leader will take in the entire market on. So you need multiple differentiation companies with multiple differentiated products to make sure that you're able to meet various demands of the consumers, right? So given the size of the opportunity which is out there, or the amount of consumers which are out there looking for credit, is way beyond just a single fintech company or a single bank to manage that, right? And thank God there are multiple companies. Otherwise, it's not even an industry to start with, right? So you don't want to be a loner in a space for yourself. So we look at competition like that. That look, at least there is some industry being created because of like-minded people. But at the same time, there is competition which cannot be ignored. So that keeps you on your toes. So what you have to make sure to keep alive or keep yourself floating is to constantly look at products that you're offering to your consumers. Look at year-on-year basis, how do you innovate those products to make sure that with changing demands, changing behavior, changing trends, are you able to come out with those differentiated products on a year-on-year basis? And as the consumer graduates with you, right? So there will be products that you would need to make sure that the new consumers are being attracted to, but at the same time, you can't forget the consumers which are there with you, right? So you have to make sure that you have great products for them, that they look up to you every time when there is a need. So innovation is the key for sustaining not only in fintechs but also in the large market space which is out there. And if you don't innovate, I think the old products and the technology you'll just get killed with that. So I think that's the foundation with which this company has got created. And as a matter of fact, we do take pride that look, after every quarter or every 6 months, we have been able to innovate our product strategy, looking at extending tenors to looking at giving credit on. So we were probably one of the first companies, not only probably in India, but also in the world, to get an integration done with Google Pay. So now you can get your credit done into your UPI backed account. We have some very innovative products where you can do a combination of PL and BNPL put together. So innovation is the key. So if you don't innovate, you're a dinosaur very quickly.
Well said. Deviji, I want you to tell us about this COVID period and any specific interesting incidents which you had observed with parents in your category. How did this period help your business? I'm sure schools were not happening, but fees were being coming in. And any interesting incidents or anecdotes you can remember?
Yeah, the first interesting thing is when people were actually getting worried in the COVID period, we are the only company who were not worried because because money was coming. Actually, we saw a growth in the number of applications, right? Because a lot of people actually lost job during COVID, right?
True.
And that actually increased. And the only thing they cannot compromise is basically their kids' school fees, right?
True.
So we actually saw an increase in loan applications. So COVID has been actually given business to us, but nonetheless, that is main interesting thing. Of course, the second thing that COVID did to us, we used to have like a lot of our business development sales guy traveling across India to close the B2B sales ideally. Because our product is a B2B2C product, right? We reach to parents via school. So we need to have a partnership with the schools first. And we used to spend a lot of money on traveling and expenses and all those stuff. And believe me, since this is a need for the schools, it's a win-win situation that we create for parents, schools, and us. So the schools were ready to now sign the agreements digitally. So what we did, actually, we created a module where everything can be digitally done. Okay. And that's actually saved us our expenses. It's an interesting thing. So we are doing more business, expenses is getting less. So ideally your profit anyway increases a little bit in terms of margin, right? Yeah. Those are the two I would like to name. Yeah.
Sure. Sure. Nitya, how is this pay later concept panning out in the West? Are we at par with them? is that trend has taken, like they have moved ahead and we are catching up? Where do you see the buy now, pay later trend happening vis-a-vis in the global perspective for Indian audience?
Yeah. So if you look at various parts of the world, Europe or some parts of Europe, Northern Europe and Australia, just to give you a sense, 20% of all e-commerce transactions in Germany are done with pay later. Almost 25% of all transactions in Scandinavia, Denmark, Sweden, and so on, e-commerce transactions are done with pay later. I think the number in Australia is about 15 to 20%. In the US, that number is about 1%. In India, it's probably 1.1% right now, 0.2, something like that. I don't know. So it's very different, and obviously, as you can imagine, it's happening around the world. So it's happening in Japan, it's happening in Australia, it's happening, of course, in India, it's happening in other parts of Asia, Latin America, US, and so on. And different markets are at different stages of adoption based on the market structures. This product works really well when there is a lot of fragmented market, a lot of market participants and so on. And therefore, different markets are slightly different. But one thing is very clear. There is a secular shift in how millennial consumers want to buy for things online. Whether they're using pay later for convenience or what we call pay later for effortless budgeting, right? So when you think about Simple's product, it is something that consumers use to buy typically food on Zomato, vegetables on Big Basket, something on Dunzo, book a flight on Make My Trip, etc. And it's really your charge card. Consumers are buying something, putting it in a bill, and then paying it off. For some other markets, people are using it for slightly more affordable purchases. But yeah, I mean, you're seeing a secular increase of buy now, pay later. And I think, as I said, right, consumers want easy, high amount of transparency, no late fees. And one thing that we are obviously seeing is obviously in India, credit card penetration is very, very low. But there are markets like US and Australia and some parts of Europe where credit cards are there or people can get it. Credit is not the problem. The problem is the product that we know as credit card typically ends up being fairly bad financially for the consumer, right? If you revolve on a credit card, you're paying almost 36% annual interest rate. That is nothing close to financial suicide, right? I mean, like no one should ever in their right mind ever do it. But, the whole product has so many layers of, information that people don't realize that, right? And that feels good to do your minimum payment and just revolve. And buy now, pay later is the difference, right? I mean, there is, there are guardrails, right? You have to pay in 15 days or 3 months or whatever it is, right? And consumers know exactly what they're getting into. And it's very clear that consumers, whether in the West or in East or in India, are really, asking for high quality user experiences online. They want trust, they want convenience, and they want to use, affordability features, but they don't want to get into debt traps. They don't want to pay very high interest rate or don't know what they're getting into, right? And I think that's why we are seeing buy now, pay later coming up very quickly in India, but also around the world.
And what would you see the major one or two major differences between a credit card user and a pay later model? Because right now the penetration may be low, but as the country progresses in next 5 years, the number of users of credit card or digital credit cards, they're supposed to go up. How does one operate in that environment?
Yeah, I mean, I think the problem that when you think about the credit card, right, there are a couple of issues in the operating model. The first problem is that the cost of customer acquisition and the cost of underwriting is very, very high, because of which you have to give people large lines of credit to start with. Otherwise, you will, it's just not NPV positive, right? Whereas in buy now, pay later, typically the discovery, the acquisition, everything happens on the checkout pages. And therefore, the cost of customer acquisition is very, very low, right? Just to give you a sense, a typical credit card customer the cost of customer acquisition would be anywhere from 3,000 rupees to 6,000 rupees, roughly. For something like Simple, it's going to be 60 rupees, right? So that's the difference. The second is but you're right? I mean, this penetration will increase, and I don't think, at least in the next 5 years, the question is not buy now, pay later or credit card. It's both. The market is We have 70% cash in e-commerce. Like imagine that, right? And I think we need a lot of innovation on consumer experiences, and that's something we are seeing, especially during COVID, that consumers want to not necessarily use cash on delivery, right? I mean, there's this urban legend that people use black money and all that stuff online purchases. To some extent it's maybe true, but to a large extent, it's not like you're using 200 rupees to buy food or taking Uber ride for 70 rupees and spending your black money, right? It's really when people use cash on delivery online, they feel more trust. They feel more control of the transaction. That is the problem statement. And something like simple pay later provides that sense of control, security, trust when people are buying online. And we expect that should increase, adoption and online transactions. By the way, credit cards do the same, right? Credit card comes with a lot of buyer protection, fraud protection, etc., which typically debit cards do not. Debit cards, UPI, it's really a debit product, right? Money is gone out of your bank account, and then it's your problem, right? So, it's super important in payment products to build buyer protection features where consumers feel safe now, right? And I think that's super important to be able to build, and that's what we are doing. We are a layer of trust between their bank account and online commerce.
Okay. Yogi ji, would you like to comment on the regulatory side of the business? Does your business have any kind of regulatory framework, safeguards built into the business you do, or is it too safe? Because all these new age fintech company lending to millennials are already starting out with a lot of safety checks right at the background. You know who you are lending, and the lender know from where he wants the money. But overall, what is your take on the overall scenario? Is there enough regulations and safeguards built into it? What are the 2 or 3 things you would see going forward if you had your way? And you
Sure. So look, the regulations on digital lending have been in the news for the last 8 weeks, 12 weeks for the right and the wrong reasons as well, right? So there is a regulation which is out there, which is the RBI, which is looking at all the lending activities in India, right? So that's the regulation which is out there. But look, fintech and the entire digital payment systems have emerged in a way where the regulator is trying to catch up at this point in time. There are some working committees which are being created. There is some guidance which has come out from the RBI. So it's a bit of a catch-up game as far as the regulators are concerned. But is there a regulation which is out there? The answer is yes. Is it completely bulletproof? I think the regulator is trying to do this at this point in time. And there's a working committee which was set up, I think, 3 weeks or 4 weeks before, and they have a total 90 days to come out with their report. So I think as the change in business is happening, the regulator is also kind of changing and trying to come up with something. But the regulators cannot change as much as what the tech does on a day-to-day basis. So it's a bit of an always catch-up game. But that's I think something which we are all adopted to and seems like normal for us.
And how do you explain this constant message which I see in websites of such companies? If you don't have CIBIL score, you can still get money. Is CIBIL being